Everyone, good evening to all of you. आज है 29th of November 2024. Welcome once again to this live analysis. Start करते हैं सेशन ट्रेडिंग सेशन इस वीक का डेटा की अगर बात करें तो कोई डेटा तो शेड्यूल नहीं है आज के दिन. मार्केट यूएस मार्केट ओपन है बट डेटा शेड्यूल नहीं है. सो न्यूयॉर्क सेशन ओपनिंग 6:30 एंड देन पीएम पे यूएस मार्केट की ओपनिंग रहेगी. बाकी और कोई डेटा नहीं है. कोई आएगा तो विल सी दैट. थोड़ा सा नीड टू गिव मी सम टाइम्स फॉर लेवल्स. क्रूड ऑयल में देखोगे कल का ही लेवल है. बाकी नेक्स्ट वीक जो ऑनलाइन मीटिंग होने वाली थी ओपेक और जेएमएमसी और ओपेक प्लस की, वो शायद कैंसिल या रिशेड्यूल हो गई है. ऑयल आज अगेन वही कल वाले रेजिस्टेंस एरिया पे था, वहां से वापस सेलिंग आई. मुझे लगता है अब ये सपोर्ट ब्रेक होना चाहिए. काफ़ी देर से रुका हुआ है सपोर्ट. मल्टीपल टाइम टेस्टेड लेवल है. दिस इज 7 टाइम ये सपोर्ट एरिया पे आ रहा है, तो मेरे अकॉर्डिंग ब्रेक होके नीचे जाना चाहिए. ब्रेक डाउन रीटेस्ट विल फॉल टिल 5677. काफ़ी सपोर्ट ले चुका है. हायर हाई फॉर्म ही नहीं कर रहा है प्राइस. तो ब्रेकडाउन रीटेस्ट करता है 5670 के नीचे तो सेल करना. 5790 से बाई किया हुआ है. यहाँ पर बाई थोड़ा सा रिस्की है, अब ध्यान रखना. काफ़ी ज़्यादा मार्केट ऑलरेडी टाइम्स यहाँ पर सपोर्ट ले चुका है. तो अगर बाई कर रखा है तो फिर दिस इज द लास्ट एसएल 5770. इसके नीचे कैंडल क्लोज हो तो एग्जिट. बाकी गोल्ड और सिल्वर के लेवल एक सेकेंड अभी मैं दिखाता हूँ. जस्ट गिव मी अ मोमेंट.
News when you want it with Bloomberg News Now. I'm Stephen Carroll.
And I'm Caroline Hepker. In France, the National Rally Party is pushing for further changes to the 2025 budget bill after the government conceded on key plans to raise taxes on electricity. Now, the group's president, Jordan Bardella, is calling for more adjustments, including abandoning policies on reducing drug reimbursements, no new or higher taxes, and indexing pensions to inflation. On social media, Bardella gave Michel Barnier a few days to respond to his demands. Fellow National Rally politician Marine Le Pen told the newspaper Le Monde that the Prime Minister has until Monday. Ben Bennett, Asia head of investment strategy at L&G Asset Management, says that investors in French bonds will be monitoring developments.
We know as well that lots of Asian investors have bought France bonds because it's a little bit like Germany with a little bit extra yield, but there's no such thing as a free lunch, is there? And we're starting to see that yield as high as it was back in 2012. I mean, that's the 10-year, 12-year high. So I think that could be another trigger to keep an eye on, and we'll be watching that before the end of the year.
Ben Bennett from L&G Asset Management speaking there. The French government faces the risk of being toppled in the coming weeks as opposition lawmakers threaten to unite in no-confidence votes over its fiscal plans. Well, speaking of France, the inflation data for the country came out. Inflation rose to 1.7% in November, below expectations and also just below the ECB's 2% inflation target. Analysts surveyed by Bloomberg had anticipated the pace to quicken for a second month to 1.8%. The data supports the case for further interest rate cuts, with the European Central Bank expected to deliver a fourth cut next month. Inflation figures from across the Eurozone this week reveal an expected uptick in Spain, whilst price gains in Germany held steady, defying estimates for an acceleration.
Voters in Ireland go to the polls today after a general election campaign dominated by the cost of living. That's despite a buoyant Irish economy, budget surplus and recent giveaway budget. The current Prime Minister Simon Harris is looking to return his Fine Gael party to power along with his coalition partners Fianna Fáil, while the opposition Sinn Féin is seeking to build a majority with other left-wing parties.
Sweden has sent China a formal request for cooperation regarding a commercial Chinese vessel and its potential involvement with cut data cables in the Baltic Sea. Prime Minister Ulf Kristersson told reporters that the Nordic country sent the request after previously expressing a wish to see the ship move towards Swedish waters. He added that the request implies no accusation against China. The bulk carrier Yipeng 3 is currently anchored in international waters close to Sweden and Denmark and was in the vicinity of the two high-speed fibre optic cables when they were cut earlier this month.
The UK members of Parliament will hold a landmark vote on assisted dying today. Lawmakers will decide whether to allow terminally ill people with less than 6 months to live to opt to end their own lives. The legislation was put forward by backbench MP Kim Leadbeater and stipulates that 2 doctors and a High Court judge would also be required to approve any assisted dying decisions. Co-sponsor of the bill, Conservative MP Kit Malthouse, says the debate is about personal freedom.
I mean, since I've been basically a teenager, I've always believed in choice, liberty and personal autonomy, and I can't think of a more profound moment that I would need those 3 things than when I'm facing an agonising death.
Kit Malthouse there speaking on the Bloomberg UK Politics podcast. It's the first vote about the issue in the UK since 2015, and if the bill passes the second reading, it will still face more parliamentary steps before becoming law.
The UK's Transport Secretary has resigned after confirming that she pled guilty to a criminal offence in 2014. Louise Haigh says she mistakenly reported her work phone had gone missing during a mugging while standing as a parliamentary candidate in 2014. She later realised it hadn't been, and following advice, she eventually pleaded guilty in court, despite what she says was a genuine mistake. In her resignation letter, Haigh said that whatever the facts of the matter are, this issue had become a distraction from the work of government.
Australia has passed a law banning children under 16 from social media platforms like Facebook, Instagram and TikTok. Tech companies will be responsible for enforcing the ban and face fines of up to $32 million if they fail to comply. While polling suggests that more than 3/4 of Australian voters back the move, many argue it won't achieve its aim of protecting children from harmful content. Here's Australian Green Party Senator Sarah Hanson-Young.
It doesn't actually make social media safer for young people. And that's the devastating thing about this. Because we know that there are families who are struggling with this. We know there are young people who are struggling with their body image, their connection with their community, their peers. Young people who are finding themselves addicted to these dangerous algorithms. But this bill doesn't do any of that.
Sarah Hanson-Young there speaking in the Australian Parliament. Meta, X and other social media platforms have expressed strong opposition to the law, citing concerns over its practicality and potential unlawfulness.
And Saudi-backed Live Golf is said to be weighing a possible merger with Europe's DP World Tour. If successful, it would cement Live Golf's position in the golfing calendar and give the DP World Tour, which was previously known as the European Tour, significant financial heft. The talks come as expectations for a deal between Saudi's public investment fund and the PGA Tour edge closer after more than a year of talks.
Those are your top stories on the markets. Euro Stoxx 50 futures are down by 0.2%. The MSCI Asia Pacific Index is 0.2 higher this morning, and the dollar is 0.3 weaker on the Bloomberg Dollar Spot Index. That's news when you want it with Bloomberg News Now. I'm Stephen Carroll.
I'm Caroline Hepke, and this.
We're in a really amazing space just within the world where we're getting a chance to see the evolution of technology happening in real time, and everybody gets to be a part of it. You talk about financial freedom and financial ability to run your own life, but we still are in all of these systems that are creating centralized ownership. And I think that the only true path forward is, decentralization and blockchain.
All right, guys, welcome to Financial Freestyle with Ross Mack here on Yahoo Finance. Now, look, whether you're a Wall Street professional, a retail investor, or just beginning to reshape your financial future, there's always the first step. So, guys, join me as I sit down with some of the most influential voices in finance to uncover their journeys towards economic success. And today's no different, man. I'm sitting down with my dog, Chris Lyons, general partner Andreessen Horowitz, and president of Web3 Media. My dog, welcome to the show, baby.
Brother. How you doing? Good to see you. Good to see you.
Bro. You know, we always see each other on some amazing, different cities, this and the third. But I appreciate you coming here to New York, man.
Exactly. No, this is the city where it all goes down, and so
absolutely,
I'm excited to have the conversation.
Yeah, man. General partner Andreessen, all this, and the third. But to the world right now, who is Chris Lyons, man?
For me, I'm just a guy that likes to turn thoughts to things. I love ideas. I love thinking about big picture opportunities, seeing how the world's going to go. And I've always just loved incorporating technology as being one of those vehicles in order to help translate things that are in your mind to actually getting them out there into the world. And so, I'm super fortunate to be now on the venture side. We're exploring really, a lot of different technologies, whether it's blockchain to AI to, figuring out where the next big consumer product is going to be coming. But at the end of the day, I just love vision and seeing how different vehicles can actually kind of create that way.
I love it, man. We're going to get down and talk about all that. But how did you get started? What was your career path to becoming general partner?
Yeah. Well, I mean, look, for me, it was a very long journey. I actually started off unconventionally in the music industry. That was my first passion. And so I was a music producer and engineer. Actually used to work with the songwriter of the decade, Jermaine Dupri. I'm sure you guys all know his music, and he's a great guy, and just really got a chance to witness what it was like being in a first-in-class environment, and also just taking, how to see the world, especially from Atlanta, where I grew up, to then being able to have that type of translate all around the world, right? And so, but I also love technology at the same time, and it was really interesting just seeing, when I was working in the studios, but also seeing kind of the evolution from MP3 players to iPods to iPhones coming out, and then really kind of understanding that, hey, this is going to be the next big momentum and where the next shift is going to go. And so, as a kid, I kind of was able to teach myself how to code a little bit. Back in the day, there was this thing called MySpace and different HTML projects. And so I'm dating myself a little bit. But from there, I was like, okay, well, I'm a music engineer. I'm always on the computer. Engineering's engineering. I went to school for it, so why can't I teach myself to be a computer engineer too? And so ended up teaching myself how to code. Ended up getting accepted to an incubator that flew me across the country from Georgia to Silicon Valley. It was only supposed to be there for 3 months, and 12 years later, still in the game.
So, man, you said something interesting where it was really like you are always identifying what's next, right? You talked about technology, taking ideas in your head and actually, making it realistic, right? But how have you always been able to identify what's next? Because I think that's going to segue into your current career, right?
Yeah, for sure. I think you got to have a pulse on, I think it's two things. I think, and I do attribute a lot of, me growing up in Georgia and hearing, whether it's music or seeing different trends or being at the forefront of kind of where things go. I think I call it like being at the intersection of culture and innovation.
Right.
So being able to understand, from a cultural standpoint, what are the things that people are interested in on a day-to-day basis? It's like walking the streets of New York City or, being on a group chats with your homies and hearing what people are talking about and what's getting them excited. But at the same time, mapping that out with where you think the future of the world can go. How can, blockchain or NFTs or, Web3 technologies really help impact and support some of the things that we're talking about that have with people that don't care anything about the future or are not really thinking about that on a day-to-day basis. And so being able to kind of also market map, like from an idea standpoint, how you can kind of see these things and where the trends are going to go. At our firm, one of the things that we always talk about is this concept of good ideas that look like bad ideas, which is a kind of a contrarian point of view. But at the end of the day, some of the biggest, things that we use on a day-to-day basis, from Uber to Airbnb, even Google when it first came out, these all sounded like terrible ideas when they were coming out, right? But there's a thing that the founders knew that nobody else knew. And they had the ability, what we call like an earned secret. So they actually really took this information and took their entire life's purpose and then decided to build a company that sounded crazy at the time, but it was just so forward thinking. And being able to, really have that mentality of, being a couple steps ahead, but when someone tells you it's a bad idea or tells you something that sounds a little bit outside the way, that's just really putting yourself in position for where the next future of the innovation's happening, but then also tying that with what you can currently do right now. Uber would never have been able to, and Airbnb would have never been able to work without the cell phone. I mean, without the iPhone or the smartphone technology, because now you have GPS in there, you have payments that are already integrated into there. And so, you have to keep up with where things are going right now, but then still envision the big picture at the same time.
So it's a lot of talking today about where the world is going, right? Robots and AI this and AI that. But, what a lot of people don't hear, well, from the outside looking in, right? We haven't heard as much recently about kind of Web3, crypto, blockchain, et cetera. So let's actually talk about that, man, because that's something that I'm fascinated about. I'm definitely a crypto enthusiast. So let's talk about that. What's your vision for it, and why should people actually start paying attention to it?
Yeah. Look, blockchain technologies, it's just it's a computer system that really verifies ownership, that verifies, the fact that, like, from smart contracts to non-fungible tokens to really, it's like a supercomputer. It's like a computer that's built on top of the internet that then now runs in its own ecosystem. And this is where you're seeing these different protocols and different tokens that are starting to get built, such as Ethereum and Bitcoin, which is more so of like a digital gold type of situation. But at the end of the day, people talk about Web 1, Web 2, Web 3, and don't even necessarily know like how to break down Web 3, like, and why do they even call it that? And the easiest way to think about it is that there's been 3 eras of the internet. The first one is just the read era, so that's just like something like an AOL or my colleague Mark Andreessen built the browser, so like Internet Explorer, like where you could actually read things on the internet, right? And then the next component was the write era, so you have read and write. That's what we call like the Web 2. And then you saw companies like Facebook and Pinterest and Airbnb and like so many different businesses in the 2010 era, Twitter, you name it, that all now came from this Web 2 era. But the big difference between what was going on in quote unquote Web 2 versus where we are now with what blockchain technologies can really encourage is this ownership layer. And so people, when they're on Instagram or when they're on YouTube, they might think that they might have 100,000 followers or 1 million followers. And you might have that, but they're not yours. They're actually, you're still having to deal with the middleman. You're still having to deal with the corporation that's taking 30%, or Spotify that we love Spotify, but from an artist standpoint, only 0.5% of all artists make over $50,000 a year or more on those platforms. And that's because of take rates. And those take rates are applied onto so many of these Web 2 businesses that then it's great for the corporations, but it's bad for, the ownership is bad for creators. It's bad for, people that want to make a living and not have to deal with someone else taking a huge cut. Apple takes 30% of all payment of all App Store transactions. YouTube can take up to 30% of all your videos and monetization. And so and the worst part about it is that if you look at the internet over the past 15, 20 years, you've kind of seen this halt of innovation. You've seen, like, if you look at the App Store right now, it's literally the same 15, 20 companies that constantly stay at the top of the charts because we have this infrastructure that is currently just literally stable, defaulted in terms of innovation. But blockchain technologies are going to really open and unlock this wave, which is Web3, which is what we consider ownership. So read, write, and own, which is the third layer. And through that, you're going to now be able to have 0-to-1 engagement with your fans, where if you want to sell something directly to an artist, or if think about Basquiat back in the day, he was sold a painting for $25,000. 100 years later, I mean not 100 years later, 50 years later, that same piece is now sold for $100 million.
Yeah.
Right, and how much was he able to take from that?
He gets none of that.
Exactly.
Except for the original 25K.
So, but if that was on chain, what happens now is that there's a smart contract that's already written inside of it. So, and you can say, I'm going to get 10% of every single secondary transaction that's now being sold. And so that's on the blockchain, and it's inscribed and it's written through code, makes it guaranteed process that all these transactions moving forward, you're now going to get a 10% cut from 25,000 to 250,000. You'll get 10% from 250,000 to 2 million, and constantly going on and on. And so, and without having to deal with a third party structure that then's going to take their cut at the same time. And so when you think about that applying to so many different industries and where it's going to go, it's a really exciting time and our belief is that it's going to not just, right now we're in the infrastructure side where we're really building out the rails that can help really, create the next generation of the internet using these things. But even more so, which I'm personally excited about, is you're going to start to see brand new social networks that are going to come out where you can actually, have 100% ownership of your followers. New music platforms are going to come out where, instead of having to make 1 million streams in order, or 1 million purchases for an artist to have a sustainable living, now all you need is 1,000 true fans that can now every day buy your CD, buy your merch, buy your tickets, follow, and you can create an actual living off of that. And so, decentralization and ownership, I think, is the real future. And it's what we talk about all the time. You talk about financial freedom and financial, ability to run your own life, but we still are in all of these systems that are creating centralized ownership. And I think that the only true path forward is, decentralization and blockchain.
Yeah, look, I believe, that we're going to start seeing this implemented in our everyday life, right? Well, actually, let's take a quick break, right? Let's take a quick break. We're going to get back, right? Don't go anywhere. We're going to talk more about Web3.
Are you going to leave them on the edge? God, you're about to get into the good stuff.
All right, guys, welcome back to Financial Freestyle. Look, this week we're joined with Chris Lyons, general partner at Andreessen Horowitz and president of Web3 Media. And listen, if you don't know nothing, right, just know this is one of the guys that's at the forefront of the new wave of technology, that being Web3, that being blockchain. And so, we were talking about it before the break, but to a person that's on the fence, right, that's, stuck in the Stone Ages, right, that's still trying to go to Blockbuster when Netflix come around, what are you saying to that person?
Yeah, I mean, look, I think it's what I'm telling them is just sit back and relax, because with all types of innovation that's happening, it's up for people that are builders, and then you actually have consumers and people that are going to take advantage of it, right? And I have a theory that I'm basically calling hiding the wires, where the next generation of whether it's blockchain or even AI technologies, you're not even going to really notice or know that you're using them, nor does it matter, right? I think a great example is the GPS technology. The beauty of what we're doing with today is that now, people are building products online, and because of, Twitter or even website podcasts like this, you're able to now get real-time information on how things are going. But back in the day, nobody was getting up-to-date speeds on what was going on with GPS technology, right? And that's a super, super, super complicated infrastructure. But once it was built, now it was able to create brand new platforms. And, like I said, companies like Uber and Airbnb and DoorDash were able to be created from that just from GPS technology.
Yep.
And when you're trying to, get to the restaurant or your friend's house, you're not opening up your Maps app saying, hey, how does this GPS technology work?
Yeah.
You're just saying, look, how do I get from A to B? And behind the scenes, you're actually dealing with an extremely complicated system that now is running so many different platforms, and people are relying on it on a day-to-day basis, right? And what we're working on and what, I'm super hopeful and excited about is that the next wave of whether it's AI companies or, blockchain technologies, you're not going to need to know all the details and how, layer two applications work, or like what does it mean to have a protocol, or all these things, because there's going to be the application side where people are just going to be building products, and you're just going to be able to receive all the benefits of crypto and why decentralization matters. And so that's where the future of the industry is going. It's just that we're in a really amazing space just within the world where we're getting a chance to see the evolution of technology happening in real time, and everybody gets to be a part of it.
I love the way you actually kind of spoke to it. It's like you don't even realize it, but you'll be using it one day.
You're going to be using
I
it.
remember printing out directions on MapQuest.
Exactly. Now you're dating yourself. No, I did the same thing.
We did this together, baby. But like, bro, can you just the idea of like printing out the directions, and now, like, to your point, you'll be using the technology and not even
that's the hope.
It,
that's actually the best part about it is, it's almost like you don't go. There's so many different types of things where you understand and appreciate the magic for what it is, and. And I think that as technologists and as builders, the goal is to make it as seamless as possible. Right. No, when you open up Instagram, you're just looking at trying to have an experience. You're not thinking about, if I upload this video, what server does it go to? How does it actually stay? How do all these things kind of move and shake? Yeah. Like, people do worry about the algorithms, but other than that, it's a very, streamlined and simple process.
So to the average person, right, that's listening, right, when you hear, right, and obviously you're a person that's thinking 5-10 years down the line, but to an average person that's sitting at home, how are they thinking about Web3, blockchain, crypto, et cetera, in that whole world, and saying, I want to take advantage of it from an investment standpoint? What you're able to disclose, right?
Maya ji, thank you so much for joining channel membership. If you have any question, you can ask in the comment box. Good evening. Natural gas भी बता दीजिए. Natural gas नहीं बताया क्या? Natural gas भी same ही है. कहाँ गया natural gas? एक second. Natural gas भी resistance area से नीचे आ रहा है. नीचे एक retest है. उस पे वापस buying का plan है. एक second. Where is the natural gas? ठीक है, कल मार्केट थोड़ा बहुत मोमेंटम में था. अभी ऊपर से थोड़ा बहुत एक सेलिंग आई जरूर है इसमें मार्केट में. नीचे एक रीटेस्ट जोन है ये. अगर ये रीटेस्ट करता है तो यहाँ से वापस बाइंग का प्लान रखना. फिर एक नीचे एक और रीटेस्ट है इसके पास. अगर रीटेस्ट करता है तो यहाँ वापस बाइंग का प्लान है. यहाँ से वापस बाइंग प्लान कर सकते हैं, या फिर ऊपर आएगा तो ऊपर वापस सेल कर सकते हो. फिर एक हमारा जो कल वो एग्जैक्टली लेवल पे आया नहीं था, उसका सपोर्ट थोड़ा बहुत कह सकते हो. गोल्ड को सेल करेंगे, एक ही जगह पर रुका हुआ है. गोल्ड पे एक बार देख लेता हूँ, एक सेकेंड. में वही 3 दिन से सेम ही लेवल चल रहे हैं, कुछ चेंज नहीं हुआ. लगाया हुआ है आपके सामने क्रूड ऑयल का चार्ट. नथिंग चेंज्ड इन क्रूड ऑयल. हाँ, वो मैंने कल बता दिया था, डिले हो गया शायद उनका. ट्रेडिंग सेशन है वीक का। परसों 2 दिन मार्केट क्लोज है, फिर मंडे को ही ओपन होगा। थोड़ा कम क्वांटिटी में ट्रेड कर लेना आज। कोई डेटा नहीं है आज, शेड्यूल तो कोई डेटा नहीं है। 6:30 और 6:30 न्यूयॉर्क सेशन की ओपनिंग एंड देन यूएस मार्केट की ओपनिंग। ये दो ही टाइम है जहाँ पर मार्केट थोड़ा बहुत वॉलेटाइल हो सकता है, अदरवाइज और कोई डेटा तो नहीं है। दिया नेचुरल गैस का चार्ट भी लगा दिया। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। 6:30 पे ओपन होगा यूएस मार्केट। ओपन है आज तो, कल क्लोज था, आज ओपन ही है।
Leverage. There's a couple of things to keep in mind. Number one, um, uh, any revenues that a company generates outside the United States are not affected by this. So if you're a global brand like Nike, for example, that does 60% of your revenue outside of the US, that 60% of revenue is completely
एफयूजी 5860 से सेल कर सकते हैं क्या क्रूड ऑयल को? वहां तक पहुंच ही जाए वो पहले। ये लेवल काफी बार टेस्ट हो चुका है, थोड़ा सा रिस्की है लेवल पे, वैसे ही बता चुका हूँ मैं। 1 2 3 4 5 6, दिस इज 7th टाइम ये सपोर्ट लेने आया है सेम लेवल पे। इसका मेजर रेजिस्टेंस इधर पे है। एक सपोर्ट भी अच्छा है, अब या तो ये किसी साइड निकल जाए बीच के लेवल से। एफईजी 5860 का लेवल बेस्ट है। लास्ट 2 दिन से क्रूड ऑयल वहीं से सेलिंग आ रही है, फंस गया रेंज के अंदर, इसलिए इस दोनों लेवल के ना इधर साइड अपसाइड निकल रहा है ना डाउन साइड निकल रहा है। मैं जी आज के लाइव पे इतने कम लोग क्यों आते हैं? लोगों से पूछो सर, मुझसे क्या पूछ रहे हो? योर लेवल इज ऑसम, थैंक यू, वेलकम। महामाया जी लोग ही बता सकते हैं इस क्वेश्चन का आंसर। मॉर्निंग पे सेल किया था वहां पर, मॉर्निंग पे ओपन ही वहीं पर हुआ था एग्जैक्टली। किया इसलिए मेंबर्स ओनली लाइव कर रखा है इसलिए। सिल्वर, एक सेकेंड है, गोल्ड और सिल्वर कहाँ गया? गोल्ड, सिल्वर देखते हैं। चांद सेल वाली अच्छी लो अरे छोड़ो, रहने दो अभी। जिसको देखना है वो देखेगा, जिसको नहीं देखना है नहीं देखे। व्हाई शुड आई केयर? शांति अच्छी है, मेरे को शांति अच्छी लग रही है ना, पीसफुल ज़्यादा अच्छा लग रहा है। गोल्ड और सिल्वर, एक सेकेंड यार, एक सेकेंड। लास्ट 2 दिन से सब लोग 5860 से बाई कर रहे हैं, 5860 से बाई कर रहे हैं 5860 से क्यों बाई कर रहे हो? बाई करना है तो सपोर्ट से बाई करो, या फिर ब्रेकआउट रीटेस्ट पे बाई करो। किसी को एफईजी का पता ही नहीं लाइव लेने वालों में, पता चल जाएगा। शुरुआत कर दी ना मैंने अब सबको पता चल जाएगा। मार्केट ऊपर क्यों नहीं जा रहा? इसलिए बोलो शर्मा जी, राम राम। गोल्ड और सिल्वर के लेवल में थोड़ा देर, एक सेकंड रुक जाओ, फिर देखते हैं। कल से आई थिंक ओटीपी का भी थोड़ा सा इशू आ सकता है गाइस, ध्यान रखना। कल से बहुत तीनों ही जो आपके मेजर टेलीकॉम ऑपरेटर हैं, ट्राई की जो गाइडलाइन है अगर उसको उन्होंने फुलफिल नहीं किया तो जो ओटीपीज आते हैं किसी भी चीज़ के, चाहे वो सब्सक्रिप्शन के हों, बैंक्स के चार्जेस के, ओटीएम हो, ट्रांजैक्शन के या फिर कहीं लॉगिन वगैरह का ओटीपी हो, उसमें हो सकता है प्रॉब्लम आए। वो नीचे आ गया ऑलरेडी हितेश जी, ऑलरेडी रीटेस्ट करेगा तो बाइंग प्लान करना, नहीं तो नीचे सपोर्ट है 266 के आसपास, वहां देखते हैं। थोड़ा सा वो नीचे आ चुका है ऑलरेडी। अगले महीने दिसंबर में महामाया जी। योर लेवल ऑसम चांस शेरवाल जी, थैंक यू सो मच। लेवल लेवल कुछ नहीं होते ऑसम, लेवल तो सारे सबके सेम ही होते हैं यार। सबको सपोर्ट पे बाय, रेजिस्टेंस पे सेल करना है, सभी को पता है। टारगेट बड़े रखो बस, और क्या चाहिए। एसएल छोटे रखो, टारगेट बड़े रखो। एसएल भी हिट होंगे, मैं तो कह रहा हूँ टारगेट भी हिट होंगे। टारगेट थोड़े बड़े हिट हो जाएं तो ओवरऑल बच जाएंगे। एवरीथिंग अबाउट द रिस्क रिवॉर्ड एंड पीसफुल ट्रेडिंग। ओके, कोई आप में से कोई फायर्स में ट्रेड ट्रेड करता है क्या? एनीबॉडी ट्रेडिंग इन फायर्स? कोई है जो फायर्स में ट्रेड करता है या कभी किया है फायर्स में ट्रेड? ब्रोकर है ना इंडिया का ही। उसमें चार्ट में ही डायरेक्टली बाई सेल कर सकते हैं क्या, जैसे हम ट्रेडिंग व्यू में करते हैं? ट्रेडिंग व्यू में डायरेक्टली लेवल पे चार्ट पे ही बाई किया, फिर ड्रैग करके एसएल और टारगेट को ड्रैग कर सकते हैं, ऐसा है क्या? या सिर्फ बाई सेल ही कर सकते हैं, ड्रैगिंग भी ऑप्शन अवेलेबल है? बिकॉज जितना मुझे पता है सिर्फ एक वही ब्रोकर है जिसमें बहुत पहले फीचर आया था, उसके अलावा कोई और ब्रोकर में आया है नहीं। धन की टीम से मेरी बात तो चल रही है, उनको मैंने बताया तो है, वो देख तो पता नहीं कैसा करते हैं, कब तक करते हैं। धन को ही मैंने बोला हुआ है कि वो चार्ट में डायरेक्टली बाई सेल का ऑर्डर लेके आ जाए, डायरेक्टली ड्रैग करके उसमें बाई सेल करके उससे थोड़ा सा आसानी होगी। लाइक ऑप्शन का चार्ट ओपन किया, डायरेक्टली बाई किया, या फिर फ्यूचर का या फिर स्टॉक का चार्ट ओपन किया, बाई सेल किया, डायरेक्टली वहीं से ट्रेड करो। बड़ा इजी रहता है वहाँ पर, बार बार मोबाइल में देखने की जरूरत नहीं पड़ेगी। ट्रेलिंग एसएल भी अच्छी तरह से ट्रेल हो जाता है। अब जैसे फॉर एग्जांपल यहाँ पे कोई ऑर्डर प्लेस किया, यहाँ एसएल लगाया, टारगेट लगाया, तो ट्रेलिंग एसएल को डायरेक्टली नीचे यहाँ पर प्लेस कर सकते हो चार्ट में ही, ईजी रहता है वो। एंजल में है ये? धन में कहाँ पर है? धन में तो आया ही नहीं। धन में वो आप ब्रैकेट ऑर्डर की बात तो नहीं कर रहे हो? चार्ट में डायरेक्टली बाई सेल कहाँ से कर सकते हैं? मैं उसकी बात नहीं कर रहा हूँ, जैसे यहाँ पर आपने ये कनेक्ट कर दिया, यहाँ पर ये बाई का ऑप्शन आया, फिर ये सेल का ऑप्शन आया, उसमें अगर आप बाई सेल करोगे तो सिर्फ ऑर्डर प्लेस होता है वो। उसके बाद जो एसएल वगैरह है वो भी ट्रेल होता है क्या, मैं वो पूछ रहा हूँ। लाइक जैसे अगर मैं एक एग्जांपल के लिए ये पेपर ट्रेडिंग को अगर कनेक्ट करूँ ना यहाँ पे, तो फॉर एग्जांपल मुझे यहाँ पर मान लो सेल करना है, ठीक है? अरे तो होगा ही नहीं। जैसे डॉलर इंडेक्स है मान लो, इसको मुझे सेल करना है ऐसे, ऑर्डर डायरेक्टली मेरे को लगाने के मार्केट लिमिट, और फिर मैं यहाँ पर डायरेक्टली सेल कर दूँ लाइक दिस, ऑर्डर यहाँ पर डायरेक्टली शो हो, और फिर इसका टारगेट पॉइंट इस तरह से, और एसएल डायरेक्टली इस तरह से। ये है क्या फायर में? एंजल में तो, एंजल का मुझे पता नहीं, कभी यूज ही नहीं किया। ऐसे डायरेक्टली फैसिलिटी तो मुझे नहीं लग रहा किसी में है। फायर्स में मुझे इतना पता है कि ऑर्डर चार्ट में प्लेस हो सकता है, डायरेक्टली देख सकता है यहाँ पर। ये ट्रेलिंग वाला ऑप्शन है नहीं है, पता नहीं, लाइक दिस जैसे ट्रेल करना हो यहाँ पर इस तरह से। धन वालों को बोला तो है, पता नहीं कब तक करते हैं इंट्रोड्यूस। लुक एट द अकाउंट बैलेंस, आई डोंट नो बिलियंस में है या मिलियंस में है। हाँ, इस वजह से रुक रहा है यहाँ पर ही थोड़ा सा। आजा भाई नीचे। हाँ लिमिट ऑर्डर वाला है ना, लिमिट ऑर्डर की बात नहीं कर रहा हूँ मैं, वो तो आई थिंक वो तो सभी में है। नहीं वो चार्ट में ऑर्डर तो आप सभी में लगा सकते हो, तो लगभग हर किसी में अवेलेबल है। वो तो धन में भी कर सकते हो, ट्रेडिंग व्यू से कनेक्ट कर लो, डायरेक्टली बाई सेल कर सकते हो, बट वो ड्रैगिंग वाला जो ऑप्शन है, ड्रैग करके एसएल टारगेट को ऊपर नीचे कर लो, वो ऑप्शन अभी शायद किसी में है, ब्रोकर में, फायर्स में कुछ लोग कह रहे थे आ गया करके। चार्ट में ऑर्डर तो बाकी भी लगा सकते हैं, बट ट्रेल नहीं होता ना, वो ड्रैग नहीं होता। कुछ समय पहले फायर्स में था, पता नहीं अब है नहीं है। ग्लिच करता नहीं तो धन तो सही चलता है। अरे यार ये भी रुका पड़ा हुआ है यहाँ पर। कोई सेलिंग में है नेचुरल गैस में, ये रुक रहा है बार बार यहाँ पर, थोड़ा और नीचे आ जाता है एग्जैक्टली तो बढ़िया रहता। आप प्रॉफिट बुक कर लो, ट्रेल करो, थोड़ा नीचे आ जाए रिटेस्ट लेवल पे तो बढ़िया है। क्रूड ऑयल में जो लोग बाइंग में थे, देखो ये कल से रेंज के अंदर ही फंसा हुआ है मेरे अकॉर्डिंग, कहीं तो रेंज ब्रेक हो तभी कुछ बड़ा मूव मिलेगा। तो थोड़ा सा यहाँ पर बायर्स हाफ प्रॉफिट बुक करके ट्रेल करना। कल भी ट्रेल किया था, कल तो मार्केट क्लोज था, यूएस मार्केट गया नहीं ऊपर, ब्रेकआउट हुआ नहीं। लेट्स आज होप करते हैं कि ब्रेकआउट होके अपने फाइनल रेजिस्टेंस एरिया तक पहुंच जाए। तो जो लोग बाइंग में है हाफ प्रॉफिट बुक करके ट्रेल कर सकते हैं। सेलिंग देखो मेनली रेजिस्टेंस ऊपर है, वहां प्लान करेंगे, ज़्यादा बेटर रहेगा। यहाँ पर जैसे कल मैंने बोला था, रिस्क की सेलिंग होगी करोगे तो 630 है, थोड़ा सा क्वांटिटी कम रखना, रिस्क की सेलिंग है यहाँ पर। ये सेलिंग का लेवल बढ़िया है। तो थोड़ा कम क्वांटिटी में ही सेल करना, यहाँ सेल कर रहे हो तो। वैसे तो मुझे लग रहा है ब्रेक हो जाना चाहिए अब, कितना रोकेंगे इस लेवल को पता नहीं। यहाँ इतनी फाइट कर चुके हैं, कल थोड़ा बहुत नीचे यहाँ आ गया है, निकल जाना चाहिए था इसको। रॉयल में हाफ प्रॉफिट बुक करके ट्रेल करो एंड लेट्स सी ऊपर निकलता है तो। अगेन थोड़ा बहुत पुल बैक जरूर आ सकता है यहाँ से, बट सेलिंग में रिकमेंड करूंगा नहीं, किसी को करनी है तो रिस्की है भाई, पहले ही बोल दे रहा हूँ। ऐसा रिस्ट्रिक्ट रखना, या फिर ऑप्शन मत करना, मिनी में कर लेना। हम लोगों को कुछ दिन पहले आईडीएफसी फर्स्ट बैंक बताया था, उसकी आई थिंक कल रिसर्च रिपोर्ट भी आई थी। 15 से 20% अपर जाने के चांसेस हैं करंट लेवल से, थोड़ा सा और नीचे आया था अभी कुछ दिनों पहले मंथली टाइम फ्रेम सपोर्ट पे। यूएस मार्केट ओपन है, बताया ना यूएस मार्केट ओपन है। थैंक्स गिविंग्स तो कल था शायद, आज तो ओपन ही होगा। ब्लैक फ्राइडे को तो वैसे लोग मतलब मार्केट बंद तो नहीं होता। सुपर साइडवेज हो गया अभी। कोई क्रूड ऑयल को यहाँ बाय मत कर लेना गाइस, ठीक है। बाइंग सपोर्ट पे होगी या फिर इसका कहीं थोड़ा ब्रेकआउट रीटेस्ट होगा तो देखेंगे, फिर से बाइंग का सेटअप बनता है तो। श्योर। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। जिन लोगों ने लाइक नहीं किया है फटाफट से लाइक कर दो। 6:30। GDP growth slows in Q2 amid weak consumption। इंडिया का जीडीपी का डेटा 5.4% तो कुछ ज़्यादा ही डाउन हो गया। स्टॉक सेशन ओपन होने वाला है 15 मिनट है, ध्यान रखना। वॉल्यूम थोड़ा सा आ जाएगा 6:30 के बाद।
ايه لك يلعن الاسد وروح الاسد.
Wicked and Gladiator 2 combined for a total gross of $170 million. Wicked alone making $114 million, making it the top-performing Broadway musical adaptation in Hollywood history. Here to break down what this means for cinema stocks in the broader market, we've got Gitesh Pandya. He's founder and editor of Box Office Guru. Gitesh, thank you so much for coming in studio with us. So I feel like every time we have the Glickids, the Barbenheimers, there's this idea that we're so back for these cinema stocks. But it hasn't happened yet. AMC, they're still down 20% on the year. So what is it going to take? Was this weekend a step in the right direction?
It's absolutely a step in the right direction. This is what the box office needed this year. The movie industry over the last few years has had two major disruptions. You had the pandemic shutting all theaters down, and then as things are getting back to normal, you had the double strikes last year, the writers, the actors, and that caused massive delays in the pipeline of product. So this year in 2024, we had many months with hardly any, big blockbuster films. But now, as we enter the fourth quarter and going into 2025, the outlook is very good. For Thanksgiving, we have two massive films opening this past weekend, which will continue into the rest of the month. And Glickid, as we call it, is never expected to be like Barbenheimer at that level. It's about 30% less in sales, which is completely normal, completely fine. But Wicked did fantastic. Gladiator 2 did really well. The reviews are good. The audience metrics are fantastic. And people are coming out and spending. And that leads into the rest of the holiday season. People are seeing trailers, posters, all of the in-theater product to hopefully come back for the rest of the year to end off 2024 with a bang.
So it sounds like you think Moana 2 is just going to be an absolute home run then for Disney. Is that fair?
Grand Slam, I would say.
Okay.
Definitely. That one is a huge brand. Disney owns Thanksgiving almost every year. There are big sequels, big brands come out. Moana is one of the most successful original animated films Disney has had in the last 10, 15 years. It's lived on through streaming and merchandise and everything else. There's a new generation of kids who want to see Moana 2. There's the old generation of kids. So that one is going to do gangbusters over the 5-day holiday season, and it'll probably continue into December and maybe even hold on to the Christmas season as well. But that is an absolute guaranteed hit. And then you have the second weekends of Gladiator and Wicked. So we're looking at probably the biggest Thanksgiving box office in over a decade.
It makes me think about Inside Out too, and I believe it was the second best performing movie of the year. Could
the biggest one. It's
right,
the biggest one.
Okay. Could Moana kick it off that list?
Well, the pre-sales are almost at the same level as Inside Out 2. That was a Father's Day weekend, beginning of the summer holiday time, kids getting off of school. Right now with Thanksgiving, you have a couple of days off of school, then right back into school after that. So the midweek grosses Monday to Thursday won't be the same as for Inside Out 2, which was during summer vacation. So, we'll see how good it is if it can last that long. Inside Out 2 was a fantastic film. The legs were great on that one. The other kids' movies were not as good. And then Deadpool and Wolverine, another Disney movie, is the #2 movie of the year. So the same studio has those two films. But now you've got Paramount and you've got Universal this weekend, sort of giving us a mix.
Gitesh, I'm curious just to get your thought on the sequels and success there, because Disney was long criticized that they were coming out way too many sequels, that people were sick of them. It clearly wasn't a strategy that's working. It seems like, though, it is working in some regards. I guess explain that phenomenon to me and what maybe that signals about the future and success of some of these theatrical releases that we'll see going into 2025.
Right. Well, I would say action and words can be completely opposite. And so when it comes to the words, what do people say? Too many sequels, too many brands. I don't want to see this over and over again. But you look at the action, the box office sales. What are people spending money on? The sequels rule the day. I think maybe 9 of the top 10 movies this year are sequels. That's pretty standard over the last several years. The sequels work. And that's why the studios are going to make over and over again. If you look at Wicked this weekend, Part 2 is already set for the same weekend next year. So this is a big brand that's cut into 2 pieces, and it's going to make so much money next time also. So Disney is really leading the way. They have all these silos. They have Marvel, they have Pixar, they have Disney Animation. They have Lion King, the Mufasa movie coming up for Christmas time. Sort of a prequel, but still kind of like a sequel. So people talk about these things not working, but if you look at the balance sheet, they do work. And so I expect all these studios to continue with all their sequels moving forward.
Do you expect to see more movie musicals moving forward as well?
Well, I don't think that Wicked's success necessarily translates to other properties becoming successful musical. John Chu is the director here. He conceptualized this a long time ago into this 2-part film. If you notice the marketing, they dropped the part 1. They just called it Wicked, but it's actually for the first of 2 parts. And it was a big risk. The sequels obviously have a built-in audience. Sometimes these properties turned into movies don't always work. Sometimes they flop, big budget gambles. Sometimes they don't work. Wicked did work really well, and the audience reactions are fantastic. So part 2 should do really well. But I would say, I would hesitate a little bit about other properties from Broadway being turned into musicals, because most of them don't do anywhere close to this level of business. It's kind of a unique situation here, I think.
What are we seeing just in terms of how many people are actually going to the movie theaters, whether or not they're full again, whether or not that's a trend that is going to stick at this point? I'm curious from the number, and it's probably countless movies that you have seen this year. What are some of the trends that you're noticing that either makes you optimistic or question whether or not this is a trend that's here to stay?
Well, I mean, obviously the brands are working, the bigger superhero films and action movies and all of that. And next year already has a lineup of Jurassic World and Mission Impossible and things like that, Captain America. So the brands are definitely working. But I do have a little bit of faith in some of the original films. Once in a while they come out as...
इस गोल्ड जो लोग पूछ रहे थे, गोल्ड में देखो फिलहाल के लिए मार्केट तो साइडवेज ही पड़ा हुआ है काफ़ी देर से. मॉर्निंग पे एक रेजिस्टेंस था, उसका ब्रेकआउट किया, उसके बाद 7:30 के अराउंड फिर साइडवेज ही चला गया ऑलमोस्ट. तो दो रीटेस्ट लेवल हैं, दो मेजर सपोर्ट रेजिस्टेंस है, उन्हीं पे बाई सेल कर सकते हो वापस से। लेवल पे तो रीटेस्ट कर चुका है मार्केट, लेट्स सी फिर से करता है तो। कर लो हाफ प्रॉफिट, ट्रेल करो। अभी यूएस मार्केट, सॉरी न्यूयॉर्क सेशन ओपन होने वाला है, फिर देखते हैं। फर्स्ट टारगेट तो हो गया, कल वाला ही रेजिस्टेंस है, वो आई होप सो ब्रेक हो जाए आज। रुक सकता है, नहीं तो मेरे अकॉर्डिंग ब्रेक हो जाए तो बेटर ही है। वहाँ पर एक और फिर ब्रेकआउट रीटेस्ट पे प्लान करेंगे बाइंग फिर से। सो ये लेवल है आपके इन क्रूड ऑयल, सॉरी इन गोल्ड। बाकी 4 मिनट है, थोड़ा मुझे लग रहा है वॉलेटाइल होना चाहिए मार्केट। लेट्स सी थोड़ा वॉलेटाइल होता है तो। नीचे रिटेस्ट वैसे कर चुका है, फिर से आया तो वो भी वेल एंड गुड ही है। बाकी ऊपर एक रेजिस्टेंस यहाँ पर 268485 के अराउंड, और फिर मेजर सपोर्ट कल कर लो 2617 2620 के अप्रॉक्स। ओके ग्रेट, ठीक है ट्रेल करते रहना, ये कल वाला ही रेजिस्टेंस है। लेट्स होप आज ब्रेक हो जाता है तो डायरेक्टली चला जाए तो और बेटर। बाकी अगर ये रीटेस्ट करेगा तो फिर दोबारा बाइंग का प्लान करेंगे, या थोड़ा पुल बैक दे दे। बाकी जो लोग बाइंग में हैं लो एंड से, कल के सपोर्ट एरिया से जैसे कल बाई किया था, वो लोग हाफ प्रॉफिट बुक करके ही ट्रेल करना। नेचुरल गैस भी रुक गया वहीं पर, नीचे आया नहीं रहा रीटेस्ट पे एग्जैक्टली। ठीक है 3 मिनट है, 3 मिनट लेफ्ट। It is left, 2 मिनट और रह गए guys. Guys, New York session open. New York session हो गया open. क्रूड ऑयल ने भी ऊपर कैंडल क्लोज तो कर दी है. डायरेक्टली चला जाए तो वेल एंड गुड. बाकी अगर ये रीटेस्ट करता है तो तब भी बाइंग का ही प्लान करेंगे वापस. गैस भी आधे रास्ते से ही वापस चला गया.
But with those dynamics now completing themselves, we're expecting a broad-based recovery. If, for example, and I'm anticipating your next question, if we're thinking about sectors to focus on, there's no doubt the past few years, as well as going into 25.
News when you want it with Bloomberg News Now. I'm Nathan Hager. The unofficial kickoff of holiday shopping season is on.
Trying to get stuff for my family. They want laptops, TVs, so I sit out here and sacrifice my Thanksgiving to get them.
That man's in line at the Walmart in Rhinelander, Wisconsin this day before Thanksgiving. The National Retail Federation says more than 183 million Americans will be buying gifts between now and Cyber Monday. Bloomberg Intelligence senior retail analyst Poonam Goyal says stores are running promotions to get shoppers offline and inside, including Target.
The Taylor Swift book that is not available online, you have to get in stores, which is forcing people out to stores. There are also free giveaway doorbusters that have come back. For example, Macy's at the Open will be offering select people with $10 free gift cards. JCPenney has doorbusters at 5 a.m., 9 a.m., 12 p.m., 5 p.m., Kohl's has some. So I think anyone who's looking for that doorbuster deal is going out to stores.
Poonam Goyal of Bloomberg Intelligence says Black Friday's turned into Black November with all the deals that have been happening all month long. Adobe says online shopping this month is up 9.6% compared to last year. As for Wall Street, stocks are moving higher on a Black Friday shortened trading day. S&P futures and Dow futures are up about 0.3% right now. NASDAQ futures up 0.25%. The 10-year Treasury yield is at 4.21%. Investors are hopeful President-elect Donald Trump will back off his most extreme trade threats. Patrick Armstrong is Chief Investment Officer at Plurimi Wealth.
Going into 2025, you've got to get ready for Trump's policies. And my view is he's unequivocally pro-growth, apart from the tariffs. But net, everything he wants to judge himself on is going to be the stock market and economic growth.
Plurimi Wealth's Patrick Armstrong, though there is still some uncertainty around Trump's Mexico policy, with differing accounts of his call this week with Mexican President Claudia Sheinbaum. Bloomberg Government's Maeve Sheehy has more from Washington.
Trump said that Sheinbaum had agreed to stop migration through Mexico and effectively close the border. She said that that's not the position of Mexico, so it's not entirely clear what they actually came to a conclusion about at the meeting, but there are two very different accounts coming out of it.
Bloomberg Government's Maeve Sheehy. Those differing accounts did spark some volatility in the peso. Right now, it's little changed against the dollar at about 20.41. Overall, currency and interest rate traders are headed for their worst year since the pandemic. Bloomberg's Tiwa Adebayo has that.
Investor confidence in making big macro calls this year has dwindled as data surprises have whiplashed bets on central bank interest rate cuts, a too close to call US election, and the shock unwind of a once popular yen-funded carry trade also rattled markets. As a result, some 250 firms, including Goldman Sachs and JP Morgan, are forecast to make 17% less this year from trading G10 rates and 9% less for currencies. That's according to analytics company Coalition Greenwich. The bright spot, currency trading, is expected to pick up in 2025 and 2026. In London, Tiwa Adebayo, Bloomberg Radio.
Thanks, Tiwa. In the Middle East, Israel and Lebanon are trading accusations of violating the ceasefire with Hezbollah, though the deal does appear to be holding. Lebanon Economy and Trade Minister Amin Salam says the truce offers an opportunity for peace.
To save the country from further devastation, from further escalation into this war that Lebanon has paid a very, very heavy price for.
Lebanon's Amin Salam. Russia's defense minister is in Pyongyang for talks with his North Korean counterpart. That's as Russian President Vladimir Putin warns he could hit decision-making centers in Ukraine's capital, Kyiv. That's after Moscow launched an experimental mid-range ballistic missile into central Ukraine last week. Bloomberg's Greg Sullivan covers Russia from Dubai.
He's just talking about a missile that was just used last week for the first time. He used it to target Dnipro, a city in Ukraine's central region. Now, Dnipro is a lot less well protected with air defenses than Kyiv is, but ballistic missiles are harder to defend against.
Bloomberg's Greg Sullivan in Dubai. And after more than 5 years of reconstruction, France's Notre Dame Cathedral is opening its doors to the world. French President Emmanuel Macron visited the site in a live TV broadcast. Outside, the monument is still a construction site after that devastating 2019 fire. but the inside looks much as it did in medieval times with brand new stonework and soaring ceilings. Notre Dame reopens to the public a week from Sunday. That's news when you want it with Bloomberg.
To make 17% less this year from trading G10 rates and 9% less for currencies. That's according to analytics company Coalition Greenwich. The bright spot, currency trading, is expected to pick up in 2025 and 2026. In London, Tiwa Adebayo, Bloomberg Radio.
Thanks, Tiwa. In the Middle East, Israel and Lebanon are trading accusations of violating the ceasefire with Hezbollah, though the deal does appear to be holding. Lebanon Economy and Trade Minister Amin Salam says the truce offers an opportunity for peace.
To save the country from further devastation, from further escalation into this war that Lebanon has paid a very, very heavy price for.
Lebanon's Amin Salam. Russia's defense minister is in Pyongyang for talks with his North Korean counterpart. That's as Russian President Vladimir Putin warns he could hit decision-making centers in Ukraine's capital, Kyiv. That's after Moscow launched an experimental mid-range ballistic missile into central Ukraine last week. Bloomberg's Greg Sullivan covers Russia from Dubai.
He's just talking about a missile that was just used last week for the first time. He used it to target Dnipro, a city in Ukraine's central region.
Talk about financial freedom and financial, ability to run your own life, but we still are in all of these systems that are creating centralized ownership. And I think that the only true path forward is, decentralization and blockchain.
All right, guys, welcome to Financial Freestyle with Ross Mack here on Yahoo Finance. Now, look, whether you're a Wall Street professional, a retail investor, or just beginning to reshape your financial future, there's always a first step. So, guys, join me as I sit down with some of the most influential voices in finance to uncover their journeys towards economic success. And today's no different, man. I'm sitting down with my dog, Chris Lyons, general partner Andreessen Horowitz, and president of Web3 Media. My dog, welcome to the show, baby.
Brother. How you doing? Good to see you. Good to see you.
Bro. You know, we always see each other on some amazing, different cities, this and the third. But I appreciate you coming here to New York, man.
Exactly. No, this is the city where it all goes down. And so,
absolutely,
I'm excited to have the conversation.
Yeah, man. General partner Andreessen and all this and the third. But to the world right now, who is Chris Lyons, man?
For me, I'm just a guy that likes to turn thoughts to things. I love ideas. I love thinking about big picture opportunities, seeing how the world's going to go. And I've always just loved incorporating technology as being one of those vehicles in order to help translate things that are in your mind to actually getting them out there into the world. And so, I'm super fortunate to be now on the venture side. We're exploring really, a lot of different technologies, whether it's blockchain to AI to, figuring out where the next big consumer product is going to be coming. But at the end of the day, I just love vision and seeing how different vehicles can actually kind of create that way.
I love it, man. We're going to get down and talk about all that. But how did you get started? What was your career path to becoming general partner?
Yeah. Well, I mean, look, for me, it was a very long journey. I actually started off unconventionally in the music industry. That was my first passion. And so I was a music producer and engineer. Actually used to work with the songwriter of the decade, Jermaine Dupri. I'm sure you guys all know his music, and he's a great guy, and just really got a chance to witness what it was like being in a first-in-class environment, and also just taking, how to see the world, especially from Atlanta, where I grew up, to then being able to have that type of translate all around the world, right? And so, but I also love technology at the same time, and it was really interesting just seeing, when I was working in the studios, but also seeing kind of the evolution from MP3 players to iPods to iPhones coming out, and then really kind of understanding that, hey, this is going to be the next big momentum and where the next shift is going to go. And so, as a kid, I kind of was able to teach myself how to code a little bit. Back in the day, there was this thing called MySpace and different HTML projects. And so I'm dating myself a little bit. But from there, I was like, okay, well, I'm a music engineer. I'm always on the computer. Engineering's engineering. I went to school for it, so why can't I teach myself to be a computer engineer too? And so ended up teaching myself how to code. Ended up getting accepted to an incubator that flew me across the country from Georgia to Silicon Valley. It was only supposed to be there for 3 months, and 12 years later, still in the game.
So, man, you said something interesting where it was really like you're always identifying what's next, right? You talked about technology, taking ideas in your head and actually, making it realistic, right? But how have you always been able to identify what's next? Because I think that's going to segue into your current career, right?
Yeah, for sure. I think you got to have a pulse on. I think it's two things. I think, and I do attribute a lot of me growing up in Georgia and hearing, whether it's music or seeing different trends or being at the forefront of kind of where things go. I think I call it like being at the intersection of culture and innovation.
Right.
So being able to understand, from a cultural standpoint, what are the things that people are interested in on a day-to-day basis? Like walking the streets of New York City or, being on a group chats with your homies and hearing what people are talking about and what's getting them excited. But at the same time, mapping that out with where you think the future of the world can go. How can, blockchain or NFTs or, Web3 technologies really help impact and support some of the things that we're talking about that have with people that don't care anything about the future or are not really thinking about that on a day-to-day basis. And so being able to kind of also market map, like from an idea standpoint, how you can kind of see these things and where the trends are going to go. At our firm, one of the things that we always talk about is this concept of good ideas that look like bad ideas, which is a kind of a contrarian point of view. But at the end of the day, some of the biggest, things that we use on a day-to-day basis, from Uber to Airbnb, even Google when it first came out, these all sounded like terrible ideas when they were coming out, right? But there's a thing that the founders knew that nobody else knew. And they had the ability, what we call like an earned secret. So they actually really took this information and took their entire life's purpose and then decided to build a company that sounded crazy at the time, but it was just so forward thinking. And being able to, really have that mentality of, being a couple steps ahead, but when someone tells you it's a bad idea or tell you something that sounds a little bit outside the way, that's just really putting yourself in position for where the next future of the innovation's happening, but then also tying that with what you can currently do right now. Uber would never have been able to, and Airbnb would have never been able to work without the cell phone. I mean, without the iPhone and or the smartphone technology, because now you have GPS in there, you have payments that are already integrated into there, and so you have to keep up with where things are going right now, but then still envision the big picture at the same time.
So it's a lot of talking today about where the world is going, right? Robots and AI this and AI that. But, what a lot of people don't hear, well, from the outside looking in, right? We haven't heard as much recently about kind of Web3, crypto, blockchain, et cetera. So let's actually talk about that, man, because that's something that I'm fascinated about. I'm definitely a crypto enthusiast. So let's talk about that. What's your vision for it, and why should people actually start paying attention to it?
Yeah. Look, blockchain technologies, it's just it's a computer system that really verifies ownership, that verifies, the fact that, like, from smart contracts to non-fungible tokens to really, it's like a supercomputer. It's like a computer that's built on top of the internet that then now runs in its own ecosystem. And that's where you're seeing these different protocols and different tokens that are starting to get built, such as Ethereum and Bitcoin, which is more so of like a digital gold type of situation. But at the end of the day, people talk about Web 1, Web 2, Web 3. And don't even necessarily know like how to break down Web3, like, and why do they even call it that? And the easiest way to think about it is that there's been 3 eras of the internet. The first one is just the read era, so that's just like something like an AOL or my colleague Mark Andreessen built the browser, so like Internet Explorer, like where you could actually read things on the internet, right? And then the next component was the write era, so you have read and write. That's what we call like the Web 2. And then you saw companies like Facebook and Pinterest and Airbnb and like so many different businesses in the 2010 era, Twitter, you name it, that all now came from this Web 2 era. But the big difference between what was going on in quote unquote Web 2 versus where we are now with what blockchain technologies can really encourage is this ownership layer. And so people, when they're on Instagram or when they're on YouTube, they might think that they might have 100,000 followers or 1 million followers. And you might have that, but they're not yours. They're actually, you're still having to deal with the middleman. You're still having to deal with the corporation that's taking 30%, or Spotify we love Spotify, but from an artist standpoint, only 0.5% of all artists make over $50,000 a year or more on those platforms. And that's because of take rates. And those take rates are applied onto so many of these Web 2 businesses that then it's great for the corporations, but it's bad for, the ownership is bad for creators. It's bad for, people that want to make a living and not have to deal with someone else taking a huge cut. Apple takes 30% of all payment of all App Store transactions. YouTube can take up to 30% of all your videos and monetization. And so and the worst part about it is that if you look at the internet over the past 15, 20 years, you've kind of seen this halt of innovation. You've seen, like, if you look at the App Store right now, it's literally the same 15, 20 companies that constantly stay at the top of the charts because we have this infrastructure that is currently just literally stable, defaulted in terms of innovation. But blockchain technologies are going to really open and unlock this wave, which is Web3, which is what we consider ownership. So read, write, and own, which is the third layer. And through that, you're going to now be able to have 0-to-1 engagement with your fans, where if you want to sell something directly to an artist, or, if think about, Basquiat back in the day, he was sold a painting for $25,000. 100 years later, not 100 years later, 50 years later, that same piece is now sold for $100 million.
Yeah.
Right. And how much was he able to take from that?
He gets none of that.
Exactly.
Except for the original 25K.
Right. But if that was on chain, what happens now is that there's a smart contract that's already written inside of it. So, and you can say, I'm going to get 10% of every single secondary transaction that's now being sold. And so that's on the blockchain, and it's inscribed and it's written through code, makes it guaranteed process that all these transactions moving forward, you're now going to get a 10% cut from 25,000 to 250,000. You'll get 10% from 250,000 to 2 million, and constantly going on and on. And so, and without having to deal with a third-party structure that then's going to take their cut at the same time. And so when you think about that applying to so many different industries and where it's going to go, it's a really exciting time and our belief is that it's going to not just, right now we're in the infrastructure side where we're really building out the rails that can help really, create the next generation of the internet using these things. But even more so, which I'm personally excited about, is you're going to start to see brand new social networks that are going to come out where you can actually, have 100% ownership of your followers. New music platforms are going to come out where, instead of having to make 1 million streams in order, or 1 million purchases for an artist to have a sustainable living, now all you need is 1,000 true fans that can now every day buy your CD, buy your merch, buy your tickets, follow, and you can create an actual living off of that. And so, decentralization and ownership, I think, is the real future. And it's what we talk about all the time. You talk about financial freedom and financial, ability to run your own life, but we still are in all of these systems that are creating centralized ownership. And I think that the only true path forward is, decentralization and blockchain.
Yeah, look, I believe, that we're going to start seeing this implemented in our everyday life, right? Well, actually, let's take a quick break, right? Let's take a quick break. We're going to get back, right? Don't go anywhere. We're going to talk more about Web3.
Are you going to leave them on the edge? God, you're about to get into the good stuff.
Right, that's Steve.
And, I have a theory that I'm basically calling hiding the wires, where the next generation of whether it's blockchain or even AI technologies, you're not even going to really notice or know that you're using them, nor does it matter, right? Like, I think a great example is like the GPS technology. Like, the beauty of what we're doing with today is that now, people are building products online, and because of, Twitter or, even website, podcasts like this, you're able to now get real-time information on how things are going. But back in the day, nobody was getting up-to-date speeds on what was going on with GPS technology, right? And that's a super, super, super complicated infrastructure. But once it was built, now it was able to create brand new platforms. And, like I said, companies like Uber and Airbnb and DoorDash were able to be created from that, just from GPS technology. And when you're trying to, get to the restaurant or your friend's house, you're not opening up your Maps app saying, hey, how does this GPS technology work? You're just saying, look, how do I get from A to B? And behind the scenes, you're actually dealing with an extremely complicated system that now is running so many different platforms, and people are relying on it on a day-to-day basis, right? And what we're working on, and what I'm super hopeful and excited about, is that the next wave of, whether it's AI companies or blockchain technologies, you're not going to need to know all the details and how layer 2 layer 2 applications work, or what does it mean to have a protocol, or all these things, because there's going to be the application side where people are just going to be building products, and you're just going to be able to receive all the benefits of crypto and why decentralization matters. And so that's where the future of the industry is going. It's just that we're in a really amazing space just within the world, where we're getting a chance to see the evolution of technology happening in real time, and everybody gets to be a part of it.
I love the way you actually kind of spoke to it. It's like you don't even realize it, but you'll be using it one day.
You're going to be using
I
it.
remember printing out directions on MapQuest.
Exactly. Now you're dating yourself. No, I did the same thing.
We did this together, baby. But bro, can you just the idea of printing out the directions, and now, to your point, you'll be using the technology and not even
that's the hope.
It,
that's actually the best part about it is, it's almost like you don't go. But there's so many different types of things where you understand and appreciate the magic for what it is, and. And I think that as technologists and as builders, the goal is to make it as seamless as possible. Right. No, when you open up Instagram, you're just looking at trying to have an experience. You're not thinking about, if I upload this video, what server does it go to? How does it actually stay? How do all these things kind of move and shake? People do worry about the algorithms, but other than that, it's a very, streamlined and simple process.
So to the average person, right, that's listening, right, when you hear, right, and obviously you're a person that's thinking 5-10 years down the line, but to an average person that's sitting at home, how are they thinking about Web3, blockchain, crypto, et cetera, in that whole world, and saying, I want to take advantage of it from an investment standpoint? What you're able to disclose, right? But what would you tell those people?
Well, I think that, you have to do your research. You have to understand kind of what the opportunities are available out there. But it does create a level playing field where anyone has access to be able to, leverage, ecosystems like Coinbase or Uniswap to really kind of participate in this ability to, invest into. And they're not just companies. These are real life technologies that are actually building blocks. So I think the most important thing is not just looking at it from a token standpoint, but what is it that these things are doing? And people sometimes think of Ethereum, or they think of Bitcoin or Solana or all these things as just, ticker symbols. But just like an Apple or Microsoft or Tesla, are publicly traded companies that are actually building infrastructure and things that you're using on a day-to-day basis. That's the same thing that's happening with a lot of these layer 1 and layer 2 tokens. They're not just tokens that you can buy and sell, but they're actually creating the actual infrastructure and the building blocks on what these projects are going to be built on. Everyone talks about the NFT hype and how that kind of really generated from the Bored Apes to the CryptoPunks and you name it, but they were all built on an underlying Ethereum ecosystem and a specific token. And so when you understand where the energy, we like to call it nerd energy, where is the nerd energy building on certain ecosystems and certain L1 and L2 applications, then you could start to have a better understanding of, okay, well, this is where the energy is going, and this is why these platforms and these protocols are becoming more valuable.
So let's actually, you brought it up, so we got to talk NFTs, right? Non-fungible tokens, right? Like, I always explain, like, non-fungible is like it's a one-on-one, right? Like, what's fungible is like $10, right?
Yeah.
2 5s or a $10 bill, it's the same. It's still $10, right? And
Exactly.
so what's your view on NFTs in general?
Yeah, no, look, I'm very excited about the again, it goes back to the most important thing, which is ownership and what you can do with the NFT. I think the first wave was just a lot of the introductions around, okay, well, this is, you can have communities, you can have, art, you can have digital, but it's digital ownership. I do think that the idea of the quote unquote NFT will be put on the sideline, but the value that it's going to generate and the value it's going to create is going to change the way memberships are offered. It's going to change the way music is distributed. It's going to change the way art is being depicted and sold online. We talked about home ownership, cars, so many things of being able to create the next generation of marketplaces and having a buy and sell and being able to easily know that transactional records and being able to create a whole world with the wallet that you have. Again, another thing, it's a wallet right now, but in the next couple of years, will we consider it that, versus, or is it just your digital profile? Is it your passport? Like, who knows? But these are all technical terms that eventually will be put in the back burner because people will just want to be able to use the benefits of the technology.
So quick question, right, for the interest of time, right? What's your view on digital land, right? Whether it was Earth 2.0 and this, that, and the third, some came, some went.
Yeah.
But overall, what's your view in that space?
Yeah. Well, look, I think that digital land really revolves around digital ecosystems.
Okay.
And so, for example, I'm on the board of a company called Yuga Labs, and we're building an entire metaverse with this project we're calling The Other Side, and where there is digital land that's associated with it. And if you think about like our world and what we live in, like, yeah, there's a good chance you're watching this on your phone or listening to it on your phone right now. We live in a mobile world. If we spend 51% or more of our time on our phone or on our computer, we're technically living in a digital world more than a physical world. It sounds crazy to think, but like that's kind of where we go. And so now being able to set up shops that are online, to have digital facilities, to have digital experiences, if everyone's moving in and out of the other side, quote unquote, and you're having, stores that are being able to have popped up and, to go into Soho and to get land there, or we're already constrained on space. So now having a digital footprint that now you can have unlimited space, or you have a much broader opportunity and you see more people interacting on this. I mean, just look at what's happening with Roblox and how you're able to create entire new communities and people are building new things on there. And so it just creates a limitless opportunity. And for me, it's something that I'm super fired up about.
I love it, man. Listen, that's it for this episode of Financial Freestyle.
For sure.
Guys, thanks so much for joining us, man. We really hope that you guys left a lot smarter than you came, man. I just truly want to thank my dog, Chris Lyons, a wealth of knowledge, man. I think when you talk about Web3, he's one of those people. He's him in that space. And so I appreciate you for coming here and sharing some knowledge with the audience, man. But guys, make sure you come back here next week for another episode of Financial Freestyle here on Yahoo Finance.
This content was not intended to be financial advice and should not.
गाइड सिल्वर को भी देखोगे तो सिल्वर भी अपने रेजिस्टेंस जोन के अराउंड ही है. दिस इज सिल्वर चार्ट. ये फॉरेक्स का चार्ट है, ध्यान रखना. दिस इज फॉरेक्स चार्ट ओनली. से रेजिस्टेंस जोन के अराउंड ही है. थोड़ा और ऊपर से गिरे तो और बेटर. नीचे सपोर्ट फिर $30 के आसपास है. एक छोटा सा बीच में एफईजी है $30 के आसपास. 30.40 वहां पर थोड़ा बहुत हो सकता है रुके. बाकी अब 8 PM पे यूएस मार्केट ओपन होगा तो शायद थोड़ा और मोमेंटम हो। गोल्ड एग्जैक्टली लेवल पे आ ही नहीं रहा है, थोड़ा और एग्जैक्टली लेवल पे आता तो बेटर रहता। ये वहीं से कंटिन्यूअसली रिजेक्शन ले रहा है एक ही लेवल से। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक दिस स्ट्रीम। 40 लाइक्स आर डन, 100 का टारगेट है, करते रहो। फिर देखते हैं यूएस मार्केट की ओपनिंग पे कैसे मोमेंटम होता है। वैसे क्रूड ऑयल यहाँ से सॉरी सिल्वर यहाँ से एक बार रिजेक्शन ले चुका है, दिस इज सेकेंड टाइम इस लेवल पे आया है। यूएस मार्केट वही 8 बजे ओपन होगा, 8 PM। नेचुरल गैस थोड़ा बहुत आया था नीचे रिजेक्शन लेके, फिर थोड़ा बहुत रिजेक्शन लिया बट वहीं स्टक हो गया। थोड़ा एग्जैक्टली सपोर्ट पे आता तो बाई करते, बट जो रिटेस्ट लेवल है एग्जैक्टली आया ही नहीं रिटेस्ट पे, आप फिर लेवल से रिटर्न कर गया। क्रूड ऑयल जो लोग बाइंग में हैं आप प्रॉफिट बुक कर लो, देखते हैं फिर से री एंट्री अगर मिलती है यहाँ पर।
Easier to navigate environments that they can be very useful. But this AI component is really critical. And one of the things people talk about in AI is now we have the ability to have multimodal AI. So rather than just discrete units of this is great at vision, this is great at language, etc., this is great at coding actions, you're able to then bring them all together. And that's what turns them from, quite frankly, being potentially more useless to being more useful.
Wenyan, your $7 trillion market potential note by 2050, what are some of the challenges to reaching that? I imagine manufacturing robots on this scale might be one of them.
Yeah, exactly. I think one of the challenges is that like we don't have the scale of production right now. A lot of those parts for those humanoids, for those humanoid production producers, they're just 3D printing all of the parts. I think one of the hindrance would be we need to build the production line for that, and also the the way that I like to think about this is that AI is the brain of humanoids, and then we need to train the AI in the real world in order for them to learn how to perform specific tasks. And in order to train them, we want to have the data for them, but we are running out of data. Data is really important. I think a lot of so one of the infrastructure that you can invest in is data centers, because it really powers the training of AI. So data would be one of the barriers, and now is currently roughly 20% of human efficiency, and it still continue to learn. It developed really fast, but we need some time in order to get to a world where the efficiency of humanoid is like 100% or 200% of human to reach that substitution ratio of 1 to 1 to 2 to 1.
You mentioned, Wenyan, in the report that one of the biggest opportunities for humanoids is well, I'll list them here. It's home services, industrials are key, delivery. Why home services? Like what do you think a humanoid will end up doing?
I think the biggest area for is really home services, is because we've got a huge number, 3 billion households in the world, and based on the survey that we saw, 70% of the homes in the world they're potentially willing to adopt. But obviously there are differences by development in different areas. So we segment the geography into more developed areas, less developed areas, and least developed areas, and we apply a very conservative number for the even though we apply a very conservative number, we still get a very huge unit number. So what they can do is they can do a lot of things. You've already got the robot cleaner in your home mopping your floor, and they can do the laundries. They can make you a cup of tea. They can mowing the lawns, and they can take care of the elderly people. That you don't need to send your grandparents or parents to the care home. You can just take care of them at home. I think this is one of the biggest use cases, actually.
That's just wild. I just program my robot. They can take care of my mom or dad. They can just serve them food. They can call them. Maybe because I don't have to call them. Maybe you can even do that. You know, Rob, before we go to break, part of your title is Future of Work. And as I'm listening to hearing you speak, I have to imagine these humanoids are going to change how work is done in a big way. Like I might be sitting here with my arm around like Ryan Sazi the robot, and maybe we're having a four-way discussion. I mean, what impact do you think this will have on the U.S. labor force, if not the world labor force?
So the answer could be
I think there's room for
very
improvement for the
significant.
future. This is what we're working on at Bloomingdale's, is a new strategy.
And of course, you were in Europe and Asia as well, a lot of experience overseas. What have you noticed that's different or perhaps unique about the U.S. consumer and the way they shop and buy versus those in Europe and Asia?
Yeah, I think, first, they're used to go to department store. The share of department store, the importance of department store for the customer is still very, very, very strong. When you compare with Asia, when you compare to Europe, the penetration here is very strong. But I think, that the relationship with the department store and with retail overall is very transactional. And I think we have to bring back more about the storytelling from, our brand partners to the customer. This is all we're working on right now. And this is a perfect illustration of what we're talking about.
Talk about how you do that. You use the word storytelling, and you hear that a lot, particularly in the fashion industry, right. The idea that, you need to give people a reason to spend however much money on that handbag or shoes or whatever, telling a story. So how do you do that in a concept, and more importantly, in a day and age where people are much more transactional? They just want to buy what they want to buy and leave the store, or buy it online and pick it up and go home.
Mm-hmm. When you're buying a bag, you're not just buying a bag, and especially for luxury brands or for premium brands, you're buying a story, you're buying a social marker, you're buying something special that actually is more than just a product. And we have to make sure that actually through the service, through the store experience, we're bringing that to the customer. The second pillar for us is exactly about that. It's about, events, about activations in the stores. It's actually, you're not only coming to the store to buy. You're coming to the store because you're going to meet people you like, because you're going to see something different. You're going to live an exciting experience. So this is exactly what we're working on right now. And we want to make it bigger and bigger to reinforce the attractiveness of Bloomingdale's.
How transferable is that to other locations? I mean, this is your flagship location, so of course you go all out for it. But when you go to a store in Texas or California or somewhere else, can you replicate this?
Yeah, that's a very good question, Ramin. Because I think it's all about being Bloomingdale's, and being a chain is actually, it's not only about the flagship. It's actually, we want to be, as Bloomingdale's, the local leader, the local destination. So we have to cascade that to every single store, to every single customer. And the teams are working on it. Of course, it's a little bit different. It has to be relevant locally, but we're doing that in every store.
Given your background in Europe and in Asia, are there plans for any sort of international expansion for Bloomingdale's?
I don't think so. We already have a partner in the Middle East who is performing really well. So Bloomingdale's in Middle East is actually a strong platform. But for now, it's not a priority, because we think that actually we have a lot of opportunities in our domestic market. And we think that we can have actually strong growth in the future in the US, in our domestic market. Building a new platform in a new region is actually very, very challenging. I had a chance to experience that in the past. And honestly, starting from scratch, when you already have mature models and mature department store brand in these regions, is actually very challenging.
What about the mix between your amount of sales that you're getting from your brick and mortar locations and the amount of sales that you're getting from digital online sales?
So right now, we're pretty much in line with actually our peers and competitors right now. So I think the market is around 30%, a third of the sales. But actually what we observe for the last few years is actually this fantastic growth of online, well, not jeopardizing the store sales right now.
Is that like a different customer, or is it the same customer?
No, actually, we're seeing, so first, online now is our #1 recruiting channel for new customers, but we have this ability to actually transfer our online customers to offline, because you have the returns, because you want to actually, book or see what you're going to buy on offline, online. So that's a great continuous experience. I think right now customers are totally channel agnostic. They don't care whether they're shopping online or offline.
Mhm.
They want to see a product, they want to experience Bloomingdale's, whatever the platform. So for now, we're talking about online, offline. Tomorrow, it's going to be social shopping. It's going to be, whatever the channel. I think it's really about relating and engaging with the brand.
You know, if you take a step back, and I'm sure in contrast to what you see in Europe and Asia, the department store model has been struggling in the U.S. for a number of years now. What do you think is behind that? Why is the department store model not doing as well in the U.S. as it could be, say, in Asia or Europe?
Yeah, I think, first, the models in Asia and Europe right now are really flagship focused. So I think that's one big difference. And honestly, I think the flagships will have a bright future in the next 10, 20 years. It's not, I think, a problem at all. I think the problem here is managing such a large footprint. And that can be a challenge sometimes. At Bloomingdale's, we have the chance to be in prime locations and prime malls, so very strong locations. We have a limited footprint. So I think we have more opportunities than threats for Bloomingdale's in the future. I really do think that actually the department store model has a bright future, but it has to reinvent itself from the perspective of the customer, but also from our brand partners. We have to be relevant for our brand partners and rethink the model from this point of view.
How about the broader retail landscape overall? Are there too many stores in the U.S. overall?
When you look at the pure market data, when you look at the overall market is actually slightly growing. The penetration of online is going up. So for sure, the average productivity of the square feet overall in the US is actually slightly decreasing. So yes, there will be probably some losers. It's why you have to challenge yourself and reinvent your model to remain relevant for your customers, but also for your partners.
I have to ask you, when you look at other retailers, and it doesn't necessarily have to be a direct competitor, who do you envy most? Like when you walk into their stores or you shop on their website, who do you just say, wow, they really got it right. I want to try to emulate some of this.
No, first, I really think that actually Bloomingdale's is doing that right. When I discovered the model, I'm sorry to say, but I'd say, no, but it's not the only, it won't be my only answer. But actually, honestly, I was very surprised by the level of engagement of the customer. The relationship that we're building with the customer and with our partners is actually good. And I think we can even do better in the future. But I think there's a lot of source of inspirations from our competitors, but also from other models right now, whether it's in terms of service, in terms of brand mix, in terms of events and activations. There are a lot of inspirations that are in retail and beyond retail. I don't want to give you any names, but I have a lot of source of inspiration actually in the US, but also abroad, which is another thing. I think we should not be too domestic focused because we're going to miss probably some good trends that are happening somewhere in the world.
And you think that maybe what we see abroad in terms of their approach to department stores and just retail overall, you think that's going to be palatable to a U.S. audience?
I'm absolutely convinced about that. I think, we have to bring the best of both worlds, and I think this is where we're going to perform and bring something different for the customer. The customer is ready right now for something different, more inspiring, and this, we can get it from some of the countries or some of the other models in the world.
A conversation that we had with Bloomingdale's CEO Olivier Braun not too long ago. Of course, Bloomingdale's underneath that broader Macy's flagship. Olivier just took over about a year ago. His predecessor, Tony Spring, now running Macy's, the total corporation. And I don't know if you had a chance to get out yesterday to the big Macy's Thanksgiving Day parade. It was raining, though.
Yeah, there was no way I was physically going to go, but I did watch it on the television, and it looked cold. It looked really unpleasant.
I know. We normally go. It's our tradition to always go out there every Thanksgiving morning, and we kind of woke up, saw the rain, and we're like, maybe we skip it out.
Did you at least put it on the
television? We did watch it, and we watched Hoda Kotb, who's a national treasure. Al Roker, love him. I don't know. Come on, dude. And then, and who was the other woman? I forgot. Anyway, it was three of them. But anyway, I think it should be us.
I agree.
We should make a bid for. Well, yeah. Why did they get to do it?
I think it's just no one's raised their hand. So this is us officially.
I'm raising my hand
right
now. That's on my bucket list.
Yeah, Thanksgiving 2025.
The Macy's Thanksgiving Day Parade, but only if it's not raining. All right, we're going to set you up here for the week ahead as the music starts to play. This is Bloomberg Surveillance.
There's no doubt that inflation risks are back on the agenda. I would say, that's flashing an amber light, not a red light to me, but we have seen signs not just in the rising 3-month trajectory of core PCE, but also with consumer inflation expectations rising. I would say, though, when we start to think, what does that mean for risk assets, that you can't take just inflation in isolation. This is about a growth inflation mix. And when we think about the growth trajectory that the next administration is going to inherit, it is very robust. We're seeing 2 to 2.5% US real GDP growth now, and that level could well continue through the next 6 months, perhaps even the balance of 2025. So we still feel the underlying US economy is pretty strong. But we have just published our 2025 outlook. We call that building on strength because obviously we've had 2 years of strong risk asset gains, and therefore the underlying theme that we want to promote is the idea of strengthening portfolio resilience, i.e. aligning to a base case, but also managing for those tail risks that you mentioned, Francine, that include higher inflation, but also the idea that growth may weaken and will weaken at some point cyclically as we go through a business cycle.
Grace, what do we know about U.S. policy? I know, markets are quick on their feet to try and figure it out, but we still don't have, the Trump administration in place. So is the market getting a little bit ahead of itself? Could things change, or do you just expect a lot of volatility as we try and measure the impact of things that have been said?
Yes, this all feeds into the idea of what does a resilient portfolio really mean in the regime that we see today. The policies are still very unknown. We can start to guesstimate what that might mean for both that and the growth and inflation mix. And what it leads us to believe is in strengthening portfolio resilience, you want to still absolutely stay invested. As I mentioned before, we think there is a really solid outlook for growth over the next 12 months, but actually also over the medium term. But inflation risks are there, geopolitical risks are there, risks around the deficit are definitely there, and therefore adding infrastructure, adding gold as two of our preferred ways to strengthen portfolio resilience we think is critically important. And then even when it comes to the equity book, making sure that you're broadening out your exposures, because the other underlying theme to us is capital investment, whether it be in the AI transition, whether it be in power and security needs, all of these is driving a broadening out of, we think, GDP trends, but critically also within equity markets. So go global, go broad, stay invested, but add insulation, we think, from infrastructure and gold.
US market is open today. Thanksgiving कल था तो कल बैंक हॉलिडे था, आज तो ओपन ही है. क्लोजिंग का दिखा तो नहीं रहा, बैंक हॉलिडे है तो नहीं, बट अगर थैंक्सगिविंग से आज भी बना रहे होंगे बिकॉज उनका टाइमिंग थोड़ा सा अलग रहता है, तो अब बात अलग है. अदरवाइज मार्केट तो ओपन ही होना चाहिए.
Europe's biggest economy is confronting the most symbolic chapter yet in its story of industrial decline. And the great icon of Germany Incorporated is at the center of the crisis.
Volkswagen epitomizes German engineering.
This is probably its most serious struggle in its history. The fundamental underpinnings of the company are falling away from it.
As are tens of billions of euros of its market cap value, which has plummeted to lows not seen since the
Subramaniam ji, good evening. Moise Asta ji, हाफ डे मार्केट टाइप्स कुछ पढ़ा था आपको, वॉल्यूम सही नहीं सही लग रही है अभी तक. वॉल्यूम तो ठीक ही है, एवरेज से तो ऊपर ही है. अभी रुक जाओ, 8 PM आधा घंटा और है. 8 PM पे यूएस मार्केट ओपन होना होगा तो हो जाएगा. आज वैसे मार्केट क्लोज तो नहीं होना चाहिए, दिया भी नहीं है. यहाँ तो ओपन ही दिखा रहा है फिलहाल के लिए, क्लोजिंग तो नहीं है. बाकी वॉल्यूम भी ठीक ही है, ऐसा कुछ नहीं है कि बेकार वॉल्यूम है, वॉल्यूम भी ठीक ही चल रहा है. यूएस मार्केट ओपन होता है अभी 8 PM पे, तो फिर देखना मे बी शायद उसके बाद वॉल्यूम थोड़ा सा इंक्रीज हो, बिकॉज थैंक्सगिविंग कल था 28 को, तो 28 उनका भी शायद चल रहा होगा. 29 हमारे वहाँ तो आज हो गया, उनका 29 अभी होगा अर्ली मॉर्निंग का, तो वहाँ पर मुझे लग रहा है ओपन मार्केट रहता ही है. प्री मार्केट ओपन हुआ नहीं किया, प्री मार्केट ओपन में देखो। मार्केट ओपन है देखो, प्री मार्केट ओपन हो चुका है। टेस्ला राइट नाउ 336.19 पे ओपन हो रहा है। लगभग 1% के आसपास पॉजिटिव ओपनिंग हो रही है, देखते हैं। तो यूएस मार्केट तो ओपन है, यूएस मार्केट इज ओपन टुडे। गोल्ड और सिल्वर थोड़ा सा मोमेंटम कम कर रहे हैं, आई नो। गोल्ड तो कुछ ज़्यादा ही साइडवे चला गया सिल्वर के साथ साथ, बट आई होप मोमेंटम हो सकता है। वैसे 2 दिन मार्केट क्लोज है, कल भी थैंक्स गिविंग था, तो हो सकता है बड़ी पोजीशन ना बन रही हो। दैट माइट बी द रीजन। अदरवाइज तो मार्केट ओपन ही है, कोई ऐसा इशू नहीं है। क्रूड में अच्छा खासा वॉल्यूम आ रहा है, नेचुरल गैस भी ठीक ही चल रहा है।
Aftermath of the financial crisis or VW's emission scandal. Management needs to find 17 billion euros in cost savings to stabilize the business, and it's ripping up its rulebook to find them.
Volkswagen's historic move to consider factory closures in Germany for the first time in 87-year history.
That has pitted Europe's largest car maker against its huge workforce and the governing bodies of cities built around its plants. And it's left everybody asking an existential question. Cars are integral to Germany's modern economic and industrial identity, a pop cultural export and political lightning rod. 87-year-old Volkswagen embodies this on a global scale.
It employs 680,000 people around the world. It has dozens of production locations. Millions of people, workers in other industries, are reliant on the business that they get from this company.
It owns several household names. Some of those households are very wealthy indeed, while others descend from VW's principal demographic.
There was a big celebration in Germany to mark the 1 millionth people's car since the war.
The whole idea of the people's car was that every individual in the country would be able to afford one.
Decades later, in 2023, VW's portfolio generated 320 billion euros in sales, equivalent to about 7.5% of Germany's entire GDP from that year. Which sounds pretty healthy, so what's going wrong? First, electrification.
You could arguably chart the current crisis to the diesel scandal in 2015. It cost the company billions of euros in fines and recall and costs. And it forced a rapid pivot towards electric vehicles, what the company wasn't really well prepared for.
They really wanted to create a vertically integrated supply chain. Part of that included creating their own battery making facilities and creating their own in-house software unit. The problem is creating software is very different than making cars.
Tesla is so far ahead because it's good at all of these things, the batteries, the vehicles, and the software. VW is not.
In the combustion engine era, they could still make cars that people wanted. The transition to electric vehicles is they're not doing well with making cars that people want to buy.
Or that they can afford. This is reflected by slumping registrations for new EVs in Germany. For the majority of the months last year, sales have been down compared to the year before. In the 21st century, VW lacks an electric people's car to stimulate German EV adoption.
Volkswagen is emblematic of Germany's industrial struggles right now. And so the business model and the factors that led to Germany's like decades-long kind of stable, successful economy is at threat.
Which brings us to the second big problem, China. VW has been active in the world's second biggest economy for decades. But while China's been dealing with its own economic slowdown, its car makers have been churning out competitive electric vehicles at VW's expense in particular. Just look at the changing makeup of China's EV market. Local manufacturers have taken considerable share, while German brands, including VW's, have steadily declined.
They slept on the competitive threat that Chinese car makers play. The expectation that German cars are just better.
It wouldn't be controversial to say that Volkswagen, through its decades of success in China, grew a bit arrogant about its position there.
VW has company in its struggle with macroeconomic headwinds. The European Commission is fighting back on behalf of EU car makers and in late 2024 introduced controversial tariffs on Chinese vehicles. And so, to VW's third problem, its workforce.
Volkswagen considers its first ever factory closures in Germany in an effort to cut costs as Europe's car industry struggles.
The Volkswagen brand has 10 production locations within Germany that both make cars and components. Volkswagen management has said that as many as 3 of those factories could be at risk of closing or of restructuring.
The pressure on VW's workforce is felt keenly here, Wolfsburg, in the German state of Lower Saxony.
Wolfsburg is absolutely the symbol of Volkswagen inside Germany. It was the site of the first factory of the company.
The factory itself is enormous. It's the size of Monaco, effectively.
If Volkswagen ceased to exist in Wolfsburg, the city of Wolfsburg would also cease to exist.
And in Germany, at this point in time, there's not as many stable jobs as there used to be. And like a VW worker, assembly line worker, was well-paid, blue-collar, middle-class kind of job. If you lose that, you don't get something easily, so your livelihood all of a sudden collapses.
Dietmar Tutsche began his career at Volkswagen as an apprentice mechanic 3 decades ago. He works here, about 200 miles from Wolfsburg at VW's Emden plant. His lengthy tenure, like many, fostered great loyalty to his employer, but now also trepidation.
Also es macht Angst, es macht mir Angst und was viel schlimmer ist, es macht meiner Familie Angst, dass Volkswagen unsere Arbeit, unsere Werke in Frage stellt. Heute habe ich noch mit Mitarbeitern und Kollegen von mir im VW-Werk gesprochen. Die blanke Angst weil alle gerade ihre Existenz sehr, sehr, sehr bedroht sehen. Nicht nur sie sehen ihre Existenz bedroht, sondern auch die Existenzen ihrer Kinder, die, wenn im Idealfall alles gut läuft, auch bei Volkswagen einen adäquaten Arbeitgeber bekommen hätten bzw. bekommen können.
Volkswagen's turnaround efforts right now are being led by Oliver Blume, who is the chief executive officer of the whole group.
And who's leading the charge to downsize.
Which is a very controversial decision because you're picking a fight with the employees, which have a ton of power. So there's like 140,000 German employees at the VW brand, which have obviously political power, which in the other turn influences Lower Saxony, the state, which has a blocking minority.
In accordance with historical laws particular to VW, regional government has voting powers in the company's corporate decisions, often allying with the workers' groups and at odds with investors.
The state of Lower Saxony has 2 seats on Volkswagen's supervisory board. They, along with the 10 seats that sit on the supervisory board from the labor side, that means they have a majority, and that means it's in their interest to protect the locations within Lower Saxony from being closed.
This tension fueled protests and heated negotiations between management and unions.
There's lots of competing power players. That structure that makes Volkswagen very slow-moving.
This has also hindered the ability of Volkswagen to make cuts to its operational costs that come from the labor side, because those are often not seen as being in the interests of the hundreds of thousands of workers that are employed at the company.
One potential component of a restructured VW is giving a new life to its plants.
There is precedent for a factory to be sold off to another car maker or to another company so that those jobs remain saved.
But there would be a difficult irony for Germany to reconcile if that manifests.
The likely buyer of any Volkswagen plant is probably going to be a Chinese manufacturer.
Blume has characterized his company's crisis as truly demanding, but the restructure is progressing. On calls with investors, he said highly competitive new products are coming in 2025, while partnerships with EV companies in China are advancing well too. But then there's the US, where VW is facing another problem because it exports more vehicles there than anywhere else in the world.
You know how many cars we have? Mercedes-Benz, and BMW, and all of the different Volkswagen. Millions and millions of cars. We're going to put tariffs on them.
It's a real risk that Volkswagen that we know of today doesn't exist in the same way in 5 to 10 years. Germany, the German government, the German system, the company itself will do everything to prevent that, but the transition is going away from Germany's traditional strength.
Looking at Asian chip stocks.
With the end of the year approaching fast, and with it one of the peak periods for global travel, it's a great time to speak to our next guest, Air India's CEO Campbell Wilson. He's just overseen the merger with Vistara, and like all big carriers, continues to grapple with supply chain issues affecting the entire aviation industry. Campbell joins Insights live and exclusively from Gurugram. Good to have you with us, Campbell. Long time no see. Let's start with that integration. How's it coming along? How much has been achieved?
Well, this integration, actually, there's two integrations because we're merging 4 airlines into 2. We've been working on it for the best part of 2 years. And through that period, we've harmonized, 140 odd systems, brought about 30,000 staff together, consolidated offices, merged aircraft fleets, harmonized procedures, and so on. But in the last 6 weeks, we've brought both to closure. The 2 low-cost airlines merged on the 1st of October, the 2 full-service airlines on the 12th of November. And we're in the process of just ensuring things continue stably. But the hard work really has been done. Now it's about optimization.
So would you say 80% of integration is done since it's just about optimization now?
Well, I'd say 100% of the integration is done. The optimization will be a more long-drawn process. And then, of course, bringing 4 groups of employees together into one organization means that people bring with them different cultures, different backgrounds, and aligning everyone behind a common mission with a common culture that is co-created by those 4 groups, I think is now the next challenge. And that will be an ongoing process.
Mm. So what next for Air India's transformation? What will be the focus?
Well, we've spent, as I say, the last 2 years on this consolidation of the airline group. In addition, we have inducted more than 100 new aircraft. We had ordered more than 500 aircraft. We have completely transformed the in-flight product on these new aircraft, completely changed a lot of our infrastructure, training, maintenance, and the like. And so the foundations, the ingredients of the future Air India are now largely in place. The big work left to do is actually the rehabilitation of a lot of the older aircraft that we inherited from the former owner. We're about a third of the way through refitting all of the narrow-body aircraft. That refit will be complete by the middle of 2025. And in early 2025, we commenced the refit of 40 wide-body aircraft with completely new seats, entertainment systems, and so on. And that will take probably 2 years to complete, given the sheer number of aircraft that need to be refitted. So that's really the focus. In addition to the physical product, of course, it's the culture, the service culture, the consistency, the refinement that comes from a big transformation. 61% of our cabin crew have been flying for less than 18 months. Their average age is 28. So we're putting a lot of investment and resource into uplifting and upskilling and making more consistent and more polished the service that people receive.
Campbell, we know that Singapore Airlines has about a 25% stake in this merged entity. I'm just wondering, what kind of partnerships might Air India seek with Singapore Airlines? Presumably that is what will happen next.
Well, Singapore Airlines, clearly being an equity investor, has a stake in Air India's success as well. We have a number of folk that have come from Vistara, which was a joint venture with Singapore Airlines that has merged into Air India, that have come across with their skills and capabilities. I think we've got a commercial partnership which we've recently launched with Singapore Airlines, which is a comprehensive mutual code share agreement. And we're looking at ways to further expand that. Beyond just Singapore Airlines, we're a member of the Star Alliance, and we continue to talk to a number of the key carriers in Star Alliance, Uniteds and Lufthansas and others. And I think Air India is now taking its place at the table of the large global airlines that previously it didn't. And I think will play a more important role in both the alliances and international aviation moving forward.
Would a joint venture be a logical next step?
Well, I think we need to be a little bit more mature. I mean, Air India has come in the last 2 years from a state of really quite poor repair. And that also extended to the likes of the revenue management systems, pricing practices, distribution practices, understanding of alliances and how to make those alliances mutually beneficial as well as beneficial to the consumer. And we've made a lot of progress in all of those areas. And I think it's only now we're starting to get into the level of maturity that we can have a peer-to-peer discussion with some of these large international carriers. And so that's something to look at, but not something we're rushing into just yet.
Campbell, we know that the aviation industry has been saddled with supply chain issues. In fact, India has had to cancel several flights on the back of that. I'm just wondering how you're looking at the issue. Have constraints been addressed? Where are we headed?
Yeah, well, there are three major areas of supply chain constraint that have affected the industry, not just us. One is, of course, the supply of aircraft. That's the most obvious. We're all well aware of the challenges that Boeing has had on a number of fronts and the slowdown in production of at least some of their aircraft, and that has a flow-on effect. There's also been supply chain constraint with a number of the components that go into aircraft, and that also affects the ability to upgrade the componentry on existing aircraft, improve aircraft health, and so on. There's been constraints in engine supply, thankfully not really affecting us, but certainly affecting many airlines. Probably the one that has affected us most has been supply chain constraints around seats. We had committed, as I say, to retrofit the interiors of nearly 100 aircraft when you take narrow body and wide body together. And the seat manufacturers have been really struggling to design, to certify, to produce at the volumes that the industry has been demanding. And so in our case, the first and business class seats for both our big retrofit programs have been delayed by upwards of 6 and even 12 months, which is very frustrating when what we're trying to do is uplift the consumer experience as quickly as we can. About a third of our fleet is already done, as I say. It will progressively happen over 2025-26.
So given that your transformation hinges a lot on plane deliveries and supply chains getting rectified, are you reassessing the kind of targets that you're setting for Air India?
Well, look, if the aircraft don't come, we obviously can't mount the new services that we want. We can't present the product to the customer that we want. But it's a matter beyond our control. We've tried to mitigate it by leasing in aircraft. We've leased in nearly 40 aircraft. We've bought aircraft that have been produced but not delivered to other parties. And in that case, we've taken 56 aircraft in that circumstance. But there's just a limited supply out there. I think if you talk to most airlines, they would say that one of their biggest challenges is simply the shortage of capacity and the fact that it's going to take a while to rectify. So I think we're all having to recalibrate our expectations and plans in light of this constraint that's beyond our control.
Once you get your planes and once the makeovers are done, how much will that add to your yield?
Well, I wouldn't want to put a number on it, but it's a complete transformation.
Put a number on it, Campbell.
Because to be honest, we've got our internal estimates, but so far we've been exceeding the internal estimates of how we can improve yield. And improving yield is a matter of a few things. One, it is the proportion of seats we can fill, and we've increased our load factors significantly. The other is the type of fares that we can sell. Air India has pushed a lot further into the corporate market and into the international sales market than was previously the case. And then the quality of revenue management. We've deployed new systems, industry-leading systems in revenue management in both our full-service and low-cost airlines, which allows us to better manage the sales that we get. So when you take all of those in totality, and then you add India's increasing affluence and the rise of a more wealthy market segment, you take India's expansion into the global supply chain and the increase in corporate business that comes from that. You also take into account the alliance relationships and the distribution advantage that gives when selling into other markets. There's a lot of factors at play, so that's why it's a little bit difficult for me to give you a particular number. Suffice it to say that we think that there is significant yield upside compared to the legacy operation.
So presumably as well, with new planes and so on and so forth, better services, you'll be able to charge more in terms of ticket prices?
Well, I think it's all about what is the average airfare that we can sell. We will continue to offer extremely competitive airfares, and as all airlines do on certain days of the week and certain seasons, and especially if people are willing to take a more restricted set of conditions. But on the other hand, we will offer high airfares for those that are very time sensitive rather than price sensitive, that want to have assurance of an available seat very shortly before travel. And it's really what is the number of number of seats that you sell at each particular level of airfare. And so I think given the investment we're making in product and service, given the expansion into new market segments, including the international and corporate market segment, it is more likely over time that we will sell airfares in the upper end of the range. But that's not to say that there won't be airfares available at the lower end of the range. That's just the airline business.
Relations between China and India have never been better. In fact, they've been improving of late. And both sides are looking at direct flights between the two nations. I'm just wondering how you're looking at the growth opportunity. Is it realistic for us to be thinking of direct flights soon?
I think we are, this is a relatively recent development. Obviously, we are factoring it into our plans. It is certainly something of interest. But Air India has opportunities worldwide. One
पैटर्निंग क्रूड ऑयल वो मुझे लग रहा है यूएस मार्केट की ओपनिंग का वेट कर रहा है। यूएस मार्केट का ओपनिंग का वेट कर लो, अब तो 10 मिनट रह गए, कहाँ कैंडल चला जाए हु नोस। बाकी डायरेक्टली तो नहीं जाना चाहिए, कंसोलिडेशन हो रहा है। आउट तो हो गया है, रीटेस्ट करके अभी तक चला जाना चाहिए था प्राइस को। जो लोग बाइंग में है हाफ प्रॉफिट जरूर बुक करके चलना। नेचुरल गैस भी वही रेजिस्टेंस पे रुका हुआ है, ना नीचे आ रहा है ना ऊपर जा रहा है। मैं एक्सपेक्ट कर रहा हूँ थोड़ा सा ये और पुल बैक देना चाहिए लग रहा है इस तरह से, क्योंकि अभी रेजिस्टेंस तो ब्रेक हो गया, तो ये हमारे काम का नहीं है, ध्यान रखना। न्यूयॉर्क सेशन ओपन होगा, सॉरी यूएस मार्केट ओपन होगा तो देखते हैं। नीचे मार्केट के पास एक एफईजी बना हुआ है, शायद उसका मार्केट थोड़ा सा सपोर्ट लेने आए। तो थोड़ा सा मुझे लग रहा है और नीचे आए बेटर रहेगा, कुछ इस तरीके से, और फिर यहाँ से सपोर्ट लेके जाए इस तरह से, क्योंकि वो रेजिस्टेंस तो हो गया ब्रेक, तो वो हम उसके ऊपर कैंडल क्लोज हो गई तो उसको हम कंसिडर कर नहीं सकते। तो थोड़ा सा पुल बैक ओवर हियर अराउंड दिस रेंज, और फिर यहाँ से सपोर्ट, देन मार्केट मूव अप साइड। जो लोग बाइंग में है, अगर ट्रेलिंग ऐसा लगाना है तो इस जोन के नीचे रख लो 5833, इसके नीचे कैंडल क्लोज होती है तो निकल जाएंगे। बाकी तब तक होल्ड करके बैठे रहो। अगर ये वापस सपोर्ट लेता है तो एक फाइनल टारगेट वही है ऊपर हमारा। कल से ट्राई कर रहे हैं, परसों से गया नहीं है मार्केट वहाँ तक, लेट्स होप आज चला जाए। आ जाएगा वॉल्यूम, अब तो काफ़ी देर हो गई है। गैस को भी ब्रेक कर देना चाहिए अब तो, इतने देर से कंसोलिडेशन में फंसा हुआ है। नीचे आता तो यहाँ पर रीटेस्ट अच्छा था, यहाँ बाइंग करते, आ ही नहीं रहे वहाँ। अच्छा लेवल है वही बाइंग के लिए। भी ऐसा ही किया था नेचुरल गैस ने, लग रहा है दूसरे रेजिस्टेंस तक जाके मानेगा। देखते हैं, थोड़ा सा अगर ये पुल बैक दे देना यहाँ थोड़ा नीचे और लेवल तक, यहाँ से फिर यहाँ से सपोर्ट लेके जाए तो वापस एक बाइंग का ट्रेड वापस प्लान कर सकते हैं। बाकी अगर ये डायरेक्टली चला गया ऊपर तो फिर रेजिस्टेंस एरिया से देखेंगे सेलिंग का प्लान। कहाँ तक जा सकता है, एक सेकेंड। ये तो है ही रेजिस्टेंस, इसके अलावा और कौन सा रेजिस्टेंस है इसके पास। पुल बैक आ जाए तो बेटर है, क्रूड में बाइंग वापस कर लेंगे, फिर ऊपर रेजिस्टेंस है ही वो छोटा सा। लेट्स सी वापस फिर से रिजेक्शन लेगा तो। सिल्वर ही बैक टू बैक विक बना रहा है, सिल्वर भी वो रेजिस्टेंस के पास ही रुका हुआ है। लग रहा है यूएस मार्केट का वेट करना पड़ेगा, ऊपर एक और रेजिस्टेंस है हो सकता है क्योंकि वो जो रेजिस्टेंस अभी जिस पे लिया रेजिस्टेंस डे हाई, वो 2-3 बार टेस्ट होके आया है नीचे प्राइस के लिए। फॉरगेट टू लाइक द स्ट्रीम, जिन लोगों ने लाइक नहीं किया स्ट्रीम को। नेचुरल गैस भी नीचे नहीं आ रहा है, पता नहीं क्या हो गया। नेचुरल गैस राइज एज फोरकास्ट सी कोल्डर वेदर लाइटनिंग ओवर ईस्टर्न स्टेट। 50 लाइक्स आर डन, 100 का टारगेट है, जिन लोगों ने नहीं किया कर दो फटाफट से अब। बाकी कोई न्यूज़ भी नहीं है फिलहाल के लिए मार्केट में। आज यूएस मार्केट बाय द वे ओपन है, 4 मिनट में यूएस मार्केट ओपन हो जाएगा। सऊदी अरेबिया एबेंडन्स परस्यूट ऑफ यूएस डिफेंस ट्रीटी ओवर इजराइल सेटलमेंट stalemate. Saudi Arabia has abandoned its pursuit of an ambitious defense treaty with Washington in return of normalizing relations with Israel. and is now pushing for more modest military cooperation agreement to Saudi and 4 Western official toll routers. That is a major news actually. Proposed US-Saudi defense treaties would require Senate approval. But approval contingent on Saudi recognition of Israel. Riyadh wants Israel to first commit to Palestinian statehood. Cooperation Pact would expand joint military exercise. Iran nuclear proliferation critical threat in coming months, French spy chief says. इनका भी कुछ काम नहीं है. ओके गाइस 2 मिनट लेफ्ट 2 मिनट रह गए हैं. यूएस मार्केट ओपन होने वाला है. किसी की ओपन पोजीशन है तो एसएल सिस्टम पे रख लो. ट्रेलिंग एसएल ना, किसी की भी कोई भी ओपन पोजीशन चल रही है ट्रेलिंग एसएल सिस्टम पे रख सकते हो. क्रूड ऑयल में एम पैटर्न बना है पूछ रहा है, चेक कर लो. मैं वही बता रहा हूँ, क्रूड ऑयल में एम पैटर्न नहीं है वहां पर. ये इसकी बात कर रहे हो ना ये. दैट इज नॉट अ एम पैटर्न राइट नाउ. एक थोड़ा पुल बैक जरूर एक्सपेक्टेड है बट वो एम पैटर्न नहीं है. कंसोलिडेशन कह सकते हो उसे. 130 seconds आर लेफ्ट. यूएस मार्केट ओपन है. यूएस ब्लैक फ्राइडे को मार्केट बंद तो नहीं होता, मार्केट तो ओपन ही रहता है. थैंक्स गिविंग्स पे मार्केट बंद होता है ना. जैसे हमारे दिवाली के दिन मार्केट बंद होता है वैसा ही उनका थैंक्स गिविंग्स है. तो थैंक्स गिविंग कल था 28 को इंडियन टाइम के अकॉर्डिंग. और 28 भी उनका निकल गया होगा तो उनका अभी आज मॉर्निंग हो रहा होगा. हमारे वहाँ तो नाइट है. उनके यहाँ सुबह के शायद 9 बज रहे होंगे, 8 या 9 यूएस में, पता नहीं यही टाइम हो रहा होगा. तो उनके यहाँ आज 29 हो गया होगा स्टार्ट. तो ब्लैक फ्राइडे है, मार्केट तो ओपन ही रहता है. बाकी लोग शॉपिंग वगैरह करेंगे थैंक्स गिविंग्स के एक दिन बाद. बाकी फिर मंडे को साइबर मंडे भी आता है. कैसे कैसे नाम बता देते हैं. साइबर मंडे, ब्लैक फ्राइडे, अभी 2-3 और भी थे. क्या नाम था उसका, एक और था यार. ओके यूएस मार्केट ओपन है. नहीं ओपन ही है यूएस मार्केट, आज ओपन ही है. गाइस यूएस मार्केट हो गया ओपन, ध्यान रखना. क्रूड ऑयल थोड़ा सा अगर नीचे आए लाइक इस तरह से ना, एक थोड़ा पुल बैक दे दे लाइक इस तरह से, यहाँ पर एक फिर से बाइंग का प्लान रखेंगे. बाकी अगर सीधा ही चला गया तो ये थोड़ा बहुत यहाँ से वापस सेलिंग का प्लान करेंगे, रुकता है तो. नहीं तो फिर इसके ऊपर जो दूसरा रेजिस्टेंस जोन है वहां से सेलिंग का प्लान रखेंगे फिर, नहीं तो. बाकी ये टारगेट कंप्लीट ही है, लेट्स होप हिट हो जाए. बाकी नेचुरल गैस काफ़ी देर से रुका हुआ है रेजिस्टेंस एरिया पे, लेट्स सी ये भी निकलता है तो. बाकी गोल्ड और सिल्वर को अगर चेकआउट करोगे तो दोनों ही साइडवेज पड़े हुए हैं, कंप्लीटली सुपर साइडवेज हैं. यूएस मार्केट ओपन हो गया, फिर भी कुछ खास मोमेंटम किया नहीं है दोनों ने। गोल्ड अपने रेजिस्टेंस पे आ ही नहीं रहा अभी फिलहाल के लिए, वो रेजिस्टेंस से पहले ही रिजेक्शन ले रहा है। ट्राई करना चाहते हो सपोर्ट देख लेते हैं एक बार, कहाँ पर है रेजिस्टेंस, तो ऊपर है, रेजिस्टेंस पे आया ही नहीं अभी तक। टेस्ट भी नहीं है यहाँ पर तो। गोल्ड में ना तो सपोर्ट है यहाँ पर ना रेजिस्टेंस है, बस एक प्रीवियसली रीटेस्ट लेवल था, वो मार्केट रीटेस्ट कर चुका था पहले, और आज तो उसने उसी एरिया पे कंप्लीटली कंसोलिडेशन ही कर दिया है। तो जब तक लेवल पे आएगा नहीं तब तक उसमें कुछ ट्रेड मेरे अकॉर्डिंग तो नहीं बन रहा है अभी। सुपर साइडवेज, सुपर सुपर का भी सुपर साइडवेज। ठीक है, रेजिस्टेंस तो काफ़ी ऊपर है, वहाँ पर अभी आया नहीं प्राइस। यहाँ पर एक प्रीवियसली यहाँ पर एक सपोर्ट था, ये ब्रेक डाउन कर गया। रीटेस्ट यहाँ पर एक बार कर चुका है, दूसरी बार वो रीटेस्ट जो उनको पूरा ही ख़राब कर चुका है, तो अब मेरे अकॉर्डिंग तो वो बचा नहीं है रीटेस्ट के लिए। एग्जैक्टली रेजिस्टेंस पे आ जाए तो बेटर। ये रीटेस्ट जोन था जो पहली ही मार्केट यहाँ पर कर चुका है ये। अभी यहाँ पर इसमें क्या ही ट्रेड करें। अखिलेश जी, नेचुरल गैस शेयर देर किया नहीं है क्या? यहाँ पर कर सकते हो सेल, अभी तक वैसे आ जाना चाहिए था इसको। देखो लॉजिकली तो बहुत देर हो गई है, कल के ऐसा ही कर दिया इसने, कल भी याद होगा वो आधे रास्ते तक आया, फिर वहां से रिटर्न ही हो गया पूरा। यहाँ पर सपोर्ट अच्छा है, बाइंग एक्सपेक्टेड थी, आ ही नहीं रहा है उस लेवल पे। यहाँ पर सेलिंग जरूर अच्छी आई, ये सेकेंड टाइम, थर्ड टाइम सेलिंग है आई थिंक, फर्स्ट सेकेंड थर्ड टाइम। एक्सपेक्टेड था डायरेक्टली आ जाएगा, इस तरह से आया नहीं, रुका हुआ है फिर भी रेजिस्टेंस एरिया पे। लेट्स होप आ जाए। थोड़ा क्वांटिटी कम रखना अब, क्योंकि लोअर लो बन नहीं रहा है इसमें। एक लो यहाँ बना है, एक लो यहाँ बना है, अब ये लोअर लो बना नहीं रहा है। ये वापस ऊपर गया तो ये पैटर्न क्रिएट करके वापस नेक्स्ट रेजिस्टेंस ही रहता चला जाएगा। बाकी अभी करंट कैंडल यूएस मार्केट की है, तो थोड़ा संभल के वेट भी कर सकते हो यूएस मार्केट की कैंडल की क्लोजिंग का। अभी आए हो तो फिर यूएस मार्केट की कैंडल क्लोज होने दो, फिर देखते हैं। बाकी काफ़ी देर से हो गया रेजिस्टेंस, मुझे लग रहा है ब्रेकआउट ही हो तो बेटर है। नहीं आ रहा सपोर्ट पे तो क्या कर सकते हैं। नीचे आ जाए तो बैठ वो भी बढ़िया है। गोल्ड सॉरी गोल्ड को अगर देखोगे तो अब ये रीटेस्ट तो काम का रहा नहीं, मुझे लगता नहीं इसको कंसिडर करना चाहिए, सही नहीं रहेगा अब, क्योंकि इसके ऊपर भी कैंडल क्लोज हो गई है फिर नीचे आ गया। ये दो लेवल ही कंसिडर करो जहाँ पर भी आ जाए प्राइस पहले। करना क्या चाह रहा है पता नहीं है। यूएस मार्केट हाफ डे है, प्रीमियम डीके करवा रहे हैं। यूएस मार्केट में हाफ डे है क्या? तो फिर ये आई थिंक 11:30 पे हमारे मार्केट के साथ साथ क्लोज हो जाएगा यूएस मार्केट भी। हाफ डे ही ओपन है, वहाँ लिखा नहीं है ऐसा कुछ। गोल्ड में ट्रेड करना ही बेवकूफ़ी है अभी। पूरे दिन भर मॉर्निंग से ऐसा ही रहा है, मॉर्निंग से देखोगे पूरा रेंज के अंदर ही है। ट्रैप कर रहे हैं ये कुछ नहीं ट्रेडर्स को, सपोर्ट या रेजिस्टेंस पे आएगा तभी कुछ प्लान करेंगे वो लोग भी, तब तक ऐसे ही घुमाते रहेंगे लग रहा है। चलो मैं इन लेवल का ही वेट कर लो मेरे अकॉर्डिंग, तो बाकी बीच में मत करो ट्रेड, बेटर रहेगा। फंस जाओगे नहीं तो अलियो। अगर मोमेंटम नहीं आया तब तो यूएस मार्केट भी ओपन हो गया, अब भी मूव नहीं होता है तो फिर तो हो गया। हाँ क्रूड ऑयल अगर थोड़ा सा पुल बैक देगा तो यहाँ बाइंग जरूर प्लान रहेगी, या फिर सीधा ऊपर चला जाए तो ऊपर रेजिस्टेंस जोन से सेलिंग प्लान करेंगे। स्टिल ऑन रेजिस्टेंस। अभी कोई नया ट्रेड नहीं है। नेचुरल गैस बाय कर लें, उसमें कोई ट्रेड नहीं चल रहा सर, वो अभी रेजिस्टेंस पर ही है। ऊपर भी एक रेजिस्टेंस है, इतना स्पेस नहीं है कि ब्रेकआउट रीटेस्ट हो। सपोर्ट पे आया नहीं तो बाइंग बनी नहीं। अगर थोड़ा पुल बैक दे यहाँ लाइक इस तरह से, तो यहाँ एक बाइंग का प्लान रखना, या फिर अगर सीधा चला जाता है ऊपर तो फिर ये रेजिस्टेंस जोन है ऊपर दोनों ही, वहाँ से सेलिंग का प्लान रखेंगे। नहीं आ रहा गोल्ड और सिल्वर है मोमेंटम। सर 59040 वही मैं कह रहा हूँ, हो सकता है डायरेक्टली चला जाए, हो सकता है थोड़ा पुल बैक आए। वैसे ब्रेकआउट हुआ है तो एक रीटेस्ट, एक बार थोड़ा सा पुल बैक के लिए आना चाहिए इसको यहाँ तक, फिर रीटेस्ट करके जाए तो ज़्यादा बेटर रहेगा मेरे अकॉर्डिंग। बाकी हो सकता है डायरेक्टली भी चला जाए। एक्सपेक्टेड वही है टारगेट 5940 के अप्रोक्स। अब वो डायरेक्टली जाएगा या फिर पुल बैक करके जाएगा, रीटेस्ट करके जाएगा, वो भी कह नहीं सकते। इतनी देर कंसोलिडेशन किया है, नहीं कंसोलिडेशन तो किया है, बट वो एग्जैक्टली लेवल को टच नहीं किया है शायद उसने। थोड़ा सा और पुल बैक आ जाए तो मेरे अकॉर्डिंग बेटर रहेगा। बाकी यूएस मार्केट ही कैंडल में जितना जाना था जा चुका है। ये देखो नेचुरल गैस भी ब्रेकआउट कर चुका है यूएस मार्केट की कैंडल पे, ये ब्रेकआउट हो गया ऑलरेडी, नहीं आया नीचे तक सपोर्ट पे। ठीक है देखते हैं, अगर ये फेक ब्रेकआउट ना नहीं हुआ, अगर ये रीटेस्ट करता है तो इसमें भी एक बाइंग का प्लान रखेंगे। तो हो गया, कैंडल तो क्लोज हो गई है ऊपर। फेक ब्रेकआउट ना हो। अगर 400 पॉइंट मूव रेजिस्टेंस से तो सेलिंग में ही था आई थिंक, गोल्ड से तो अच्छा ही मूव कर रहा है। वेयर इज द सिल्वर? गोल्ड तो मूव ही नहीं कर रहा, सिल्वर एटलीस्ट थोड़ा बहुत मूव तो कर रहा है। और नीचे आता है तो यहाँ से बाइंग कर लेना, फिर वापस जो लोग सेलिंग, अगर सेलिंग में है प्रॉफिट बुक करके थोड़ा सा और नीचे आ जाए, थोड़ा गोल्ड भी नीचे आ जाए ना, दोनों ही सपोर्ट एरिया के आसपास पहुंच जाएंगे इस तरीके से। ब्रेकआउट रिटेस्ट सक्सेसफुल हुआ तो फिर थोड़ा ऊपर तक का टारगेट रखेंगे। बीच में वो जो रेजिस्टेंस है वो रिटेस्ट के तौर पे उसको फर्स्ट टारगेट एंड देन सेकंड रेजिस्टेंस, सेकंड टारगेट। ऐसा क्या था यहाँ पर, मार्केट रुक गया, ना कोई एफईजी है ना कुछ है, फिर भी प्राइस बीच में रुका पड़ा है। उठ जाएगा क्या आज क्रूड टारगेट तक? यार देखो, मार्केट, यूएस मार्केट हाफ ही ओपन है इन द सेंस ऑफ, तो अगर जाना होगा तो 11:30 तक चला जाना चाहिए। उसके बाद वॉल्यूम वैसे भी नहीं आएगा मार्केट क्लोज होने के बाद। मार्केट आई थिंक या क्लोजिंग हाफ वे है शायद, तो जब हमारा इंडियन मार्केट क्लोज होगा तो यूएस मार्केट भी क्लोज जाएगा शायद। आज यूएस में कोई मूड नहीं है, मुझे भी लग रहा है सब हॉलीडे मना रहे होंगे। एक तो वीकेंड हो गया ना पूरा ही, कल थैंक्स गिविंग, आज फ्राइडे, फिर सैटरडे संडे। सैटरडे संडे वैसे मार्केट क्लोज रहता है, फ्राइडे को थैंक्स गिविंग, सॉरी थर्सडे को थैंक्स गिविंग बना दिया। अब एक दिन के लिए क्या ही नया ट्रेड कर रहे होंगे लोग। काफ़ी लॉन्ग वीकेंड है, मंडे को ही आएंगे लग रहा है। फॉरेक्स चार्ट देखो, फॉरेक्स का चार्ट है, 15 मिनट की कैंडल लगा रखी है, लुक एट द फॉरेक्स चार्ट। इसमें भी 15 मिनट की कैंडल गैप अप गैप डाउन हो रही है थोड़ा बहुत। नॉर्मली 15 मिनट की कैंडल फॉरेक्स में तो गैप अप गैप डाउन नहीं होती है इतना, एमसीएक्स में हो जाती है बट फॉरेक्स में नहीं होती। ये जबकि फॉरेक्स का चार्ट है capital.com का, इसमें तक कैंडल गैप अप गैप डाउन है, तो इट मीन्स वॉल्यूम कम ही है, लिक्विडिटी बहुत कम है। लिक्विडिटी कम है तो मैनिपुलेशन ज़्यादा है। तो देखोगे फॉरेक्स में ऐसा भी गया ही नहीं है, एमसीएक्स में चला गया ऊपर वो रेजिस्टेंस के, फॉरेक्स में नहीं गया है प्राइस अभी भी। फॉरेक्स में अभी भी मार्केट रेजिस्टेंस पर ही है। एमसीएक्स के चार्ट में तो लेवल के ऊपर क्लोज भी कर दिया कैंडल, फॉरेक्स में नहीं करी अभी, फॉरेक्स में स्टिल प्राइस रेजिस्टेंस पर ही है। क्रूड ऑयल फॉरेक्स में, क्रूड ऑयल तो एमसीएक्स में सही चल रहा है, फॉरेक्स थोड़ा सा ही गलत दिखा रहा है। एमसीएक्स में गाइस ध्यान रखना, फॉरेक्स में मार्केट स्टिल ऑन रेजिस्टेंस, ब्रेक ही नहीं हुआ है, कैंडल ही नहीं गई है यहाँ, तो कैंडल क्लोज भी हो गई है रेजिस्टेंस के ऊपर। क्रूड ऑयल सही है, देखो नीचे आएगा तो रीटेस्ट वापस कर सकता है, अलग बात है, बट या इट इज़ ऑन राइट ट्रैक। यहाँ देखोगे लेवल थोड़ा बहुत टच हुआ है, वहाँ तो बिल्कुल भी नहीं हुआ है। सीधा ही चला जाए, बढ़िया है। कहीं ये साइडवेज ना चला जाए, नेचुरल गैस इसी लेवल पे। या फेक ब्रेकआउट। ऑप्शन बायर हो थोड़ा ध्यान रखना, कहीं ऐसा ना हो कल की तरह साइडवेज होके फिर थीटा डीके करा दे सारा। 828 हो चुका है। एक बार यूएस मार्केट को देखें, वैसे यूएस के इंडाइसेस देखोगे तो वहां पर भी कुछ खास नहीं हो रहा है। डाउ जोन्स एंड नैस्डैक को दिन भर से देखोगे तो एक रेंज के अंदर ही चल रही है अभी। निफ्टी सही चला, निफ्टी या बैंक निफ्टी? बैंक निफ्टी गिरने में सही था ऊपर से। लग रहा है कहीं फेक ब्रेकआउट करा के वापस नीचे ना आ जाए नेचुरल गैस। फॉरेक्स स्टिल ऑन रेजिस्टेंस। बस मार्केट ओपन ही हुआ था, लग रहा है एसएल निकालने के लिए। अरे वाह, हटाओ इसको। देख रहे हो ऊपर गया वापस नीचे आ गया। देखो दो चीज हो सकती है अब, मार्केट या तो साइडवेज, या अगर नीचे नहीं आया तो मोस्ट प्रॉब्ली। हटाओ इसको भी। बाकी अब और आज कोई डेटा है नहीं, नेक्स्ट वीक देखोगे तो ओपेक की मीटिंग तो ओपेक की मीटिंग थी वो रिशेड्यूल हो गई है आई थिंक ऑलरेडी। कल फ्राइडे सैटरडे संडे मार्केट क्लोज, 1 दिसंबर नेक्स्ट मंथ स्टार्ट हो जाएगा। नेक्स्ट वीक का अगर डेटा देखोगे, 1 दिसंबर संडे, 2 दिसंबर को आईएसएम मैन्युफैक्चरिंग पीएमआई का डेटा है, गोल्ड और सिल्वर को इम्पैक्ट करता है थोड़ा बहुत। एंड उसके बाद आपका ट्यूसडे को जॉब ओपनिंग का डेटा है, गोल्ड और सिल्वर के लिए इम्पोर्टेंट। वेनेसडे को एडीपी नॉन फार्म एम्प्लॉयमेंट चेंज, सर्विस पीएमआई, क्रूड ऑयल की इन्वेंट्री और फेड के चेयरमैन की स्पीच है। थर्सडे दिसंबर 5 को आपका ओपेक जेएमएमसी की मीटिंग है, ये भी आई थिंक जो दिसंबर 5 को ऑनलाइन मीटिंग होनी थी ये भी शायद रिशेड्यूल हो गई है, ओपेक प्लस और ओपेक और जेएमएमसी की। नेचुरल गैस इन्वेंट्री ठीक है, नॉर्मली डेटा है जो नॉर्मली शेड्यूल रहते हैं कि ओपेक की मीटिंग थी वो शेड्यूल हो गई है आगे। बाकी नेक्स्ट वीक भी नॉर्मली डेटा है, कुछ खास नहीं। बाकी लाइक भी करो गाइस, जिन लोगों ने अभी तक लाइक नहीं किया फटाफट से, डोंट फॉरगेट टू लाइक द स्ट्रीम। 100 लाइक्स का टारगेट रखते हैं, 60 लाइक्स आर डन, 40 लाइक्स आर रिमेनिंग। यूएस मार्केट ओपन।
strip out NVIDIA, a lot of those names underneath the surface, the charts have completely broke down. And for me, I do wonder if they're sending a signal in the first half of next year. Don't know what that signal is yet. Growth slowdown, overvaluation, unclear, but it's worth noting.
Well, there's a lot of overhang risk here, potentially from tariffs, right, which could hit the semiconductor industry. We're going to talk more about them later. But also, you know, there was a report by Bloomberg going into the holiday that the FTC was looking into Microsoft, right? You have obviously regulatory scrutiny for Google. And I think it's not clear that those things are going away with the switch in administrations. So for the first time in a long time, I mean, listen, regulatory scrutiny of the tech giants has been talked about for years. But it's the first time in a long time that they seem to be really working their way into conversations around these stocks in a more immediate fashion and maybe putting a little bit of pressure on.
Yeah, it does. Like, it feels like we were talking about this many years ago, but still nothing has happened. But all these companies have gotten more powerful. So what if Alphabet has to strip off the Chrome browser? I mean, they're dominant in so many.
No,
You think it's a big deal?
It's a big deal.
Yeah.
It's a big deal if they have to get rid of Chrome. I mean, listen, Australia is saying that, like, if you're a teenager, you can't go on any social media.
Mm-hmm. That's a big deal.
It's a big deal. All right, let's turn now to some interesting investment plays to consider as the market rally potentially broadens beyond big tech into 2025. Thomas Hayes is with us. He's the chairman and managing member of Great Hill Capital. Tom, it's great to see you. So we were just talking about that broadening trend. If you had to pick now between large cap tech and everything else, what are you picking?
I think you follow the earnings, Julie, and thank you for having me on. What we've seen since the first quarter of this year is the Mag 7 earnings growth has decelerated from 50% earnings growth in the first quarter of this year to mid-teens. And what we're also seeing is the unmagnificent 493 have accelerated from negative aggregate earnings growth to positive, and by early next year, they will be low double digits to mid-teens. So you want to follow the earnings and the unmagnificent 493. I think that's where you're going to see things happen.
Tom, it's good to see you. It's been a little while. Look, it's a holiday shopping season. Give people some presents in terms of some stock picks. What do you like? What don't you like?
Well, I think the biggest surprise of 2025 is going to be that bonds get bid. Okay, we've seen since Scott Bessent was appointed as Treasury Secretary, and he put in his 3-3-3 plan, the 3% real GDP, budget deficits below 3%, and add 3 million barrels per day. Bonds have yields have come in. So that's an opportunity to buy a little longer out on the curve. As for stocks, as for Christmas presents, I got a perfect one for you. Actually, maybe two if we have time. I've got Etsy. Etsy has been left for dead. Etsy was a COVID darling. The stock is down 85%. But what most people don't realize, it's the third most trafficked retail website, 92 million users. And what's really interesting about that, Brian, is that they don't compete. It's not a race to the bottom on prices, because the things you can get on Etsy, you can get nowhere else. And this is a company that, while the stock is down 85%, they've been able to maintain all the users they picked up during COVID and maintain the free cash flow generation is re-accelerating. 600 million plus trailing 12 months, $1 billion buyback authorization, growth in international, growth in men's, growth in gifting, growth in loyalty programs. We like this one.
And of course, now I'm seeing Brian Sozzi next to me,
I
commencing his holiday shopping by going on Etsy.
I'm looking at digital prints. I mean, maybe you're right here, Tom. I can get a digital print of my non-existent puppy and put it right there on my desk.
You
I mean, this what Etsy's showing here is Bailey the puppy. I mean, it's great.
So, Tom, let me ask you, though, because one of the reasons that the stock has taken such a hit has been sort of concerns about that it hasn't maintained that level of specialness, right? That there are counterfeit goods on there, that it's not as curated, et cetera. What do you think about that? Do you think Etsy's been doing a good job of sort of addressing some of those concerns?
No and yes. No, they haven't been doing a good job. That's why the stock's down 85%. Yes, they recognize the mistakes they made and they're fixing it. And that's why we're seeing a re-acceleration of growth, revenues, proper initiatives, curation, and an abandonment of what they were doing, which was trying to compete with people that they don't compete with. You know, Brian, when you go out to get that picture of your puppy, you want to engrave the recipient's name on that picture, and it will make them feel special. I mean, when you receive a customized gift from a friend or family member, it's special because they took extra time. They were thoughtful about you versus just scattershotting 20 chocolate baskets from Amazon is not the most ideal situation anymore.
And now I'm going to have to get a puppy. I don't have one, but I just want a puppy. I want to take a photo of it, and I want to share it with all of you. Tom, before you came in here, Julie and I were having a chat on tech stocks and seeing some weakness in the semiconductor names. Is there any read-through, any cautionary signs for some of these stocks that were some of the favorites amongst investors now getting tossed in the trash?
Well, as it relates to NVIDIA, we saw a lot of retail investors chase into that after the split. They got some benefits, but at the end of the day, you have a stock that's priced for perfection, trading at some 40 times sales, 40 times forward earnings. A lot has to go right. And the problem is there was a period in time when NVIDIA, the stock price went up and it actually got cheaper because the multiple went down. That is no longer the case because profit margins have capped out. Revenue growth has capped out at a measly $4 billion a quarter, which is still absolutely incredible. But the key is price is what you pay, value is what you get. And at 40 times sales, as we move from training the models, which is where GPUs are the most critical and the spend for GPUs is the most important thing, to the more efficient part of the AI process, which we're slowly shifting into, which is inference. Inference can be done on more basic chips with lower energy use, lower demand, more chips, but lower quality chips. That's where the AMDs of the world and the Intels of the world are going to start to arise from the dead, and the pie is going to be split up a little bit better. So on that basis, maybe they can eke out a couple more quarters of stock growth, but where it's priced, I think it's certainly makes sense that it's consolidating and stalling a little bit and maybe even pulling back.
I want to come back to your bond call because I find that kind of interesting, Tom, because there are, of course, all this talk about tariffs maybe keeping rates, meaning that inflation is going to stay higher, meaning that rates are going to stay higher for longer. We're not going to see as many cuts. How does that factor into what you're expecting?
Well, this was the exact same thing that happened in Trump 1.0. He was elected in November of 2016. The first thing you saw was, oh, it's going to be inflationary. He's going to spend. He's the debt king or the bond king. And immediately, long end of the curve, sold off aggressively after the election and into his inauguration. And it was kind of sell the rumor, buy the news. When he actually got in, bonds had a meaningful rally in 2017. Same thing with the dollar. As soon as he was elected, it had this knee-jerk strength all the way into January, into the inauguration, and then weakness. And I think those are going to be two big surprises in 2025. Bonds get bid, yields compressed, dollar actually re-weakens. Maybe not the next few weeks, but as you look out 6 to 9 months, that will be the case. And if you look at the inflation during the Trump 1.0 administration, it was subdued. There were a lot of different conditions. I'll give you that. History does not repeat. It does rhyme. But the other thing that was odd about 2017 to 2020 is emerging markets did exceptionally well. When he was a pro-tariff, the tariff king, he ran on the tariff king, and emerging markets had really tremendous rallies as the dollar weakened. So I would be open-minded. And the other thing that people think, energy is going to do great. Energy did very poorly under the Trump administration, and so did retail stocks after initial rally into the inauguration. Retail stocks were very weak in that first year, probably on the fear of tariffs as well. So I would just be burdened by the facts and the data versus the hearsay of what might happen or perceptions about what would happen. Look at what actually happened and see where the conditions are similar and where they might be different. And I think there's tremendous opportunities in the next 12 months in doing that.
Thomas Hayes, Great Hill Capital Chairman and Managing Member. Always good to see you. Appreciate the picks. Appreciate the puppy suggestion. We'll talk to you soon.
Thanks so much, Brian. Thanks, Julie.
All right, now time for some of today's trending tickers. Scan the QR below to track the best and worst performing stocks of the session. What Yahoo finds is trending tickers page. We're honing in on the chip sector as those stocks get a bit of a boost today. On a report by Bloomberg, the U.S. chip
News when you want it with Bloomberg News Now. I'm Nathan Hager. The final trading day of the month of November is underway, and it's going to be a short one on this Black Friday with markets closing at 1 p.m. Wall Street time for Black Friday. 2 p.m. for the Treasury market. But that was the sound of the opening bell from the floor of the New York Stock Exchange. At the open, the S&P 500 is up 0.1%, trading above 6,000. The Dow Jones Industrial Average is higher by 0.2% at about 44,800. And the NASDAQ Composite is higher by 0.1%, getting close to 19,100. All this adding to a 5% gain for the S&P 500 so far this month. 26%. That's how high the rally has been for all of 2024. Christina Hooper, Chief Global Market Strategist at Invesco, says if Donald Trump's first election win from 2016 is any guide, stocks have even more room to run.
What we saw there was a relatively strong rally. It peaked in mid-December, but we still finished the year with significant gains from the starting period, which I would view as Election Day. So I don't think we'll see a dissimilar scenario this time. Certainly, the idea of deregulation has unleashed some animal spirits in markets.
Christina Hooper with Invesco. Meantime, we're getting more word of possible Wall Street influence on President-elect Trump's transition. This is from the New York Post, reporting J.P. Morgan Chase CEO Jamie Dimon has been speaking with President-elect Trump in recent months through secret back channels, helping him hammer out policies on everything from cutting government spending to banking deregulation, taxes, and trade. 4 sources close to the Trump transition tell the New York Post Dimon has been acting as a sounding board for the incoming president for months. Mixed messaging, though, about some of President-elect Trump's policies has led to currency volatility. This week, Trump said Mexican President Claudia Sheinbaum agreed to shut down the border in their call Wednesday. Now, Sheinbaum says she didn't go that far, but she did say a 25% tariff that Trump has threatened would be devastating for the U.S. economy. Right now, the Mexican peso is strengthening against the dollar at 20.32 this morning. Sheinbaum said with cooperation, there will be no tariffs. As for markets outside Wall Street, they're busy this morning.
I can't wait. Probably get my son an iPhone, some stuff from furniture store. Finish my house.
That man in Baltimore is one of the millions hitting the malls on this Black Friday. Bloomberg Intelligence senior retail analyst Poonam Goyal says stores are counting on that enthusiasm.
If this weekend proves to be as successful as it should be, that means retailers can continue to execute on their plan all the way through holiday, especially because we have fewer shopping days this year. If not, more discounts and more margin compression.
Poonam Goyal of Bloomberg Intelligence says the National Retail Federation expects about 131 million Americans to head to the stores today alone. Many of them are offering doorbusters, including $10 gift cards at Macy's and a Taylor Swift Eras Tour book that is only available in-store today at Target. In the Middle East, Israel's army says it is maintaining a presence in southern Lebanon to ensure Israel's safety. Both countries are accusing the other of violating the ceasefire with Hezbollah, though the deal does appear to be holding. Lebanon Economy and Trade Minister Amin Salam says it offers an opportunity for peace.
To save the country from further devastation, from further escalation into this war that Lebanon has paid a very, very heavy price for.
Lebanon Economy and Trade Minister Amin Salam. Russia's defense minister is holding talks today with his North Korean counterpart in Pyongyang. That's after Russian President Vladimir Putin threatened to hit decision-making centers in Ukraine's capital, Kiev, in retaliation for strikes with Western weapons. Bloomberg's Greg Sullivan covers Russia from Dubai.
Russia has been targeting Kyiv throughout the war with drone and missile barrages. This month alone, we've seen some of the biggest drone and missile barrages since the war started. They've been quite brutal, targeting civilian infrastructure, energy. But what he's talking about here is using this new kind of missile. And he also warned about the scale of the damage that such a missile could cause.
Bloomberg's Greg Sullivan. Meantime, the UK's top spy, MI6 chief Richard Moore, is warning if the US and Europe stop supporting Ukraine, China will notice, North Korea will be emboldened, and Iran would become still more dangerous. Back on Wall Street, chip equipment stocks are getting a boost after Bloomberg News reported that further U.S. curbs on chip sales to China might not be as tough as originally thought. Right now, Applied Materials is higher by more than 2%. So is KLA. Lam Research is higher by 3% at the open. The biggest downside mover this morning, Applied Therapeutics. Those shares are down 75% at the open. Bloomberg's Kriti Gupta tells us why.
The FDA is rejecting their new drug application. RBC
CIBC Capital Markets, of course, downgrading the stock to a sector perform from outperform, saying the rejection was disappointing.
That's Bloomberg's Kriti Gupta. That drug was for a rare genetic disorder in nursing infants. That's news when you want it with Bloomberg News Now. I'm Nathan Hager, and this is Bloomberg.
Wings, nuggets, eggs, no matter the form, Americans love their chicken.
The chicken industry is one of the largest and most complex supply chains that America has. These birds are big business, and we wanted to get to the bottom of it.
Welcome to Beat Capitalism, brought to you by Odd Lots. In this special 3-part series from Bloomberg Podcast, we are going to examine some of the thorniest issues facing the U.S. economy through the medium of this humble bird. Examine. Get it?
So there's going to be chicken puns.
There are definitely going to be chicken puns. We're going to be asking why the chicken industry has evolved the way that it has, and what does it say about the American economy that so many consumers are flocking to poultry? There's another one for you.
Listen to Beat Capitalism from Odd Lots. Out now on Apple Podcasts, Spotify, or wherever you get your podcasts.
Year on year, apparel and grocery, the only categories that are outpacing electronics in terms of growth. Now, we've been talking to a number of shoppers to gauge consumer sentiment. The data at least shows that sentiment is improving with inflation moderating, lower interest rates as well, but increasingly consumers telling us that they are shopping, but they're also shopping on their credit cards as well as buy now, pay later. An interesting stat for you here from Adobe. Buy now, pay later payments driving $5.7 billion in online spending in the first 24 days of the holiday shopping season. Remember, it's a little more extended this year, so we're talking from November 1st through the 24th, and that's a 4% jump compared to where things were last year.
Pandemic, but when you have a once-in-a-century pandemic like that, and it up business activity, it made a lot of the trades tougher to call because there were certain strategies where you would use, for instance, if this happened, you'd buy this, or only, there would be 100% track records for certain thresholds where, you wouldn't see the S&P 500 hit another low, but there were a lot of things they had to throw that playbook out. And I'm sure, Paul, in your career with a lot of things you saw, especially if you thought about the housing crisis, or I know you were on the floor a couple weeks before the 87 crash.
Oh, yeah.
Things were very different when you think about pre-COVID versus now. So especially on the macro side, if you're looking at the Citi Economic Surprise Index, particularly for the U.S., that's continuing to outpace those expectations. And even if you're looking at fourth quarter GDP growth for the Atlanta Fed GDP Now model, that's above 2.5%. So still you're continuing to see strong consumer, but also on the corporate side of things for particularly the stock market, that's continued to power things higher. And Gina Martin Adams always talks about that too. So those have been some key indicators, Caroline, why a lot of these things just haven't panned out for some of these banks.
And some of it used to be, I'm not going to say used to be, but some of the
biggest profit generators were from the macro traders.
They were.
At the sell side firms. And then the hedge funds in particular, you're a macro trader. That just meant you were smarter than everybody else. I didn't think about equities or bonds. I think about the macro picture, everything. And those are the guys and the gals that made huge amounts of money. But I've heard that, again, the performance has not been there.
No, they haven't been.
I wonder if the funds are pulling out. I mean, the fund flows out of those strategies.
Oh, so that's a key thing too, because even the S&P 500 right now, I mean, it's on pace for over 20% gain this year. I mean, that's the first time you'd see back-to-back gains of that type of magnitude since the late 1990s. And we saw that happen twice during the dot-com bubble, but continuing to see even going into next year. It seems like every year when the calendar turns, there wants to be this kind of doom and gloom. I know a lot of people are pointing at valuations, say like the S&P 500 right now trading around 22 times forward earnings on a blended basis if you're looking in the terminal. If you look at the average over the last decade, it's around 18. But even if you strip out the Magnificent Seven, it's still around 20. But a lot of traders I speak with, they'll point to how valuations, especially if you look over the last 10 years, or even if you want to look at sentiment, that stuff can stay kind of frothy and grow on for weeks, months, even potentially years there. So they tend to not like to use that for trading strategies right now.
What's interesting, I mean, I think it's Coalition Greenwich, which has been putting together a lot of this data around the moon music for rates traders and for Forex. A little bit more optimism if you're trading foreign exchange, but rates is painful in large part because of electronification here as well. I mean, things look very different 20 years ago because there were fewer market makers and most people were still picking up a phone.
That's a good point. And it's just a different dynamic of how interconnected the global economy is, as well as technology when you're trying to make some of these trades too. And so when you're looking at kind of the Forex market versus the rates markets too, I mean, especially because the conundrum of when you're seeing yields rise, whether that's, okay, was that on a strengthening economy or is that trying to tell you something about Federal Reserve policy? It's make it a lot more of a conundrum coming out of COVID too, Caroline.
So what's the smart trade for 2025? Is there such a thing? Or am I just buying NVIDIA?
Right, I know, because especially with that, I mean, NVIDIA, the third quarter didn't do as well as it had in prior quarters, but still the best stock in the S&P 500, not over even just the last year, but the last 2 years. But something that people are watching, if you look at the ETF that tracks semiconductor companies and chip makers, SMH, that's important because there's a level around 240. It's trading around 242 right now, but the 240 is kind of more of a broad support measure that they're looking at. So you kind of want to look at that as a gauge, not even just for semiconductor companies, but also kind of more broadly for the stock market to see what that could mean, because not surprisingly, the big weighting that chip makers have.
We're going into software. 500, that's what I hear. It's exactly. Software is going to be the new trend.
Right. And so that's a big thing too, because it's beyond even just some of the big AI type players there. And but when I'm speaking with a lot of portfolio managers, that actually is a space. Like Marianne Bartels, she's on Bloomberg a lot too, but software companies is one of the ones that she continues to plow money into.
All right, Jess, ESPN.com, Texas 5.5 point favorite. Put a little action down there?
I mean, I was not able to get a ticket, unfortunately. We were talking about how expensive those. I think the average purchase price was over $1,000 for this
experiential.
Right.
Experiential.
That's what the kids are doing. Texas at Texas A&M. College Station, Texas.
That's right. It's going to be great. I'll watch it here.
Exactly. Jessman, thank you so much. We appreciate it. All right, coming up, it's not too late to get your Christmas tree. I haven't even thought about Christmas tree.
No, of course it's not too late. It's not December.
Exactly. I get my Christmas tree on my birthday. That's how we do it. We'll talk to National Tree Company CEO Chris Butler about consumer demand for holiday decor and how all the talk about tariffs is affecting the outlook. That's a good point. You think about all the stuff you put up.
So much
everything
of my stuff
made
is Chinese.
Exactly.
Every light.
I mean, people are going to rebel here if we get these tariffs the way some folks are talking about them. I mean, because it's affecting everything that people buy. So we'll have to see. We'll talk Christmas trees coming up. This is Bloomberg.
Compassion guided Bigrim as Thailand's first European pharmaceutical company. From fighting cholera to contributing to the country's healthcare.
This is the time we're going to spend the money. Because once you get the consumer's attention to come there, they'll say, that was fun. That was fun for the family, mom and dad. We're going to come again and again and again. So I look for more money being spent on experiential opportunities for our consumers, because that's what we want to see more than ever. And our surveys show time and time again, consumers want not just sales, but experiences.
Naveen, really interesting story on the Yahoo Finance homepage from our senior reporter, Brooke DePalmer, looking at the state of department stores. And she flags that Macy's is trying to close 150 stores by 2026. I mean, how much pressure are those store closures by Macy's and, frankly, other department stores? How much pressure is that putting on the space?
That's probably the biggest thing to watch in the news today. We spent a lot of time studying the mall sector. And for us, we look at the mall sector as whether it's 150 Macy's or more, we don't know right now. But what we do know is that that Macy's store may be the last piece that keeps that mall alive in a secondary or tertiary city. And so if that Macy's folds, that may be the last domino to have that mall start to close off, or it may transition into something other than a mall. So if I'm watching one sector more closely than others, I'm watching that mall sector. Look at Nordstrom's, for example. I think they've taken their focus off their name brand, moved to Nordstrom Rack. They now, at Nordstrom Rack, are competing with whom? TJX, Ross, and the value-conscious consumer. So the mall sector in particular, the Macy's of the world, if you will, the department stores, I think that's the weakest sector of all in our economy. And I think that sector will probably feel some more pain in 26 and 25.
Naveen Jaggi, JLL, America's president of retail. Good to see you. Have a good weekend.
Thank you.
Yahoo Finance spoke with several CEOs and investing pros this week about the potential impact of President-elect Trump's proposed tariffs. Take a listen. I know it's negotiation. I know,
we shouldn't take it all that seriously. But on the other hand, broad-based tariffs, they're just a negative, what I call a negative supply shock. They're a tax, so they raise inflation and they diminish growth. Just exactly, the wrong policies.
Look what the NRF put out, that it could impact consumer spending by nearly $80 billion and require apparel companies to raise their prices by a double-digit amount. It is a headwind. It's not good for the consumer because it causes prices to be raised, and also for many, the ability to garner that expertise in manufacturing goods.
Apparel is going to be hit the hardest. Most apparel is made in China, or a lot of it for that matter. Some companies have moved supply chains away from China, but it's kind of hard to avoid China.
Well, JCPenney is one of the retailers that's shifting its supply chain in anticipation of higher costs from tariffs. Here's what CEO Mark Rosen told us this week.
About 50% of our apparel is private label, meaning that we source that. And so we decide the country of origin where it's made. We've moved a lot of our goods to what we believe are going to be lower tariff countries. I am concerned, however, because there are certain goods that can only be made in countries like China.
And Trump's proposed tariffs on Mexico could spell major trouble for U.S. automakers with plants in the country such as General Motors and Ford. Here's what RBC Capital Markets analyst Tom Narian told us about the possible impact.
The one that's the most hit would be General Motors, GM. They have the most production capacity in Mexico. If you did the math on a 25% increase on tariffs there, also they're just the most U.S. exposed, it would theoretically result in a down 8% on estimates. It's going to continue to pressure these names. We would advise folks to look past it because we don't think will actually happen. But unfortunately, it will just pressure stocks until we get some clarity.
Yeah, I don't think you can look past it. I mean, if you're at home trying to think about how much a General Motors or Ford or even a Gap or an Abercrombie can earn, I mean, you have to start at least playing around what an impact these tariffs could have on these companies.
Yeah,
I mean, this is real stuff.
Yeah, S&P Global was out with a report just this morning saying that European and American car makers, it could cost them 17% of their combined annual core profits. And that's in the event that the U.S. does impose tariffs on Europe, Mexico, and Canada. So, the various analysts out there are modeling out scenarios in case. But that's what's so difficult about this current environment is, we've talked to plenty of people who are assuming this is a negotiating tactic. But there's danger in that assumption.
Perhaps it's not. I was talking to earlier in the week with the Abercrombie & Fitch CEO, Fran Harris. She was talking about earnings. About 9%, I believe, of their supply chain is still in China. Now, if there's any positive thing here, it's that businesses like that moved a lot of their supply chain out of China in the first administration, but there's still a chunk of it there.
Yeah, I mean, we heard the headline recently that Steve Madden is going to work on moving its supply chain because it's one of those retailers that kept a lot of it there. The issue is, yes, you would avoid the worst of the tariffs, but there's also talk about that universal basic tariff of 5%. So it wouldn't be nothing. It would just be mitigated.
Should we be buying our stuff now? I mean, there was that journal article. I don't think we're there yet.
I mean, you can't buy everything now. You don't know what you're going to need.
I don't know what we're going to need. All right, well, coming up, as consumers are on the lookout for deals. We're looking at where they're spending with intention as we close out the year.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Tech shopping company Rakuten has turned cash back into a business model worth billions. The company's latest data shows that in the fourth quarter, consumers are spending with intent. Sales are up 4% year over year, with the average purchase size 9% higher year over year. Joining us now in studio to break down these findings and some of the retailers that could be seeing a boost this holiday season, Julie Van Ullen, Rakuten Rewards Chief Revenue Officer. Thanks for being here, Julie.
Thanks for having me.
So what does shopping with intent mean?
It's a great question, and I think we always follow the data, right? And the data is showing us not just today, but today, yesterday, and over the last couple of weeks, what we've been seeing effectively since the election is that consumers are browsing less, but buying more. So when we look at our platform, we see decreased browsing, but we see increased sales, and probably what's driving that actually is the increased average order value. So consumers are clearly being very planful, very thoughtful around what they're going to buy, and then they just simply pull that trigger.
So maybe they're doing more research ahead of time, and then coming to make the purchase. Is that what the implication is?
That is what it seems to us. And I think that's very much in line with the fact that this is a season of value-conscious shopper, one who feels a certain amount of turbulence in the economic sphere. And so, of course, they're going to be out there making their lists, researching, and then waiting for that moment, that permission to buy, if you will, when it feels like they're getting the value that they're looking for.
Where are they shopping the most? What categories?
Interestingly, what we've noticed is a trend that I think that we're calling first me, then you. which is that a lot of shoppers have been out there, yesterday included, and even as of this morning, as I monitor the categorical data, they're out there buying things for themselves. They're buying for non-traditional gift-giving categories like pet supplies or restaurants, even, like CVS, Walgreens,
Self-gifting.
They're self-gifting, exactly. So what we're really looking for is when is that going to potentially turn over to more of giftable moments today, through the weekend, Cyber Monday. But again, it's very much in line with the consumer who's really thinking about, hey, this is the time of year where I know that I can get value. Let me get value on the things that I need for my family and for myself before I turn to think about the gifts that I'll buy.
Yeah, like a stock up situation if something is going to be on sale. That's really interesting. I mean, speaking for myself, like my email inbox is inundated with offers, but it's not offers for gifts for other people. It's because I signed up for too many lists, and so now they're, it's stuff that's targeted at me that I would want to buy. But what is sort of the takeaway for the retailers then? What are some of the lessons maybe they can learn from what we're seeing this holiday season?
I think there's a couple of things happening that they can learn from that are pretty different than consumer behavior last year. I think the first one is that there was a stark difference between the week before the election and the week after the election in terms of shopping behavior. We saw a 57% increase in shopping happening the week after the election versus the week before the election. And that has kind of continued in terms of the uplift in shopping trips happening in early Black Friday events. And that's been happening even before many retailers and brands entered into their big promotional periods, which I think tells them something, which is that the consumer is willing to pull the trigger before they even believe that they're going to maybe get the best value, because there is this kind of turbulence and uncertainty, and they're willing to pull that trigger if they get something that they deem that permission to buy, whether that's cash back or free shipping or something. I think the other thing is really what we're seeing is a real kind of democratization of where consumers are buying their brands, because there's more brand direct activity happening, whether that's in the consumer electronics sphere or in department stores. You see a lot of brands directly elevating their promotions beyond potentially what those traditional retailers are doing or are able to do, and are then pulling a lot of the shopper behavior their way during a particularly value-conscious time. So both of those points, I think, really yield retailers needing to think about what are their levers that they can generate in order to provide the value that the consumers are looking for.
Clearly, you have an engaged audience that is out there self-buying. As you look to next year, how do you continue to get that audience to come back all the time? Like, where are you making some of your big tech investments?
From a Rakuten standpoint, we are always just delivering the most value that we can to the shopper. We intend and live to be the most rewarding place to shop, and we partner directly with retailers and brands in order to deliver that in a way that's also economically feasible to those retailers and brands, because it's really not just about promotions or discounts. It's about those stackable events that give a consumer an ability to feel that they've won. And sometimes that doesn't mean discounts, say with luxury, for example, who, that's a dirty word, discount, of course, have started to work with tech platforms like ours in order to give that additional permission to a buyer without having to discount or use things like coupons.
I think she's inspiring me to buy my gift. Like, I'm just gonna out and buy stuff today, maybe. I'm inspired.
I know. Well, we've been talking about buying for the
past
hour and a half.
I'm just gonna buy something. All right. Well, Julie.
Power of suggestion.
True. Julie Van Allen, Chief Revenue Officer at Rakuten Rewards. Good to see you. Happy holidays.
You as well. Thank you.
All right. Coming up, we're talking to Bilt Rewards CEO Anchor Jane. Stick with us.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free child alerts to the rescue so you cancel on time from Yahoo Mail.
Taking a look at the state of the housing market, this week's Case-Shiller National Home Price Index showed home prices remain at record highs. And data on new home sales for October came in lower by 17% month over month. One company is offering some new tools to help first-time home buyers. Fintech startup Built Rewards wants to reward consumers for purchasing a home in this market. You may remember its partnership with Wells Fargo, launched in 2022, that allowed users to pay their rent via credit card. The company now has a valuation of about $3.25 billion after closing its latest funding round earlier this year. Let's bring in Anchor Jane, Built founder and CEO, for more. Anchor, good to see you here. Take us through some of the activity you're seeing on the platform. So many different dynamics happening in the housing market. Price is still high. A lot of folks still having trouble finding their first home. What are you seeing right now?
Yeah, it's fascinating, Brian. So just to give you a quick step back, as you know, so Built is the payments and rewards platform today for over 70% of the top 100 rental companies in the country. And so we see all payment volume for rent today, whether it's done by check, ACH, debit, credit. And what's interesting is, I mean, first of all, rent price growth has slowed. So that is a somewhat positive sign for renters looking for a place today, although the prices themselves still are at record highs. And so what we have been looking at is how do you now help people go from renting to home ownership, given that, look, interest rates are at least seeming to be flat for now and potentially coming down a little bit. And this starts to open up that conversation of, okay, what does it look like for me to buy my first home? And can we get that surge back in the market?
So how does what you do help them get to that level?
So it's interesting, right? The first step is actually knowing what you can afford. And if you've looked at the home search tools today, it's quite complicated. I mean, you go from paying, say, $2,500, $3,000 a month in rent, and then you look at home listings and it's $500,000, $600,000. And the question is, what does that mean for me and what I can afford? And so we worked with Fannie, Freddie, FHA, the different home groups, and we created the first all-in search tool where you just say, I can afford this much a month all in, and we will do the calculations for you automatically, looking at mortgage rates you qualify for, interest payments, taxes in the local city, insurance costs, and then show you homes that you are qualified to buy today based on an all-in monthly price. And then in the spirit of kind of Built, when you're ready to buy, we've now launched the first program that actually rewards you on that home purchase as well. So for the first time when you buy a home, you'll now get 1 point for every $2, right? So that's 1 airline mile, 1 hotel point for every $2, uncapped. So a $500,000 home now gets you 250,000 points. So right when you close, you now even have enough, instead of being down on spending power, you actually have points to help you take your family and travel around the world or invest in something else.
Anchor, what could the incoming Trump administration do to make it easier to own a home in this country?
I mean, look, obviously there's interest rates are the single biggest driver right now of affordability for these customers, as well as the down payment. And so finding more ways to give people down payment assistance, I think, is a huge thing. One of the things our search tool does is it actually automatically searches for first-time homebuyer programs that you might be eligible for. And I think a lot of folks don't know that Fannie, Freddie, FHA offer programs that are something like 3%, 5% down that can help reduce that barrier to go from renting to home ownership. But I think there's a lot of opportunity there. And then, look, as interest rates change and the mortgages become, more affordable, the buying power goes up for our consumers. And so giving that, I think we'll see some of that over the next 12 months, at least from what President Trump is saying.
Ankur, I'm curious about your business and how it works. Like, what's the business model? How do you guys make money?
Such a great question. People seem to mistakenly think that Built is a credit card company. That is not what we are. So less than 15% of our members actually have a co-brand credit card. What we have built over the last few years is the largest housing payments business. So if you live at a Related apartment, a Brookfield apartment, an Avalon Bay apartment, a Greystar apartment, you are using Built to process those payments, whether you pay by debit, credit, check, or ACH. And so just like the many multi-billion-dollar companies in payments before us, Built has now won the largest market share in housing payments. And we've done that by actually rewarding customers by giving part of that margin back. And now as we grow, we've launched our neighborhood benefits program, which helps connect local residents and apartment and condo buildings with local restaurants, grocery stores, coffee shops, fitness studios. And so merchants are now able to tap into local customers and reward them through Built for choosing to spend locally. And obviously, we take a piece of that as well.
All right, Ankur, thank you so much. Appreciate it. Ankur Jain is CEO and founder of Built Rewards.
Nice to see you. Thanks, guys.
Thanks. Coming up, we'll check in on the Thanksgiving weekend box office. Moana 2 taking theaters by storm. That's next on Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
If investors have learned anything from retail earnings season this month, it's that e-commerce shopping remains super hot. So is anyone even out in the stores this Black Friday? Yahoo Finance's Kiko Fujita is on the scene at a mall in Glendale, California. Kiko, good to see you here. I know you already picked up my holiday season gift. I was looking for a new watch.
I'm in your favorite place, Brian, the mall, right? I mean, the mall here at the Glendale Galleria doesn't officially open for several more hours, but you've got a number of stores opening very early. Macy's behind me opening at 6 a.m. here on the West Coast. You've also got Dick's Sporting Goods, Target, and even Bath & Body Works opening early to try and lure in those consumers with some steep discounts. Here at the Glendale Galleria, they are expecting anywhere from 90 to 100,000 people coming through the doors here today alone. Now, they are expecting about a 4% bump in terms of traffic this year, and that's pretty much in line with what we have seen nationally. The National Retail Federation estimating Americans to shell out $980 billion this holiday season. That marks about a 3.5% bump year on year. It would mark the slowest rate of growth over the last 6 years, even as we've seen consumer sentiment slowly improve as a result of lower interest rates as well as moderating inflation. Now, retailers have offered mixed forecasts going into the holiday shopping season. Of course, you had Target lowering their outlook for the season after posting flat sales. And then Walmart raised its outlook, but we did hear from the CFO saying that he expected pocketbooks to continue to be stretched thin here. Moving forward, retailers have increased incentive to try and lure these consumers in with very steep discounts, largely because we have a shortened holiday season. Black Friday falling later in the holiday season this year, later in November. That gives retailers about 5 days less in terms of giving consumers that time to shop. The latest data from Adobe Analytics certainly points to the fact that some of these discounts are working, with American consumers spending $77.4 billion between November 1st and the 24th. That is a 9.6 bump year on year and higher than what was initially forecast. Shoppers we've been talking to ahead of Black Friday have been telling us, yes, they are seeking out discounts, but they're also turning to their credit cards and also buy now, pay later to pay for some of those discounts. Take a listen.
I'm just trying to budget and save money. You know, hours are getting cut a little bit, so trying to save and budget. So I'm just trying to use my Afterpay. I'll just pay it weekly or just pay it monthly. It helps a lot.
Adobe says buy now, pay later payments have driven $5.7 billion in online spending in the first 24 days of November. That is a near 4% jump from last year. And e-commerce, as you mentioned, expected to be a big part of this particular season here. Mobile shopping expected to hit records this season with $128.1 billion expected to be spent through mobile devices this year. That is 50% more than spending on desktops. In fact, half of all online spending coming through from mobile devices so far this holiday season. Guys, I know I have been seeing those discounts coming through, those alerts coming through online. I've spent a lot the last week, even before Black Friday. I'm not sure about if you guys have started your holiday shopping.
I've bought some things for myself, Akiko, but I haven't yet really started my holiday shopping in earnest. What I am glad is, like right now, it's nice and peaceful there. It feels like we are well past the days of like when a store would open at 6 a.m. and people would pile in there and fight each other for things. I hope we're past those days. It looks like it there.
I still love doing that.
Of course you do. All right, Akiko, we will catch up with you throughout the show. Thank you very much.
I didn't see it, but I am going to see on December 20th Mufasa, the Lion King, really channeling my nostalgia and love for the Lion King. I love the Lion King. I'm a huge Lion King guy.
Oh, I didn't know you were
I love Lion King.
Guy.
Like,
wow.
When I saw this trailer hit, I'm like, I need to see Mufasa. Like,
now, I really liked Moana 1, but I don't know that I'm going to see Moana 2 in the theater. I might wait for it to hit my Disney Plus. But if you look at the numbers that Moana has, of course I have Disney Plus. If you look at, he makes a note of it on his little paper. If you look at the numbers that Moana 2 has done, $13.8 million in preview screenings on Tuesday. So that is the highest ever on that day for Disney and really has dwarfed some of the other ones. Inside Out 2 was $13 million. So it's expected to do big numbers here. It looks like $135 to $145 million over the first 5 days.
Yeah, and this is all very important because if you go to our platform, type in DIS, of course, that is the Disney ticker price. Disney shares are up 22% in the past month. And we've been talking to Disney CFO Hugh Johnson the past couple quarters, and he said, guys, look at this content slate we have coming. You take that content slate, bolt it on the fact that this company has cut billions in dollars of costs out of its model, and suddenly you have a lot more profitable Disney. And it really might be a much more profitable Disney next year or in 2025 than maybe Wall Street expects.
Gladiator, by the way, Paramount.
Paramount.
But people won't indefinitely have an opportunity to invest in that one, right? Because it's going private. So that, but if you're tracking who's making what.
Do you have a big holiday? Any weekend holiday plans? Black Friday? Pulling the trigger or anything?
I don't know yet.
Yeah.
I'm not sure. We were talking about doing some volunteering this weekend.
Oh, that's very nice.
Yeah.
Yeah, that's good.
But we haven't. We got to figure out.
Well, hey,
What about you?
You know where I work, and you know, I'm taking gifts. I'm taking gifts. You know where I sit,
could.
I'm taking Julie Hyman, you're the best. All right, coming up, stay with Yahoo Finance for full coverage on the most important market trades impacting your portfolio. Have a wonderful weekend.
नितिन राजपूत जी 5901 से जो क्रूड ऑयल बाई किया 5901 से 5901 से तो कोई बाइंग ही नहीं थी, बाइंग क्यों डाल दी वहां पे? रेजिस्टेंस पे कौन बाई करता है? नेचुरल गैस देखोगे वापस आ गया नीचे। फॉरेक्स में रेजिस्टेंस पे था, फेक ब्रेकआउट किया यूएस मार्केट की ओपनिंग पे। लुक एट दिस, एग्जैक्टली ऑन द परफेक्ट लेवल, और ये आई थिंक सपोर्ट पे भी पहुंचने वाला है, टारगेट पे पहुंचने वाला है। एमसीएक्स में देखोगे तो पहले एसएल उड़ाया, फिर वापस नीचे आया। एक्सपेक्टेड रहेगा आ जाए टारगेट तक। क्रूड ऑयल भी वैसा लग रहा है, वॉल्यूम भी डाउन है। पॉसिबिलिटी है या तो देखो ये डायरेक्टली चला जाना चाहिए, डायरेक्टली नहीं गया तो पुल बैक आएगा इस पर्पल ब्लू कलर के बॉक्स तक, और फिर एक मोमेंटम अपसाइड एक्सपेक्टेड रहेगा। याद रखना यूएस मार्केट भी हमारे मार्केट के साथ ही क्लोज हो जाएगा, बिकॉज वहाँ पर भी अर्ली क्लोजिंग है। किसी की कोई ओपन पोजीशन है तो थोड़ा संभाल के। हाँ, फॉरेक्स चार्ट भी यूज कर सकते हो, बेटर रहेगा, कोई सुनिए। गोल्ड और सिल्वर को देखोगे तो गोल्ड तो बिल्कुल ही साइडवेज, सिल्वर थोड़ा बहुत नीचे आया था, एग्जैक्टली सपोर्ट पे वापस नहीं आया। लेट्स सी अब ये नीचे आता है या फिर यहीं पर साइडवेज चला जाता है क्रूड नेचुरल गैस। ब्रेकआउट जरूर हुआ, कैंडल ऊपर क्लोज जरूर हुई, बट रीटेस्ट कोई हुआ नहीं तो बाइंग कर नहीं सकते थे। फेक ब्रेकआउट करके नीचे ही आ गया वापस। नेचुरल गैस और क्रूड ऑयल में फॉरेक्स ही लगाएं, ऐसा ही लग रहा है मुझे। दिसंबर में यही लगाना पड़ेगा फॉरेक्स, बिकॉज जब जब मार्केट थोड़ा क्लोजिंग में है या फिर हॉलीडे पे चल रहे हैं ट्रेडर्स यूएस के, ये फॉरेक्स वाले ही थोड़ा ज़्यादा अच्छा मूव करेंगे। एमसीएक्स वाले फालतू का अननेसेसरी मोमेंटम करा दे रहे हैं। अभी कैंडल भी देखोगे ऐसा नहीं कोई और कैंडल है, यूएस मार्केट की ओपनिंग कैंडल है, जानबूझ के कैंडल बनाई है। कोई हमारा लाइव तो नहीं देख रहा, पता लगा हमारे एसएल उड़ाने आया था फिर नीचे आ गया। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम जिन लोगों ने लाइक नहीं किया है। 9:30 हो गया है, थोड़ा बहुत और वॉल्यूम एक्सपेक्ट करेंगे 10:30 तक, 1 घंटा और, इसके बाद 4 कैंडल। बाकी वीकेंड है, एंजॉय द वीकेंड। वॉल्यूम थोड़ा सा कम है, यस। नेचुरल गैस थोड़ा सॉरी क्रूड ऑयल में थोड़ा सा डाउन ही है। सलीम जी प्लीज़ ये व्हाट्सएप पे मत पूछा करिए, व्हाट्सएप पे मैं रिप्लाई नहीं करता हूँ। लाइव मार्केट में पूछिए, लाइव मार्केट पे लेवल पे ट्रेड लीजिए। एसएल जा रहा है तो फिर उसमें क्या कर सकते हैं, एसएल जा रहा है तो जा रहा है, टारगेट हिट हो रहा है तो हिट हो रहा है। लेवल्स आर लेवल्स, रिस्क रिवॉर्ड का फोकस रखिए। मंडे से कैपिटल डॉट इन इन नेचुरल गैस, अच्छा चार्ट कैपिटल डॉट इन का, कैपिटल डॉट इन का मुझे भी लग रहा है शायद कैपिटल डॉट इन का ही चार्ट यूज़ करना होगा। दिसंबर मंथ में ना थोड़ा सा फॉरेक्स का ही चार्ट यूज़ करते हैं। सीएक्स के क्या लिखा हुआ है, चलते ट्रेड मिस हो जाता है, समझा नहीं। रनिंग ट्रेड मिस हो जाता है। मार्केट, हाँ ये मुझे पता नहीं, वैसे फॉरेक्स मार्केट तो 330 पे क्लोज होना चाहिए। अब 330 पे एग्जैक्टली क्लोज होगा या फिर 1130 या 1155 पे हमारे मार्केट के साथ क्लोज हो जाएगा, देखना पड़ेगा, बिकॉज यूएस मार्केट तो क्लोज जाएगा। सीएक्स में आपके परफेक्ट लेवल पे नहीं आता, इसलिए मिस हो जाता है, फॉरेक्स के लेवल से रिवर्स हो जाता है। हाँ वो भी हो जाता है कभी कभी, कभी कभी ऐसे एसएल भी निकल जाता है फिर रिवर्स आ जाता है। वही बैंक निफ्टी ऐसा हाल हो रखा है नेचुरल गैस का आजकल। ठीक है, ऑलमोस्ट पहुंचने वाला है अपने टारगेट जोन तक 3.23 के आसपास। यहाँ कहीं हम एक टारगेट एक्सपेक्ट करेंगे, थोड़ा बहुत यहाँ पर रुके, अगर रुकता है तो, अगर यहाँ नहीं रुका तो फिर ये गिरता ही चला जाएगा। फोर लाइक्स डन, कम ऑन गाइस, लाइक करते रहो। नेचुरल गैस का बोलो शर्मा जी, नेचुरल गैस का था उसमें एसएल चला गया, क्रूड ऑयल का रुका हुआ है। फॉरेक्स में किसने लिया होगा तो बात अलग है, उनका रनिंग होगा, अभी फॉरेक्स में एसएल नहीं गया है। कैपिटल डॉट कॉम के ब्रोकर में नहीं गया, बाकी ब्रोकर का मुझे नहीं पता। फिर से री एंट्री कर ली थी, बढ़िया है। किसी ने अगर फिर से री एंट्री कर दी थी अगर नेचुरल गैस में तो बढ़िया ही है। नीचे जो ये 276 के आसपास का एक टारगेट रख सकते हो। हाँ। पूरे दिन का ट्रेड मतलब मैं समझा नहीं, बैंक निफ्टी निफ्टी भी कह रहे हो क्या? वहां पर ऑप्शन सेलिंग करता रहता हूँ सर, तो उस पर अभी ज़्यादा क्या बताऊँ। बैंक निफ्टी निफ्टी में ऑप्शन सेलिंग ही करी थी आज भी, कॉमोडिटी का बता रहा हूँ। नहीं सेम ही लगता है, फ्यूचर करो या ऑप्शन सेलिंग सेम ही अमाउंट चाहिए। देखो ऑप्शन बाइंग तब करना चाहिए जब बहुत ज़्यादा व्यू क्लियर हो और मार्केट में मोमेंटम हो, अदरवाइज अगर फंड ठीक ठाक है तो फिर ऑप्शन सेलिंग या फ्यूचर ट्रेड कर लो, ज़्यादा सेफ रहोगे। बेस्ट वे ऑप्शन सेलिंग करने का देखो डिपेंड करता है, लाइक यू नो डायरेक्शनली ले रहे हो या फिर लाइक ऑप्शन थीटा डी के चाहते हो, किस तरह से ट्रेड कर रहे हो। नॉर्मली जैसे आप कहीं पर सपोर्ट पे ऑप्शन बाई करते होगे ना, कॉल बाई कर लिया, पुट बाई कर लिया, मान लो कोई सपोर्ट है वहां पर प्राइस आया, कॉल बाई कर लिया, रेजिस्टेंस पे आया पुट बाई कर लिया, मैक्सिमम लोग जो ऑप्शन ट्रेड करते हैं वही करते हैं। तो एक तरीका है तो आप वहीं पर मान लो जहाँ पर सपोर्ट पे आया वहाँ पर पुट शॉर्ट कर दो, रेजिस्टेंस पे आया कॉल शॉर्ट कर दो। ऑप्शन सेलिंग की बात बता रहा हूँ, सेम फ्यूचर है, फ्यूचर बाई कर लो, फ्यूचर सेल कर लो। फ्यूचर लेकिन थोड़ा सा रिस्की रहता है। ये तो नॉर्मल हो गया जिस तरह से नॉर्मल ट्रेड करते हैं, बट क्योंकि उसमें मार्जिन ज़्यादा लगता है तो क्वांटिटी ऑब्वियसली कम ही लेनी पड़ेगी, पहली बात। दूसरा तरीका आपके पास है कि अगर आप थीटा डीके करना चाह रहे हो, तो थीटा डीके अगर करना चाह रहे हो इन द सेंस ऑफ थीटा डीके का प्रॉफिट लेना चाह रहे हो, तो फिर वहां पर दोनों लेग में सेल करना पड़ेगा, कॉल और पुट दोनों एक रेंज बना के। बट उसमें थोड़ा सा फिर आउट ऑफ द मनी जाना पड़ेगा, तो कोई बहुत बड़ा प्रॉफिट होगा नहीं, थोड़ा प्रॉफिट कम होता है। फंड ज़्यादा है तो ठीक ठाक हो जाता है, कोई प्रॉब्लम नहीं आती, बट अगर फंड लिमिटेड है तो फिर प्रॉफिट थोड़ा कम होगा, बट सेफ ज़्यादा रहेगा, क्योंकि थोड़ा सा आउट ऑफ द मनी सेल करोगे। 20-25 रुपए की कॉल या पुट सेल कर दिया आउट ऑफ द मनी में, वो मैक्सिमम जीरो ही हो सकती है, और जीरो होने का कोई वेट करता नहीं है। तो अगर वो 10 रुपए भी प्रीमियम उसका डाउन आ गया मान लो, तो 10 पॉइंट ही मिले निफ्टी में, बैंक निफ्टी में ऐसे मान लो 25 पॉइंट मिल गए। बट बेस्ट वे ये है कि अगर फंड है ठीक ठाक तो सपोर्ट पे ऐसे कॉल ऑप्शन बाय करते हो तो मेरे अकॉर्डिंग वहां पर पुट शॉर्ट कर देना चाहिए। ठीक है, प्रॉफिट देखो सेम ही होता है, प्रॉफिट कुछ ज़्यादा ऐसा नहीं है कि कम ज़्यादा होता है उसमें, क्वांटिटी वाइज डिफरेंस हो सकता है। बट अगर कोई थोड़ा कम लॉट में ट्रेड करता है ऑप्शन बाइंग में भी, तो उसके लिए ठीक है ऑप्शन सेलिंग भी, लाइक 3-4 लॉट भी विदाउट नेकेड अगर करोगे, हैचिंग बेनिफिट नहीं भी लोगे तो तब भी ठीक ठाक ही हो जाएगा प्रॉफिट। 3-4 लॉट सेल करोगे उसके 3 to 4 लाख ही चाहिए मैक्सिमम बता रहा हूँ मैं, हैच करोगे तो शायद और कम हो जाए, तो अंडर 1 लाख हो जाएगी ऑलमोस्ट। बट अगर डायरेक्शनली सेल करोगे तो आउट ऑफ द मनी मत चले जाना, क्योंकि वहां फिर फायदा नहीं है। इन दी मनी या एट दी मनी करते होगे ना कॉल ऑप्शन बाई के लिए, सेम वैसा ही वहां पर इन दी मनी या फिर थोड़ा थोड़ा सा एट दी मनी पे कॉल या पुट शॉर्ट कर सकते हो, अच्छा प्रॉफिट हो जाता है दोनों में, करके देखना एक बार। कॉल ऑप्शन पुट ऑप्शन दोनों सेल क्यों, कॉल ऑप्शन पुट ऑप्शन दोनों सेल क्यों, नहीं अगर थीटा डी के अगर लेना चाह रहे हो इन द सेंस ऑफ, एक तो डायरेक्शनली सेलिंग ना, कि अगर मान लो मार्केट ये रेजिस्टेंस पे आया, यहाँ पर सेलिंग बनता है, आप पुट ही तो बाई करोगे मैक्सिमम, राइट। मैं कह रहा हूँ यहाँ पर पुट बाय मत करो, यहाँ पर कॉल शॉर्ट कर दो, ठीक है। डायरेक्शनली सिंगल लॉट ही कर रहे हो तो कोई ज़्यादा प्रॉब्लम नहीं आएगी, बट करना वही आपका एटीएम एट दी मनी या फिर थोड़ा सा एटीएम। बाकी अगर थोड़ा सा रिस्क कम उठाना है तो फिर उस केस में आपको एक रेंज बनानी पड़ेगी, कि आपको लगे एक सपोर्ट और रेजिस्टेंस ढूंढ लिया थोड़ा सा हायर टाइम फ्रेम पे, कि प्राइस इसी रेंज के अंदर आज रहेगा मार्केट, तो फिर दोनों साइड का एक कॉल और एक पुट शॉर्ट करके रख लिया आउट ऑफ द मनी का, मार्केट रेंज बाउंड ही रहा तो आपको दोनों साइड का थोड़ा बहुत थीटा डी के मिल जाएगा उस केस में। बट उसमें भी एसएल रखना होता है, ये नहीं कि दोनों साइड सेल कर दिया और एसएल बिना लगाए छोड़ दिया, किसी एक डायरेक्शन पे भाग गया तो फिर काफी बड़ा लॉस हो जाता है। बाकी आउट ऑफ द मनी है तो प्रीमियम बहुत स्लो मूव होता है, तो थीटा डी के मिलता रहता है। जो लोग फ्यूचर ट्रेड करते हैं उनको मैं सजेस्ट करता हूँ ऑप्शन सेलिंग करा करो, क्योंकि देखो फंड तो सेम ही लगना है, आप ऑप्शन सेल करो या फ्यूचर ट्रेड करो, उसमें दोनों में सेम फंड लगता है, कहीं पर भी ट्रेड करो, चाहे गोल्ड में ट्रेड करो, निफ्टी बैंक निफ्टी स्टॉक कहीं भी ट्रेड करो। फ्यूचर में यही है कि अगर डायरेक्शनली मोमेंटम नहीं आया तो फिर कुछ प्रॉफिट नहीं भी हो सकता है, साइड में चला गया तो ऑप्शन सेलिंग में थोड़ा सा साइड में चला गया तब भी प्रॉफिट ही होता है थोड़ा बहुत। किसी को अगर ट्राई करना हो तो नॉर्मली एक कोई भी कॉल या पुट सेम स्ट्राइक प्राइस पे बाय कर लो, सेम स्ट्राइक प्राइस पे सेल कर दो, मार्केट अगर पूरे दिन बस साइडवेज रहा तो जो ऑप्शन सेल किया होगा उसमें प्रॉफिट ही हो रहा होगा, अगर मार्केट साइडवेज रहा है। और कोई प्रॉफिट ऐसा नहीं 1-2 पॉइंट का होता है, 10-15 पॉइंट का भी हो जाता है, डिपेंड ऑन द एक्सपायरी। दिसंबर में नॉर्मली मार्केट साइडवेज ज़्यादा जाते हैं, थोड़ा ध्यान रखना, साइडवेज या वॉलेटाइल ज़्यादा हो जाते हैं दिसंबर और जनवरी 15 के आसपास तक, उसके बाद थोड़ा सा फिर मार्केट और मूव होना स्टार्ट होता है। एफईजी से बाई सेल करना है, बोलो शर्मा जी, एफईजी से बाई सेल वैसे मैं रिकमेंड करता नहीं हूँ करने के लिए, बेटर रहेगा सपोर्ट रेजिस्टेंस पे बाई सेल करो। बाकी अगर एफईजी पे बाई सेल करना है तो एफईजी पे प्राइस अगर आए, जब तक एफईजी के नीचे कैंडल क्लोज नहीं होती है तब तक वो एफईजी काम के लायक है, तब तक उस पर बाई सेल करना चाहो कर सकते हो। बट याद रखना एफईजी कभी काम करता है कभी नहीं करता है, 100% नहीं होता उसमें।
These things, like to put them into production, is quite expensive, especially if you want to build the production line for them in terms of the capital that they are available to deploy. Maybe Tesla Optimus is one of the is definitely one of the leaders for the market. And I think like in recent launch event, you see those videos of those Optimus robots doing the butler and entertaining people. They're already quite intelligent. I feel like well, they've already got the prototype, but they need to put them into mass production. In terms, well, I think Elon Musk was talking about several thousand to be in its gigafactory starting from 2025, and then maybe ultimately the substitution rate would be like even higher for factory settings to replace those factory workers within the Tesla factory.
Do you think Musk is correct when he says that we may own one of these Tesla robots? Like they will be some form of assistant to us long before not. And then secondarily, how complicated is it to make an Optimus robot? You know, I'm trying to think, can he pump out millions of these each year at the same time they're trying to also make cars that drive by themselves?
Well, I think it's really depending on the demand of those humanoid robots. Although they are very good, and I'm totally convinced that they can make you a cup of tea, doing the laundries, mopping the floor, and taking care of your parents at home. I'm totally convinced. About the problem is that they're not very cheap. Like I think originally he was talking about 20,000, but now he is inflating the price to 25, 30,000. So the cost of these things are really a barrier for the people to, like, you certainly want one assistant in your home, but like if it's 25, 30,000, then probably you might think twice about that. I think the price is one of the issue that they need to solve. But I totally, if there's a demand, if they can drive the price down. Firstly, would be the rich people buying it, and then if they can drive the price down, then seeing more demand, maybe they can produce mailings definitely in the future, but not right now.
Rob, interestingly, you guys correctly put out in this report, like literally the faces of these robots, the specs on what they do. As you were doing this research, what other companies in this space really impressed you, and what are they doing that led you to be impressed?
So yeah, the surprise was there's so many, and then when you start picking different bits, who is good at speed, who is good at carrying, who is good at vision, who is the degrees of freedom. I mean, there's a great variant, to be honest with you. I think one of the surprises is how developed this is in China. And there are leading companies in China, such as Unitree, which are already out on the market at essentially $14,000. So, you're talking with Wenyan there about, Tesla. And by the way, we're looking at long-term thematics. We're not talking about stock recommendations. That's not what we do. But the Tesla Optimus and even Figure AI and those things, they're not yet out and they're not yet commercial and they haven't yet been proven. And I think one of the things, just to make sure caveat all of your listeners on this, is that when we're modeling out, although we get to 648 million by 2050, we only get to 13 million by 2035. So, we were trying to make sure we are sensible in the same way that autonomous vehicles got talked about, a decade ago. And it's only now that the inflection up is happening post the approval in San Francisco and Waymo doing 100,000 rides per week. So but however, when I say that, the development is taking place at a rapid pace in China. And if you look at the patents, for example, then China dominates this space. If you look at the production scale that they potentially have, if you look at the costs that are already there. So I think one of the conclusions is this is certainly not just a US story. This is going to be a story that happens in several different geographies.
Rob, aren't there two powerful trends underlying this move to humanoids? I'm looking at some of my notes here. I mean, we have slowing population growth around the world. We have an aging population growth around the world as well.
Yeah, and actually, there's another one I would put in there, which is obviously there's a shortage in certain labor areas. I mean, getting carers is not always easy. Getting carers that stay with people is not always easy. And so, when you look at shortages of staff, that's an obvious reason why there's a demand to plug in humanoids and other robots in other forms. The aging demographics is clearly an issue. And actually what we modeled in terms of people getting older and the needs for people, say, for example, in the care industry, the demands will be very substantial. So, and, we came out, I mean, we haven't talked about it yet, but we came out actually very positive on the fact that these things can be, a chauffeur, a butler, a carer for people. And I think most people would sign up to have that type of service provided to them.
In the last 3 minutes of the show, guys, we always like to get our hot takes from our guests. Since I have two of you here, I will come to each of you on a different one. Wenyan, let me go to you for a hot take. What did you think about Sophia the robot?
I think it's quite interesting that they can do the thing they can do right now. But I just want to add a sentence in terms of hot take to our $7 trillion market size, is that if you look at the global GDP is above 100 trillion, and if you look at it at 2050, it's above 200 trillion, and then we're talking about the potential of these humanoid robots substituting 30-40% of the workforce. So it's definitely going to be huge. 7 trillion is not a big number compared to this, and we are also capturing the unvalued domestic work chores that is not included in the GDP. So 7 trillion is actually that doesn't sound that big if you can compare to these numbers.
Rob, over to you for a hot take. Do you see these humanoids entering the military?
Well, we didn't model a number of different areas, going into safety areas like fires and stuff like that. Security could be a big one, and then military as well. And we didn't model them because, candidly, it's quite difficult to get to those numbers. And I think that's a whole nother report at a potential another time. But I do think if you take the opportunity set, you're already seeing things like robo-dogs going into the front line. And some of these robo-dogs who can carry gear, they cost like $7,000. I mean, not necessarily expensive, and they're saving lives and doing great things. But then you take that to, can humanoids say the same things? The answer is, I think it's something that should be discussed in society about whether this is the right thing to do or not. The EU AI Act does a lot, but it doesn't include military.
I mean, the robo-dog seems safe. I mean, nothing like a pooch coming, going into battle, carrying some gear. I mean, that makes sense. I don't know about a humanoid, packing some heat, but I mean, hard to argue with a humanoid Fido. It makes sense to me. How'd you guys get on this beat in the minute that we have left? How'd you guys start covering this stuff?
Well, we got lucky, being able to look at lots of areas of innovation. Artificial intelligence, obviously huge. We were writing about that, writing about agents, writing about quantum computing. And we got the opportunity to look at robots. And when we peel back the cover, we found out there was just more and more. And so the innovation taking place in this space is very significant. And I think it can be a really big opportunity for society and people. But at the same time, there are a number of downsides, whether you want to talk about military, want to talk about the future of work. And we need to make sure that those conversations are being had.
Among the many things I learned from both of you in this chat, one, my aging parents are going to be taken care of by robots. Sounds more cost effective to me and just frankly easier in my life. And then I think the world needs a robo-dog. Really fascinating here analysis from you guys. Looking forward to continuing to follow your work on this category. Rob Garlick and Wenyan Fei from Citi Global Insights. We'll talk to you soon.
Thank you.
All right, and that's it.
For having us.
Of course. That's it for the latest episode of Opening Bid. Hit us with those 5 stars on Spotify, likes or thumbs up on YouTube, and keep on showing us that love on Apple Music. We feel it. We feel that appreciation. It keeps us going for many, many more episodes to come. We'll talk to you soon.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Bottom line is, I'm going to ask this sort of as a hypothetical. I've been of the camp of, what do we really need it for? When you think about what
more rate cuts,
yeah. Right? I mean, okay, so the Fed's dual mandate is stable prices and full employment. Well, yes, we've seen disinflation, but the inflation rate has sort of flirted with the 2% target, but we seem to be sort of finding our level there. And I would argue we have something similar to disinflation in the labor market. It's been slowing down, but it hasn't really slowed down. It hasn't tipped over. So 4.1% unemployment rate still means that essentially 96% of the people who want a job have one. That's a historically enviable employment rate. Plus, you've had average hourly earnings in the 0.3, 0.4% range month over month, which is actually above CPI, which is good if you're the average worker. And of course, none of us really, I don't know who that is, but in general, when you have wages in general going up faster than CPI, that's a good thing. And you have credit spreads, the amount that when companies borrow money based on their credit, they pay a spread over treasuries, because assuming the treasury can print money.
They're not paying that much more right now.
That spread is almost at record lows. And the stock market is hardly suffering from a lack of liquidity. And you're certainly seeing speculative investments, going gangbusters. I mean, look at Bitcoin,
Bitcoin,
stocks, et cetera. So why exactly do we need aggressive rate cuts? It's not clear to me why.
It's not clear to me why, but are you concerned with this potential reacceleration in inflation?
Yeah, or the no landing, basically, if we're going to talk landing.
It's possible because, I think that this election may have raised that specter a bit, because tariffs are potentially inflationary. If they're going to go ahead and deport millions of workers, that's inflationary. There are certainly reasons to think that inflation that we may. I'm not going to go out and say that we're seeing a real acceleration in inflation right now, but the potential exists that it's possible we may have gotten what we're going to get on the inflationary front in the short term. A lot of that depends on the new administration's policies.
Why is this happening, and should investors be worried? And the long arm of tariffs. Are investors still not getting the risk to their portfolios from the Trump, a.k.a. the tariff man, Julie?
Yes, so as he has dubbed himself. Yes. Also, speaking of Trump, we're beginning to see a bit of an unwind of the so-called Trump trade as the dollar, for example, heads for its worst week in 3 months. So, I don't know if it's an unwind of the trade or if it's just a little bit of a pause of the trade, right? Like it was probably not going to be moving all in a straight line. Yeah. And it doesn't? A lot of us are sort of having like flashbacks to 2016 and the tweet-driven market. And now it's the Truth Social-driven market. You're already dropping your pen.
There's just a lot going on. Well, that's the point. I think there's a lot of information coming at investors right now, and they. After the election, you had this burst of enthusiasm, lower taxes, corporate profits are going to double next year, and it's great times. But I think I think investors have learned the past week, tariffs have ramifications. They could really drill down on profits for apparel retailers, for automakers, and they could have real impacts next year. Nobody thought about this in the days after the election, but they're thinking about it now.
Everybody was thought about it.
They thought about it, but they weren't plugging it into their models and saying, wow, I'm General Motors. I can have 30% of my profits wiped off next year. And the market has to adjust to this stuff.
Yeah. So let's talk about the dollar, for example, here. So it's poised for its biggest weekly loss in 3 months. It had been up for about 8 straight weeks. And ahead of this, and the positioning had gotten stretched by some measures here on the U.S. dollar, as many of the incoming administration's policies were seen as maybe buoying the case for a stronger dollar, but we've seen that little bit of a pause or pullback. I talked to Jens Nordvig of Exante Data about the dollar, and this is what he told us.
We have a situation where we've had pretty dramatic ups and downs in the dollar since September. We were weakening dramatically into the Fed rate cut in September, right? And now we've had a strengthening period, maybe up until today. So what's happening with the US yield curve, what's happening with the dollar really sets the tone for international risk assets.
International risk assets, and also, of course, there are implications, again, as we bring it back to this whole U.S. multinational conversation. If the dollar is strengthening, that also has implications for companies that do business around the world.
Yeah, it also could be, maybe you're getting some signs here, Julie, that, as these tariffs and these various policies come into effect, maybe there's a sharp growth slowdown in the first half of next year.
Maybe, although, this administration is seen as broadly pro-growth, but the question is all in the timing, right? When do those growth policies sort of take effect and hit the market and hit the economy?
Time there. How important is that that these things get resolved quickly? In other words, the debt ceiling and the debt limit.
The debt ceiling and the debt limit's a weird thing. I mean, I think we're the only country that actually has this. I think Denmark is the only other country, but Denmark, they just rubber stamp it all the time. And that used to be the case here. Now, like everything else, it's become politicized. I think it's one of those things investors don't react to until it's like really staring them in the face, because it's usually there's brinksmanship that gets resolved at the last minute. Nobody really wants.
Always gets resolved.
Well, we're still here.
Exactly, we're still here. But you have had situations where it took a while for it to get resolved. But usually it gets resolved like at the last minute. It's sort of like, like a high school student turning in their homework at the last minute. Eventually.
The risk is that every once in a while they get caught.
Yeah.
Exactly.
So
there you go.
Turning a bit back to the markets, we're seeing really big moves in the Russell 2000 small caps today, almost at a record. but we have high rates too. And we've talked to a lot of guests who've said that small caps don't really like higher rates. So kind of what's going on there?
Small caps don't like higher rates because many of them are, many of the stocks in the Russell 2000 are money-losing stocks, which means they have to be able to borrow money to stay afloat, which means they prefer lower rates. All borrowers prefer lower rates. And so at this point, we're a very debt-heavy economy, but those stocks, in many cases, really need debt as a lifeline. But in the short term, the idea that, number one, protectionism probably helps these companies more than most. Microsoft doesn't need a lot of protectionism, right? I mean, Alphabet, these companies are fine.
They got their moats.
They have these big moats and they're fine within them. Company number 327 in the Russell 2000, and I have no idea what it is. I just picked a number sort of at random.
Yes.
That company probably does not have a very big competitive moat. And so odds are some sort of protectionist policies, America First type of policy, would help that company. Second thing is we may get a change at the FTC, almost definitely get a change at the FTC. The current chair, Lena Khan, has been fairly strident about putting the kibosh on mergers that she and her commission view as anti-competitive. It's probably fair to think that whoever would replace her would be a bit more lax about that sort of thing. It's part of the whole deregulatory ethos, I think, that we have. And so small cap stocks are more likely to get taken over. Again, nobody's taking over Microsoft, but somebody might take over that number 327 company, if its prospects are good.
We've seen the November to December timeframe just explode in stocks very consistently recently. And we're just you can go back in the presidential elections, but even to November 2023, November 2022. And I had a question: how does seasonality affect your analysis? Because a lot of people were expecting this election to kind of unleash this wave of CapEx. It was something I was writing about in Morning Brief. And in the U.S. presidential cycle, predictably, after the election, you get this wave of investment. How much does this play in your analysis?
Not too much. It's out there. I keep an eye on it, but seasonality has a way of working until it doesn't work. And
it's been good recently.
It has and it hasn't. So September, for example, I did the work on this, and I think, what was it, like 4 out of the prior 5 Septembers had been negative coming into this year. September was gangbusters good. And as it turns out, over the 10-year period, though, it was like 50-50 as to whether it was going to go up or down. November has had a great track record because October and September tend to be 2 of the worst months. But September was a great month and October was a down month, but only slightly. So literally not until the last day of October did the S&P flip into negative territory. So seasonality, I think, is less important right now than momentum. We definitely have giant momentum trade, and you talk about it all the time on air, and you notice, you recognize it. You're a technician at Art. The trend is your friend, and this trend has been extraordinarily powerful. And investors and traders alike have been, both, have been riding it basically.
How do you think about your own investment thesis when seasonality doesn't kind of line up with what we expect?
That's kind of why I take into account seasonality, but I don't trade off it.
I think you have to kind of trade off it consistently. Like if you don't take the signals consistently, you miss out.
But even when I've looked for some consistency, and I don't have I can't spout the link off, but I did put a link up on our website, IBKR Campus. I'll throw in that little
yeah, we'll put it up on.
Yeah, and I'll send you the link and we can put it in. But I did do some work on it, and the seasonality, it's too inconsistent to be really tradable. So I think it's part of investor psychology. Of course, we've all heard the phrase "sell in May and go away," but we never really know what are we selling and where are we going necessarily. But and certainly, and the flip side of that would be then the November to May period tends to be the best, which you can document over time, but it's not perfect, and certainly on a month-over-month basis, it's a little too random to really, I think, make too many heavy-duty decisions.
We'll leave seasonality there.
Yeah. What do you think about the VIX? We're seeing it tank today.
Well, you just
Big move
removed
down.
You just removed a big amount of uncertainty, didn't you? The VIX. We all look at the VIX itself, which again, let me.
You can't trade it, by the way.
You cannot trade VIX directly,
which is confusing to me. But anyway, keep going.
It is an index. Well, you can't trade SPX either, but there are futures that trade on it and ETFs that trade on it. And that's the case with VIX. There are VIX futures and there are VIX linked ETFs. So that is how you trade it. But one of my going phrases is, and I probably have used it with you before, is VIX is not a fear gauge. It just plays one on TV.
We spent some time on that.
I know.
On the previous
I
episode.
know we discussed that before. So I'm going to bring it up again. And what it's telling us is, remember, it's the market's best estimate of volatility over the coming 30 days. And you had an election, and VIX tends to decline once a big event is behind it. So the election's not a factor in volatility anymore.
Imagine what happens after the Fed.
Well, I was going to say, what about the Fed meeting? It's not really a factor there.
Well,
for tomorrow?
Can we just pause right there and we'll talk about the Fed after this break? Because coming up, we're going to take on Jay Powell and the Fed's rate path. And on a who wore better, it's NVIDIA versus Intel, but we're going to do some time travel as well.
Oh,
That's the opening bell. So let's see where markets have opened up here. As everybody is cheering post-turkey on this Black Friday and ringing the opening bells on the NASDAQ and the New York Stock Exchange. It looks like we're setting up here for a positive open after a little bit of dip in the major averages. The Dow right now opening up about 87 points, call it just shy of 90 points, about 0.2%. The S&P 500 up about 0.1%. The NASDAQ, which usually takes the longest to open, it's got the most components in it. So it looks like that is up about 0.1% as well. So a little bit of a tepid recovery here to start the Friday morning. And what has been sort of a choppier trade over this holiday shortened trading week as folks are still trying to figure out what to make of the policies of the incoming Trump administration. We know now that the Trump economic team has mostly been named at this point, including Scott Bessent as Treasury Secretary. The markets were broadly cheered by that pick. But, still trying to figure out what the effect of tariffs are going to be and the effect on specific sectors. So that's what we're seeing sort of high level here this morning as we get underway. To drill down a little bit, we get over to Yahoo Finance's Jared Blickery for a look at what's moving. Hey, Jared.
Hey there, Julie. Well, let's take a look at the Russell 2000 small caps Black Friday. I don't know that there's an obvious tie-in, but we're going to roll with that. And we've seen small caps kind of come alive recently. It's taken a while, just shy of a record high. We hit an intraday record high, didn't get the closing one earlier, and I want to say last week, but it's probably earlier this week. And here we are. Here's a 5-year chart, and you can see we are right back to these prior highs. So potential excitement here when we finally get that breakout, but it doesn't have to happen immediately. So let's go to the 10-year, which is now hitting the lowest since October. And this is significant because it was putting some upward pressure on risk markets, where I should say some downward pressure on risk markets as it went up. And you can see these local highs here hit about 4.5%. It is now down to 4.2%. That's a big drop, 30 basis points. And so that takes pressure off, as does the declining dollar. And that's another story that we've been tracking here. That's just down a little bit today, but I think traders will take that. And let's take a look at how the sector opened today. It was the cyclical sectors before the market opened and after the market opened as well. We have industrials, financials, those are the two leaders. Energy, consumer discretionary, materials. Looks like utilities is making it to the top of the shelf. Now, top of the shelf there. And then communication services is the only sector in the red. That's down by about 0.1% here. And let's take a look at Bitcoin, because we've been tracking this meteoric rise to 100,000. Didn't quite get there. It got just shy of it, came all the way back down to about 90,000, and now it is back to 97,000. So kind of a nail biter here. Are we going to get that final push to 100,000 today? Over the weekend remains to be seen, but we have seen the ETF flows kind of track the price action here, and that's always good to see. I think something like 9 billion in flows have been tracked in the last month alone. Most of those 7.5 billion, 7.6 billion went to IBIT. That's the BlackRock iShares offering there. But in general, crypto has seen a tremendous uptake in those ETF flows. 3/10 of all the flows have happened in the last month. So a lot of excitement around crypto right now.
Good stuff, Jared. Thank you so much. Appreciate it.
And I would argue we have something similar to disinflation in the labor market. It's been slowing down, but it hasn't really slowed down. It hasn't tipped over. So 4.1% unemployment rate still means that essentially 96% of the people who want a job have one. That's a historically enviable employment rate. Plus, you've had average hourly earnings in the 0.3, 0.4% range month over month, which is actually above CPI, which is good if you're the average worker. And of course, none of us really, I don't know who that is, but in general, when you have wages in general going up faster than CPI, that's a good thing. And you have credit spreads, the amount that when companies borrow money based on their credit, they pay a spread over treasuries, because assuming the treasury can print money.
And they're not paying that much more right now.
That spread is almost at record lows. And the stock market is hardly suffering from a lack of liquidity. And you're certainly seeing speculative investments, going gangbusters. I mean, look at Bitcoin,
Bitcoin
stocks, et cetera, et cetera. So why exactly do we need aggressive rate cuts? It's not clear to me why.
It's not clear to me why, but are you concerned with this potential reacceleration in inflation?
Yeah, or the no landing, basically, if we're going to talk landing.
It's possible because, I think that this election may have raised that specter a bit because tariffs are potentially inflationary. If they're going to go ahead and deport millions of workers, that's inflationary. There are certainly reasons to think that inflation that we may. I'm not going to go out and say that we're seeing a real acceleration in inflation right now, but the potential exists that it's possible we may have gotten what we're going to get on the inflationary front in the short term. A lot of that depends on the new administration's policies.
Anything the Fed needs to watch out for maybe next year, new administration, just not necessarily even in the administration, but things in the economy that they might need to deal with that they haven't had to deal with before?
Well, I mean, to some extent, they had to deal with some of it 4 years ago. But I think, again, if you're getting into a situation where there's protectionism, one of the things of globalization means that it's allowed. You go to Walmart, you buy from Amazon, or Temu if that's your cup of tea. Those are sort of, they've been sort of disinflationary elements for years because they've been able to source stuff globally, much of it from China, but source it globally where it can be made more cheaply. If that reverses and it's made in America, there are certainly. I understand the appeal of a made in America policy, and I'm not gonna go down that political road. But from an economic point of view, if you're forcing consumers to buy something that's made potentially in a higher cost jurisdiction, that does not help inflation.
I mean, these are long-term secular trends that we're talking about. Maybe structural inflation that's higher. That we'd have any other long-term trends you're thinking about that might be applicable here, because we get caught up in the day-to-day, what's going to happen in the next 3 months, 6 months, whatever, but long-term trends.
the long-term trend that's been driving the stock market has been the love affair that we have with AI.
And we haven't talked about that much.
I was waiting for it.
I knew you.
As you started your sentence, I was like, he's going to say AI.
All right, we need funfetti when we have a word. Some kind of trigger here, but yeah.
Like the secret, so you have the secret word, and
yes.
you know.
Definitely.
But you know, at some point, and we started to see it a little bit this earnings season, the investors are kind of wondering, okay, all these billions of dollars are being spent. You know, again, there's the old analogy that in a gold rush, you should buy the people who manufacture the picks and shovels.
Yeah.
Well, the semiconductor manufacturers are the picks and the shovels. To some extent, you know, then you have, I guess, the big mining companies. You know, whether it's Microsoft, whether it's Google, whether it's Alphabet, the same company, or Meta, I should say. You know, they've been spending billions on AI. It's not clear that there's much of a return there, and even more murky is what the benefit of AI is for the average everyday company.
I think B of A just crunched the numbers, and I was actually just writing about this, so I happen to remember some of this, but they crunched the numbers and they realized that these big CapEx investment cycles, the companies who invested in them don't tend to perform that well in the stock market in the years afterwards. So it gets back to your pick and shovels argument. Maybe it's not going to be these hyperscalers here.
Or maybe it's just really, really long-term play. We got to wait another decade or so.
Figure out monetization in 2031.
Exactly.
Well, but that's the internet. Think about it. That was what happened with the internet.
Took a while to figure out.
Cisco, Intel were the big companies in the internet era, and it took a while. The internet did actually revolutionize business. It just didn't do it immediately.
This is a perfect segue here, because guess what? We're going to do a time warp on who wore it better today. First, let's travel back to 1999 when Intel was the tech darling that got the big invite to the Dow Jones Ball. It was the height of the dot-com era, and Intel's processors were ubiquitous. They were everywhere. Now, fast forward to 2024. We've got another chip darling, minting money for Jensen Huang and the NVIDIA shareholders. Of course, that would be NVIDIA. The very nuanced question here, Steve, is who's wearing this Dow nod better? Which endorsement speaks more strongly of the company in the spirit of the times? Was it Intel and the dot-com boom, or is it today NVIDIA? And we don't have the benefit of history that way we do with Intel, but
I think the analog is tremendous. I don't know we won't know who wore it better.
It raises good questions.
But it does raise good questions. And bear in mind, Intel was added, I think, in October of 1999, just in time for things, you know, like call it 6 to 9 months before the whole cycle changed. I hate to think that the Dow committee did the same thing with NVIDIA.
The Dow committee.
Well, it's S&P Global now.
It is S&P Global now. I know that's, but it's part of my general distaste for the Dow. If you'll let me go down that.
Oh, please.
If you'll let me go down that road.
We love opinions about the Dow. It's a people's index.
It is the people's index, but I don't know which people.
Oh, wow. It's not the people's voices, people's index.
I like the Dow because it only has 30 stocks.
Yeah.
That's my hot take. It's not that hot.
And that's the problem.
Yeah.
It's 30 stocks. It's 30 relatively arbitrary stocks. It's, you know, like
it's very arbitrary. It's
why Sherwin-Williams as opposed to Dow Chemical?
Is it like America's stocks, kind of?
It's meant to be America's stocks. It is. But remember the little history here about the Dow. Please. It was created in I think in 1896. The original measure was the Dow Jones Utilities, which. But remember, what's the technology that was available to the people creating?
I don't think they had radios.
They didn't. They had a pencil and paper, and so it was an index. So it was an average because that's what you could do on the fly. You could
do it.
You could add up. You could add up exactly. You could add up 12 numbers and divide it by 12, and there's the movement. And to be fair, there wasn't really a great way to measure markets beforehand, so there it went. The problem is, as we now live in a computer age, we can measure things by market cap, where you take the stock price, multiply it by the number of shares, and then divide it.
I mean, we were doing that in the 1920s once a week with the S&P stocks.
Exactly.
But only once a week.
Once a week, and it was like I think it was originally the S&P like 100, and then 290, and then 270, and then eventually in the 50s it became the S&P 500 because they could do it, if not real time, relatively quickly with the newfangled computer technology that they had. And so Is it the ideal index? Not necessarily. Here's the problem I have with the Dow, and why, if I were your editor, I would banish from your air and all the other ones.
This is going to be good.
Because it's price weighted, and because that's what an average is. You take the 12 prices and divide and sum them and divide them. In this case, the divisor changes because of splits and everything, so it's not 12.
But you're still adding and dividing.
You're adding and dividing, but only by the price. So therefore, the things with the biggest price have the biggest weight. Goldman Sachs, UNH and Goldman are number 1 and number 2. At the bottom of the list is Verizon. The market, which is, so Goldman has a $550-ish price, and Verizon's about, what, 37 or 40 or something of that nature. So Goldman has, call it 12 times the weight of Verizon. The market capitalization of both those companies is almost exactly the same, within a few $billion. They're both about 150 some odd $1 billion. Is there any reason why Goldman should be twice as important? And let me bring it forward. How much time do you spend talking about NVIDIA versus talking about Sherwin-Williams in your reporting?
What is this disdain for Sherwin-Williams?
I have no disdain.
These are great rhetorical questions, and I emphasize rhetorical because we have to close here. 24 minutes has passed by. Make sure you check out all our other episodes on our home site, mobile, and podcast platforms. Keep your dial tuned to Yahoo Finance.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Another trade we're tracking is Bitcoin, of course, flows into Bitcoin ETFs in particular, which have been big. We're seeing Bitcoin push back higher here, getting closer to 100,000 once again. But if you look at the inflows that we have seen into Bitcoin funds, ETFs, we have seen a huge amount, including inflows into IBIT, which is the largest ETF, that one from BlackRock. Fidelity has an offering too. $6.2 billion is how much they've taken in so far in November. That's according to Bloomberg. $6 billion was February. That's the previous peak that you see. As, again, this is part of the Trump trade that we have seen. And this part, I don't know if it's unwound, really. I mean, it got within a whisper of 100,000 and then pulled back a little bit, but now it's going higher again.
I was hoping it was going to break through that level on Thanksgiving. I was watching, I'm like, come on, just get through there. Give me something to talk about on Friday morning. But I just, it's not a call on any particular asset. I just feel as though this is just getting started. I had a really cool conversation with Mark Palmer on the Opening Bid podcast. And he was really laying out the case for even more moves higher in Bitcoin. I think his calls like 225 by 2026, 225,000. But it's just the institutional involvement. We've heard about this for the past 4 or 5 years. Institutions getting in. But BlackRock's now involved. Mark was telling me how endowments are now starting to dabble in crypto. These are folks with large, really billions of dollars to get put to work. And they're likely, or they're looking to put it to work finally in crypto. Like everything we've talked about the past few years seems to now be coming to fruition.
Well, and when you talk about the actual policies as well, so there's the institutional involvement, which has been the case all this year, and then there is now the Trump trade aspect of this. So who's going to be the next head of the Securities and Exchange Commission? We still don't know that, but it's expected it'll be somebody who is friendlier to the industry, who will remove some of the roadblocks that we have seen. Will we get the strategic Bitcoin reserve, whether it just holds Bitcoin or buys Bitcoin?
That's just wild.
That's one of the questions.
A strategic reserve of Bitcoin? It is wild.
But you know what my biggest question is as we move forward here and you've got that institutionalization of Bitcoin? Will we stop or hear less of people talking about Bitcoin like it is a religion rather than an asset class? I mean, you and I have talked to a lot of people who see it as
like changing the world order.
Changing the world. It is a faith-based asset and has been for many years. It has value because people believe it has value, and now more people believe it has value, or at least are willing to bet on its going higher. So will we see less of that sort of like language around
Which
it?
I always found fascinating because, as Mark brought up to me, or reminded me, I should say, there's a lot of bad actors in this space. I think a lot of folks think just because, FTX and all these folks got wiped out, that they're gone. No, crypto's still being used for nefarious activities around the world in many cases.
Yes, but the Bitcoin bulls will tell you, so is the dollar.
So
People use dollars
that's what
for
Mark,
bad
Mark
stuff.
that's what Mark told me.
That's what they are.
It's the dollar, man. Come on.
Today you have a stock.
It is 9 a.m. here in New York City on this Friday, November 29th, Black Friday, as some would call it. Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. That's Brian Sazi. We are in for Shauna Smith and Brad Smith today. Let's get to the three things that you need to know today. First up, U.S. stock futures in positive territory on the last trading session of November. The S&P 500 on track for its best month since February following the presidential election. And as investors cheer one of the best years for the benchmark index in its history, with gains above 20%. Meanwhile, the so-called Trump trade is beginning to unwind, with the dollar on pace for its biggest weekly loss in 3 months. Plus, Bitcoin ETFs seeing record inflows this month as the digital token inches closer to $100,000. So far in November, Bitcoin exchange-traded funds have pulled in more than $6 billion, according to data from Bloomberg. That marks the most inflows on record for the ETFs since they launched at the beginning of the year.
Good stats. All right, and the official start of the holiday shopping season begins. Black Friday is underway in America with shoppers searching for deals in the shortened holiday shopping window. Investors will closely watch for data tracking spending from the consumer to assess the retail space and the overall health of the U.S. consumer. Early data from Adobe Analytics show consumers spent a record $6.1 billion online on Thanksgiving alone.
Well, quick check on what's going on today sector-wise as well here. As we look at the S&P 500 sectors, everything in the green actually, even energy, which is lagging, but tech and consumer discretionary doing the best here today. You know, it's a holiday shortened day. Right. Volume is light, but nonetheless, we look at the numbers. And can we look at Bitcoin for a second?
I was surprised you weren't flipping it to Bitcoin earlier, Julie.
We're going to talk about it a little bit more later in the show also, but it is pushing back up towards, that's the month for Bitcoin, which has been big, obviously. Huge. And then today, going back up towards the $100,000 level. We'll see if and when it makes it there.
If and when we get a Thanksgiving surprise. I don't think we're going to get it today, but I've been wrong before. I've been wrong before. For more on what we're seeing in the market as we get set to wrap up the week, as well as the trading month, we're going to get to Quincy Crosby, Chief Global Strategist at LPL Financial. Quincy, it's great to have you on here. So looking like a positive day when it comes to equities here. Santa coming in a little bit early for the market this November. What is going to carry that rally into the end of this year?
Well, first of all, you're going to go into probably the best month in terms of seasonality is December. November and December together tend to be good months for the market. Not always, but statistically, it looks as if we will end the year in positive territory, absent an exogenous shock or some headline that skews the market down. But probably we will be in positive territory. But what we're going to be seeing is jockeying for performance, for portfolio managers making certain they end the end of the year in positive territory. And many of them may actually close their books earlier if the market, comes in December and really hard and higher. Many of them just lock up and they don't want to jeopardize a very strong positive market. But overall, the market is still enthusiastic about the incoming administration. Granted, tariffs are a concern, but you can see where the market is beginning to suspect that maybe the higher tariffs, the headlines, are a tactical move by the administration, because we're already seeing the leaks come out. We're seeing more than just leaks. We're seeing information coming out, and we're seeing the responses from our trading partners. Already, Mexico has been involved, and in addition, we're going to be hearing from Canada. Needless to say, China has actually put forth some olive branches. Some Americans who've been in custody in jail for many years have been let go. So it looks as if they are trying to ameliorate the headlines.
Quincy, you were talking about seasonality there as well, and I'm curious about sort of on an annual basis what we tend to see, because we're looking at the best year now since 2013 for the S&P 500. As you said, everybody's trying to lock in those returns on the year. Like if your money manager didn't, at least match some of these returns, or at least have a positive year, you got to be asking some questions. But I'm curious about what you tend to see after a return like this going into the next year, whether you see some moderation.
Well, we probably do. I mean, for one thing, we can't forget about earnings. I mean, really, it is what underpins the market when all is said and done. And we're seeing earnings revisions coming down for 2025. That doesn't mean that, we're not going to see upward revisions. But as we speak about it now, we're looking at more downward revisions rather than revisions climbing higher. So that's going to be very important what the earnings are. And then again, it's the Fed. This market has been disappointed so many times regarding the possibility of a series of rate cuts. And if the Fed begins to suggest that we are not going to have as many rate cuts as the market wants, the market, I think, is going to be pretty disappointed. We have to remember also that it was November 1, 2023, that the market actually had been selling off. It had been dormant. It was negative. But November 1st changed it. And what changed it was the Treasury Department making an announcement that morning that the refunding was a little bit less than the market had expected, and that they would skew to short duration notes rather than longer duration. And in the afternoon on November 1, it was the Fed. And the Fed didn't come out and say they're going to cut rates, but there was a suggestion that they got it. They understood what the market wanted, and some suggested that actually there would be some rate cuts without any clarity. That changed the market. But this going into next year, we're going to have more funding needs, $7.5 to $8 trillion, and you're also going to have them coming out on longer duration. We have to see how those auctions hold up. It's going to be crucial. So that, coupled with tariffs and the market trying to figure out, how much will be enacted, what the retaliatory response will be, the market has some uncertainty to have to deal with and get through it. But that's the market's job. And we still have geopolitical risk. The market has been absolutely incredible navigating geopolitical risk. You would think there was no problem in the Middle East. You'd think that there was nothing going on in Europe. But the market has basically said, as long as it's contained, we can keep marching higher.
Yeah, Quincy, it's interesting that you talk about tariffs. I want to pull up a quote from the recent Fed meeting minutes here. In the minutes, they say participants cited various factors likely to put continuing downward pressure on inflation, including waning business pricing power, the committee's still restrictive monetary policy stance, and well-anchored longer-term inflation expectations. I want to get your take on that line about waning business pricing power. Do you see evidence of that already? And how could a Trump 2.0 potentially impact that dynamic? And what would that mean for earnings growth? I mean, that just strikes me as a concern from the market's perspective moving forward.
Well, yeah, I mean, there is a concern. I mean, one of the things that really helped the market was pricing power. I mean, companies came in and they were able to keep raising rates, and consumers paid the price. Small business owners paid the price. But, consumers are much more discerning. They're spending, there's no doubt about it, but they are looking for more and more bargains. Also, something I think is interesting, and I hear it outside of the market commentary, and that is trying to beat the tariffs. In other words, trying to figure out what will be something that becomes more expensive in the United States, going out and trying to buy it now. And we're also hearing that a number of companies are also going and trying to increase inventory and try to beat the tariffs. So that could actually help GDP in the early part of the new year. But obviously, the uncertainty regarding this is something that the market, markets like certainty, but the uncertainty regarding how this is going to unfold is crucial for the market. The market needs more information, and then we'll assess, is it going to be a 1% at the margin of higher inflation, or is it going to be less than that or more than that?
Yeah, well, we're going to have to wait to find all of that out, Quincy. The only thing that will bring certainty is time, unfortunately, in this situation. I want to dig into a couple of the groups that you like, and I'll take industrials, first of all, because that's an interesting one, given that outlook for tariffs here. Why is industrials a group that you like right now?
Because we expect to see more and more building. We're going to see building in the United States. That is going to continue. And we're going to see data centers building. Embedded in industrials is actually the defense names. And we expect to see more and more defense spending, not just in the United States, by the way, but money coming in from our allies. The president is adamant that they're going to have to pick up spending, and they're going to be buying quite a bit from the United States. They'll be buying also their own defense manufacturing names, but a lot of them just come in to the U.S. and buy from the U.S. So the totality of it is we expect to see the industrials do well, continue to do well next year.
And I know you also are interested in communication services, Quincy. Can you talk to me about your base case there?
Well, yeah, I mean, communication, companies need it, we need it, and I think it's going to continue. And if the Federal Reserve continues to lower rates, many of them offer very attractive dividends. And that's going to be attractive. It's always attractive when the Fed lowers rates, and you look for dividend players, and that sector is filled with them.
Quincy, good to see you. Happy holidays to you, and thanks for joining us.
Thank you so much. Thank you.
Thanks, Quincy. We're getting started here, just getting started here on Market Domination. Coming up, the season for spending is kicked off, yet Christmas is only 26 days away. So what sort of impact could that shortened shopping season have on retail sales? We'll speak to an economist on the other side to help us understand that effect. Stick around, much more Market Domination still to come.
You're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
According to Salesforce, thanks.
News when you want it with Bloomberg News Now. I'm Amy Morris. On this Black Friday, online retailers once again used early deals to encourage shoppers to splurge earlier. More from Bloomberg's John Tucker.
According to Salesforce, Thanksgiving online sales in the U.S. grew 8% over last year. Black Friday is the best day to buy a TV with discounts of 24%. That's more than double the average discount offered the rest of the month, according to Adobe. Amazon also introduced a new feature this year called the Virtual Holiday Shop, which lets users browse for gifts in what looks like a Minecraft video game version of a department store. Shoppers navigate through various departments and click on items that catch their eye. John Tucker, Bloomberg Radio.
And online shopping is expected to grow this holiday season. That part of the story with Bloomberg's Denise Pellegrini.
U.S. consumers spent a record $6.1 billion online Thanksgiving Day, according to Adobe, 8.8% more than a year ago. And that bodes well for the coming Cyber Monday as shoppers snatch up cyber deals on electronics, clothes, and appliances. It's important to remember, though, the majority of U.S. shopping still takes place in stores. Black Friday Live blog on the Bloomberg Terminal notes one Best Buy in the New York City area was nearly empty early this morning, even though appliances were listed as up to 50% off. Denise Pellegrini, Bloomberg Radio.
Best Buy CEO Corey Barry talked about the possible price impacts from steep tariffs proposed by President-elect Donald Trump, saying that while they do carry largely domestic-made goods at Best Buy, the supply chain for those goods is complex and global and would ultimately result in higher costs across the board for the products.
For sure, if we see sweeping tariffs, consumers are going to see higher prices on these products. So our teams will work really hard. They're great at navigating this. We've done it before, but there will be impacts to the consumer.
Best Buy CEO Corey Barry on ABC's Good Morning America. Mexico's President Claudia Sheinbaum is convinced that her country can reach a deal with the U.S. to avoid the 25% tariff threatened by President-elect Trump. Sheinbaum says there is a plan in place if Trump does impose tariffs, but she says now, after speaking with Donald Trump by phone, she's convinced they won't have to implement that plan. Instead, she says Mexico and the U.S. can work together on migration and drug trafficking concerns. A fragile ceasefire between Israel and Hezbollah is holding, even as both sides accuse the other of breaking the terms of the truce. The Lebanese army claims Israel breached the accord through aerial violations and targeting of Lebanese territories. Israel says it's maintaining a presence in southern Lebanon to ensure safety. The ceasefire deal requires Israel to leave occupied areas within 60 days and the Lebanese army to deploy to an area south of the Litani River to ensure an end to Hezbollah's military presence. J.P. Morgan Chase CEO Jamie Dimon has reportedly been communicating with Donald Trump in recent months through secret back channels, helping the president-elect hammer out a policy agenda before and since his White House victory. The New York Post quotes four unnamed sources saying Dimon acted as a sounding board for Trump's economic plan. And while sources say the men have been speaking regularly for months, Trump posted on Truth Social earlier this month that Dimon would not be invited to be part of the cabinet. And Dimon shot back, quote, "I haven't had a boss in 25 years and I'm not about ready to start." We do check the markets for you here at Bloomberg. The S&P 500 is up 0.6%, NASDAQ up 0.8%, the Dow up 0.6%, the Russell 2000 index up 0.4%, the 10-year Treasury yield at 4.2%, and the 2-year yield at 4.17%. The risk of defense cuts led by Elon Musk and the coming administration has BAE stocks moving lower. BAE Systems shares fell the most in 2 years as Bank of America analysts downgraded the British defense equipment manufacturer because of the risk of any potential U.S. government spending cuts overseen by Musk. The stock fell as much as 5.9% as Bank of America cut BAE's rating to underperform from neutral. The U.S. is BAE's largest market, accounting for about 46% of group revenue. BAE shares are now about 5.3% lower. A freshly reconstructed Notre Dame Cathedral was revealed to the public for the first time today since that devastating fire back in 2019 forced it to close. A visit to the site by French President Emmanuel Macron was broadcast live to TV, showing the inside of the cathedral with good-as-new stonework. The cathedral will be open to the public December 8th, although the outside of the monument is still getting some work done. That's news when you want it with Bloomberg News Now. I'm Amy Morris, and this
Lauren, it's a really interesting point. I was taking a look at some consumer credit card data this morning. On an inflation-adjusted basis, total household debt is $1 trillion below the record that was back in 2008, and credit card debt for the average household is 13% off of its peak. Help me contextualize that. Is that a good sign that there's consumer strength out there, or is it a sign that there's so much consumer weakness people have pulled back on spending and therefore aren't putting as much on credit?
So we do see credit card debt rising right now. Now, a lot of our credit card debt metrics, they're very skewed today by the impact of that stimulus. We found that with the stimulus checks going out, so many consumers paid down that high APR credit card debt first. So to see those numbers rising today typically would be concerning. In this environment, though, I'm not so worried about it. I see a lot of these debt metrics about as good as it gets during a normal non-pandemic stimulus influence cycle. We're nowhere near those concerning, frothy, leveraged, over-leveraged levels that we saw pre-2008. So I do see more consumers putting it on plastic again, but there's also this disparity in what do I actually need versus want. We do see some trade down effects. So the types of items that they're buying, maybe it's the store brand, not the brand name anymore, or the, if you think of the good, better, best model, I just need the good one this time. So we do see a little bit of that skew right across our distribution.
I'm also curious, Lauren, it occurs to me as we're talking about credit, how buy now, pay later is factoring into this. I mean, just from some on-the-ground reporting that one of our folks has done, she's hearing from consumers that they're using buy now, pay later more and more. We're seeing that in the numbers as well. That doesn't go into the credit numbers, though, right? So I just wonder how that is playing into consumer spending and what that tells us about the economic picture, if anything.
That's correct. We are waiting to see, once we get this sector a little bit more developed, it is such a nascent opportunity that many folks are seizing on it, but we just don't have great data on that subject quite yet. We do see a bit of a skew here. Again, it's the ability to go out and purchase these things. Certainly our consumer willingness is the factor that's a little bit harder to gauge, but putting more money, more availability in these consumer pockets, that probably will have some supportive effect in the near term.
It's really interesting, Lauren. I went to a conference a few weeks ago, and the head of a firm was there talking about BNPL, and he was saying that there's a misconception that it's lower-income consumers utilizing that function, but it's actually middle to higher-income consumers who are the majority of those users. What do you take from what that tells us about the state of the consumer and just kind of the vibe that the consumer has about our economy?
The vibe to the consumer, anytime I look at sentiment data, I'm a little bit thrown off because it just doesn't match the economic fundamental drivers that we see happening in their spending. So I think consumers really are shocked by the amount of inflation that they've seen, and that inflation, even though the rates are coming down today, inflation is cumulative. So they see the prices on store shelves. They know what that was just 3 or 4 years ago. And so I think even those middle to upper income consumers, they're making different choices in the sense that they just have that shock, right? That price shock. So maybe that's something like buy now, pay later that breaks it down into 4 smaller numbers, right? Mental accounting is a very powerful thing that we're willing to make different purchases, even if we would have bought that item overall. Again, it's going to be the smart companies who are really leveraging the consumer psyche in this case.
Yep, slowing inflation still equals inflation. Lauren, thank you so much for joining us this morning. Really appreciate it.
Thank you.
It's now time for some of today's trending tickers. You can scan that QR code on your screen to track the worst and best performing stocks of the session on Yahoo Finance's trending tickers page. We're going to take a look now at shares of MicroStrategy. Bitcoin rebounding this morning, though MicroStrategy moving to the downside, down just about 0.6%. The cryptocurrency Bitcoin still making its way towards that $100,000 level. It is up about 2% today. I know you've been covering this very closely, Julie, but it's been interesting with MicroStrategy in particular, those 5 convertible bond issuance so far. What can go wrong, right?
Oh, well, I mean, nothing. If you're buying the stock, I guess, you think nothing can go wrong. If you're a micro sailor, you think nothing can go wrong. Right. But something else interesting that folks are watching for is that the NASDAQ does an annual reconstitution of its NASDAQ 100 index. And there's some speculation about what might happen with MicroStrategy. I believe after the close today is as of when they determine it, and then the change would happen in December. So that's just something to potentially to watch for MicroStrategy and the other companies that might end up in that index. But in the meantime, MicroStrategy is trading at a very steep premium to Bitcoin. If you look at its Bitcoin holdings, the cost at which it acquired them, and sort of do the calculations, which, full disclosure, I have not done, but analysts have done it. But Mark Palmer telling our Brian Sozzi in his opening bid podcast that the way MicroStrategy wants you to think about it is with a yield metric rather than that premium metric, and by that metric, it looks more reasonably valued. All of that is way above my head, but the point is that Michael Saylor is using MicroStrategy as a leverage machine to buy Bitcoin. And there's a lot of people who are fans of that strategy.
Especially if they are big Bitcoin bulls. Maybe they see it as a way to kind of diversify their Bitcoin holdings.
Maybe so.
Maybe so.
Yes. For a while there, it was, there weren't as many ways to invest in Bitcoin as there are now with the advent of ETFs. Now there are quite a few alternatives.
That's a great point too, because it'll be interesting to see how that impacts some of these stocks.
Yes, it will. All right. Well, turning to Meta now, that company reportedly planning to build a new fiber optic subsea cable for internet traffic. It's a project that could total more than $10 billion of investment. This, according to a report from TechCrunch. Now, this is very preliminary. It seems like they're not building this thing yet. It's in the very early stages, is what it sounds like. But this would be a more dedicated way for Meta to get its signal data around the globe.
And we're seeing all of the hyperscalers, as you know, Julie, investing in this kind of technology. Meta has been the second biggest investor so far, with Google being the #1 investor in these subsea cables. And again, as you kind of mentioned, Julie, these subsea cables, they carry 99% of the world's intercontinental data traffic. So as we see AI requiring more of that data traffic, you're going to see more news about these subsea cables moving forward here. One of the big questions, though, is the vulnerability of any targeted disruptions through geopolitical tensions, and that's a big concern. Meta spokespeople have spoken about this previously, the idea that there could be some issues with China moving forward. Could that play into any security concerns with their subsea cable? So that'll be something that they'll be investing into moving forward here.
Yeah.
All right, well, for the first time ever, a country has passed a ban on the use of social media apps. Australian lawmakers have approved a landmark law to prevent children 16 and under from using social media platforms. These include Facebook, Instagram, TikTok, Snapchat, X, and Reddit. Interestingly, does not include YouTube. Julie, this is so interesting to watch. There's a potential $50 million fine for some of these tech companies, and it puts the onus on the company itself to control use versus parents.
Yes, the parents aren't getting fined, the kids aren't getting fined, it would be the companies that are getting fined. But there are a lot of questions about how they're going to determine this, right? I think they're going to try to get the companies to report some of this, but it's difficult to understand. And I mean, there have been lawmakers in Australia who've been critical of this because they say most teenagers can pretty easily find their way around it.
Yeah, I mean, take a look at China, which has been the predominant blocker of these platforms previously. People are using VPNs to get around it, so there is kind of that roadmap there. And I think regulators in Australia, too, who were kind of against this decision, talked about fast-tracking it and not having those details ironed out as a potential issue here. And so it'll be interesting to see.
Yeah, well, I mean, there are states here in the U.S. like Florida that have talked about doing things like this, too. So obviously it's a trend.
Right.
Whether it's here to stay, we'll find out.
Absolutely, we certainly will. Well, we're going to move forward here with Thanksgiving in the rearview mirror. We've now unofficially begun what's expected to be one of the busiest shopping seasons of all time. Yahoo Finance caught up with some folks out on the streets of New York City as well as Los Angeles to see how they may be planning to spend for the holidays. Take a listen.
The holiday retail rush is officially on, with shoppers expected to shell out $980 billion this season.
Picked up a couple of extra shifts, hoping to set aside around $500 for gifts for families, friends. I'm budgeting around $400 for this holiday season.
Probably about maybe $3 to $5 grand. The National Retail Federation expects a 3.5% bump in spending online and in store. That growth would mark the slowest rate in 6 years, despite improved consumer sentiment tied to cooling inflation and lower interest rates.
Like everything's too expensive. Prices are crazy.
Definitely leaning more into the promotions. If it doesn't have a promotion, I'm really not interested.
With Black Friday falling later this year, retailers began slashing prices early, rolling out promotions in October to make up for a shorter holiday season. Adobe expects stores to discount up to 30% off listed prices.
I'm just trying to budget and save money. Hours are getting cut a little bit, so trying to save and budget. So I'm just trying to use my Afterpay. I'll just pay it weekly or just pay it monthly.
Some of the steepest discounts are online, with mobile phone orders expected to account for more than half of all online buying. Electronics, apparel, and home goods among the top-selling categories. But retailers warn about potential downsides, with consumers still reeling from higher prices. Target forecasts flat sales during the holiday quarter, while Walmart warned about stretched pocketbooks despite raising its sales and profit outlooks.
We see that they're buying less general merchandise. As they're spending more on food, there's less money to go to some of those more discretionary type items.
I'm cautious about the future, but I think right now we're celebrating what we have now.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh.
Theme of the morning, holiday markets mania. It may be a day of shopping, but here at Yahoo Finance, we are drilling into some of the biggest investing themes of the week. First up, it's Black Friday in America. Who is winning the battle for shopper dollars, and have investors positioned correctly? Then the tech sell-off spreads. Why is this happening, and should investors be worried? And the long arm of tariffs. Are investors still not getting the risk to their portfolios from the Trump, aka the tariff man, Julie?
Yes, so as he has dubbed himself. Yes. Also, speaking of Trump, we're beginning to see a bit of an
tax next year. Nobody thought about this in the days after the election, but they're thinking about it now. Wiped off next year, and the market has to adjust to this stuff.
Yeah, so let's talk about the dollar, for example, here. So it's poised for its biggest weekly loss in 3 months. It had been up for about 8 straight weeks, and ahead of this, and the positioning had gotten stretched by some measures here on the U.S. dollar, as many of the incoming administration's policies were seen as maybe buoying the case for a stronger dollar, but we've seen that little bit of a pause or pullback. I talked to Jens Nordvig of Exante Data about the dollar, and this is what he told us.
We have a situation where we've had pretty dramatic ups and downs in the dollar since September. We were weakening dramatically into the Fed rate cut in September, right? And now we've had a strengthening period, maybe up until today. So what's happening with the U.S. yield curve, what's happening with the dollar really sets the tone for international risk assets.
International risk assets, and also, of course, there are implications, again, as we bring it back to this whole U.S. multinational conversation. If the dollar is strengthening, that also has implications for companies that do business around the world.
Yeah, it also could be, maybe you're getting some signs here, Julie, that, as these tariffs and these various policies come into effect, maybe there's a sharp growth slowdown in the first half of next year.
Maybe, although, this administration is seen as broadly pro-growth, but the question is all in the timing, right? When do those growth policies sort of take effect and hit the market and hit the economy? Supply chains for U.S. businesses are facing potential shifts due to President-elect Donald Trump's tariff promise. The potential changes to supply chains presenting direct short and long-term negative effects for businesses and consumers. The Atlas Network CEO Kareem Kafuri joins us now to discuss. Kareem, so there has been a lot of talk about supply chains that shifted after 2016 and the first round of tariffs here. What are the impacts do you think are going to happen as a result of this round?
Well, it's definitely going to be a challenge for small to mid-sized businesses for sure, where they're going to have more direct costs. And as a result of this, they're going to have to make a decision on whether they're going to be able to absorb these costs or if they're going to pass them off to their customers themselves, therefore the American consumer. And what will that basically mean for all of our buying habits and the availability of products and the skyrocketing cost in particular industries and categories?
Since you mentioned small and mid-sized businesses, I want to ask you about some of the promotions that we're already seeing from those small businesses about pre-tariff sales, essentially, you know, doorbuster sale, get it now before Trump's tariffs set in. Help our consumer listeners out who are listening to this. Should they believe the impact that tariffs are going to have at all of these smaller businesses that are promoting these pre-tariff sales?
Yes, absolutely. I mean, if we look at what countries are involved, you know, Mexico, Canada, China, and the industries that are involved, such as electronics and automotive, even the cost of food products. I mean, Thanksgiving and Black Friday may be 25% higher next year, potentially. You know, the idea here that we're trying to get ahead of it and trying to buy before these tariffs come into play is valid, absolutely valid, and something that you know, buyers and shoppers should be aware of. I think the most important thing as we go forward here is to have a proper equilibrium between some of these economic sanctions to curb behavior between nations and the impacts to the American consumer. And this will have to be something that is actively monitored by the administration to ensure that we don't move towards areas of potential inflation and then worst case scenario, potential recession.
Kareem, it's pretty confusing right now, I think, when it comes to the tariffs, because we're hearing the rhetoric that's already coming out even before Trump takes office. But there are a lot of certainly investors who we speak to who assume that this is a negotiating tactic and the tariffs won't actually ever be implemented. If you're an investor, that's one thing when you're trying to make decisions. If you're a business who's trying to make decisions ahead of these maybe tariffs, like, how do you factor in that uncertainty piece of it?
The reality is, and I write a lot about this in my book, Supply Chain Ups and Downs, is that there are controllable factors in business when it comes to the supply chain, and there are uncontrollable factors. And businesses of all sizes need to always be prepared to navigate challenges that may come about through political changes, environmental changes, force majeure, such as, you know, during the pandemic and other areas. And you need to be nimble and adaptable. So I think that any small to mid-sized business these days in America needs to be looking ahead to see what areas these tariffs will impact for them, if they will be able to absorb the difference if there is a cost differential. If they can't, can they pass it off to their customers? And that will depend industry by industry. Can they do some reclassification potentially of some of their goods that may impact the tariffs or duties levied? And then finally, you know, if they can't, can they look for alternative supply chains in different geographic areas which may or may not be impacted? So, you know, I do believe that businesses need to consistently be looking for creative manners on how they're going to navigate in the global landscape if such tariffs can impact them, and how it won't have a detrimental impact to their consumer base.
And based on your expertise on supply chains in particular, is there a risk of companies kind of rushing to invest in these new supply chains, and then in 4 years these tariffs potentially get rolled back and they've spent all of this money on supply chain challenges that potentially don't exist after a Trump 2.0 regime comes to an end?
You know, I think that that's going to have to be sort of a business to business and industry to industry conversation, really. And, you know, oftentimes some businesses may say, you know, in order to completely recreate my supply chain may take 1 or 2 years. Right. And in the in-between, maybe we could weather this storm. We could take on these additional costs, reduce some of our profits, maybe reinvest in other ways in our businesses to still be, you know, in a good and, you know, manner to basically still facilitate work in the American economy. But it is going to be business by business, industry by industry to determine if they need to pivot away or create entirely new supply chains. In some cases, it may be a quick decision, and in others, it may take a couple of years to redevelop supply chains. So it's really something that even can't be discussed.
Kareem, what do you expect the pass-through rate to be, given what we've perhaps seen in the past in situations like this?
Well, I believe that, again, it's really going to be industry by industry. And I think that's the most important thing. I believe that some areas there will be able to be an amount of absorption. I believe in other areas there may even be able to be a negotiation that takes place between both the suppliers and their businesses as well to share some of these tariffs so that you don't have as much of a pass through to the American consumer. And then in other areas, I do believe that we're just so dependent upon particular supply chains, and it's going to be very complicated to redevelop or recreate them. So in that way, pass through and increased costs are going to be an inevitability.
All right, Kareem, we got to leave it there. Thank you so much for joining us this morning. We really appreciate it.
Thank you so much. Appreciate it.
It's time now for our call of the day. Bank of America upgrading European stocks to overweight, saying there are undervalued opportunities. It's interesting, Julie, taking a look at this note. They say they believe European equities' recent 15% underperformance since Q2 and their pricing for weak domestic growth present a buying opportunity. This comes obviously as stock valuations in the U.S. rising faster than usual. So as a comparison point, maybe that weakness we've seen in Europe is actually a sign of something to come down the line here.
Yeah, I mean, it's definitely a contrarian call because most people we talk to still like the U.S. best in terms of international, markets around the globe. I'm looking at the Euro Stoxx 50, which is one of the benchmarks for Europe. It's up about 6.25% this year. Compare that with the S&P 500, which is up 27%. And you see, that's obviously a reflection of the people weren't that excited about what was happening in Europe. We are expecting, or economists are expecting, I should say, more cutting to come, more monetary stimulus to come in Europe than in the U.S. So, that also might be a reason that the Bank of America folks are looking for it, that there is more room to go upwards from here after what has been that underperformance. It's interesting, Michael Hartnett, also Bank of America, on a separate team, in a separate note, said there is a quote-unquote extreme disconnect between investor bullishness on U.S. assets and what we're seeing from the rest of the world, where people are not as excited.
Well, it is the U.S. exceptionalism story that we talk about so often here. One of the stats I was looking at this morning is that 50% of the global market is in U.S. stocks right now. So how do you kind of bet against that? It's to your point, a very contrarian call. But then at the same time, you have global CPI numbers coming off their lows. Maybe it's a sign of getting in to a growth story before we see that rotation. You can make a lot of money that way, but again, when you have the valuations that we do in the States, it's hard to bet against the 2-year rally that we've had here.
Yeah. All right. Well, we'll see what happens.
We will. As always, we will.
On the latest episode of the Yahoo Finance podcast, Financial Freestyle with Ross Mack, Web3 Media President Chris Lyons sits down with Mack to break down the differences between iterations of the web. You can scan the QR code below to check out all the latest content and stay up to date with episodes. Be sure to tune into Financial Freestyle every Monday at noon.
Where you could actually read things on the internet, right? And then the next component was the write era. So you have read and write. That's what we call like the Web 2. And then you saw companies like Facebook and Pinterest and Airbnb and like so many different businesses in the 2010 era. The big difference between what was going on in quote unquote Web 2 versus where we are now with what blockchain technologies can really encourage is this ownership layer.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Now let's make some money and get a lot smarter.
I've done Yahoo Finance forever. This is a spectacular spot.
Welcome to Stocks in Translation. I'm your host, Jared Blickery.
Hello, world. I'm Ross Mack.
Hi, I'm Bob Powell, and welcome to Decoding Retirement.
Welcome to Living Not So Fabulously.
Hey, it's me, Tiffany the Budgetista, your favorite financial educator. Welcome to Capsule Gains. We're on for a few days and everything has changed.
From Wall Street to Main Street to the C-suite, we are your daily lifeline because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
Oh, yeah.
I mean, we're already seeing long-term rates higher than a lot of people think they would otherwise be without all this debt. What's going to happen there?
Short-term rates will come down, so this will help the dealer community. This will help new issues in terms of the bond market. But long-term rates for mortgages, I think, will be higher. That's what I told my colleagues yesterday in the mortgage world. They think that we're going to get back down to 4s and 5s for residential mortgages. I think that's not going to happen. And remember, we're not going to see any kind of refinance activity in the U.S. unless you get 30-year mortgage rates below 5. I don't think that's going to happen anytime soon. So what I foresee happening is that the Treasury is going to essentially force the Fed to help them finance the deficit. And, all of that will be on the short side. It'll be inside of 1 year. You saw what happened with the 20-year auction the other day. It went very badly. And then I think long-term rates could be higher. We could have 8% mortgage rates in this country by the middle of next year.
Right?
I've seen over time the discounting go and grow. And I call it now Black November because all the pre-Black holiday sales, and it's easy to see. You go online, you see everything. And I think when I started my career at Bloomingdale's, I learned competitively about high and low. I used to call it high-low. And then it was just department stores, wasn't really. Certain department stores would they'd take an excess markup higher than the normal so that when it was put on sale, their normal margin was then, on sale because they wanted to show the sale price. Now, this weekend, I went through a lot of companies. It's curious as much as anything.
I love you're still doing this work.
Yeah,
you're still in the trenches.
I know, so I look at companies now more and more. I see deals online. Now that was so not allowed with me in the old companies because you're telling a loyal customer comes into the store and they get one thing. You go online, there's 40% off the entire company. So the only thing I'm saying, let them do that, but give it to all customers. I learned that lesson as a kid in the business. One store has this, the other store has that at a lower price. That's the end of the store's trust for me. It wasn't even, I had to have experience. I'm a customer. So I see that going on a lot. And then once in a while, if I make a mistake and watch network television, everything they have in the 3 networks, no offense to you, 50% off everything. Oh, on sale for you, on sale everything's on sale. And people are really smart. We do not do on sale. We do it in July, and we do it at the end of the summer and the end after Christmas.
needs. The next step of Medicare enrollment, when you determine that you do need to get enrolled in Medicare, the next step of Medicare enrollment is choosing the type of Medicare coverage that's best for you. We call it the path because very often it's a one-way path. There is no turning around and going back. Then once you choose timing and path, then you go ahead and choose specific plans, United Healthcare, Humana, Aetna. Then you get enrolled in Medicare through Social Security. Then you get enrolled in any additional coverages. And congratulations, you'll be enrolled, but not
there's
done.
a big but.
Yeah, but
know
not
that
done.
but, yeah.
Because the sixth step of Medicare enrollment is reviewing your coverage each and every year for the rest of your life. No autopilot.
In, but BlackRock's now involved. Mark was telling me how endowments are now starting to dabble in crypto. These are folks with large, really billions of dollars to get put to work, and they're likely, or they're looking to put it to work finally in crypto. Like everything we've talked about the past few years seems to now be coming to fruition.
Well, and when you talk about the actual policies as well, so there's the institutional involvement, which has been the case all this year, and then there is now the Trump trade aspect of this. So who's going to be the next head of the Securities and Exchange Commission? We still don't know that, but it's expected it'll be somebody who is friendlier to the industry, who will remove some of the roadblocks that we have seen. Will we get the strategic Bitcoin reserve, whether it just holds Bitcoin or buys Bitcoin?
That's just wild.
That's one of the questions.
A strategic reserve of
It is
Bitcoin?
wild. But you know what my biggest question is as we move forward here and you've got that institutionalization of Bitcoin, will we stop or hear less of people talking about Bitcoin like it is a religion rather than an asset class? I mean, you and I have talked to a lot of people who see it as
like changing the world order.
Changing the world. It is a faith-based asset and has been for many years. It has value because people believe it has value, and now more people believe it has value, or at least are willing to bet on its going higher. So will we see less of that sort of like language around
Which
it?
I always found fascinating because as Mark brought up to me, or reminded me, I should say, there's a lot of bad actors in this space. I think a lot of folks think just because, FTX and all these folks got wiped out, that they're gone. No, crypto's still being used for nefarious activities around the world in many cases.
Yes, but the Bitcoin bulls will tell you, so is the dollar.
So
People use dollars
that's what
for
Mark,
bad stuff.
that's what Mark told me.
That's what they are.
It's the dollar, man. Come on.
As to what will happen and when. Some are being more proactive, whether it's in the short term of stockpiling inventory, making sure that they get a lot of inventory in-house so they can have it for sales. And then also reevaluating their supply chain strategy and making sure that they have the right suppliers in place, diversifying their sourcing strategy. Because we do believe that those retailers that have the ability to pivot and to move quickly could see an advantage in locking in the right suppliers and even get favorable pricing.
I'm also curious on the pricing front when it comes to the price that the consumer is paying. How much discounting we're going to see this year compared with prior years?
So I think that we're seeing a significant amount of discounting because the retailers are looking to get the consumers in the door because this is it. This is the time where they need the consumers to buy. So there is a good amount of promotional activity that we're seeing now, both online and in stores.
So for consumers, Natalie, what's the best day to shop? Like, when are they actually going to get the best deals on sales? It's, again, particularly given that it's been such a long Black Friday season.
That's a really great question, and I'm sure everybody wants to know the answer to that. So, the consumers want those promotional activity to be high and soon, and have it as many promotions as they can get. And it's up to the retailer to really identify at what point do they need to start marking things down further. As we just heard, Black Friday, today, tomorrow, this whole weekend is going to be a significant shopping experience for the consumer. But let's not also forget about Cyber Monday. Although consumers are spending a lot of time online and making their purchases through e-commerce, there is still an expectation that Cyber Monday is going to have additional discounts.
All right, something for consumers to look forward to. If you're not getting out there today, you've always got Monday. Natalie, thank you so much. Really appreciate you making time for us this morning.
Thank you.
While we're wrapping up today's market domination, don't go anywhere. We've got you covered with all the action following that closing bell. So stay tuned for Market Domination Overtime.
Oh yeah, you're not gonna forget to cancel those free trials this time, right?
Another trade we're tracking is Bitcoin, of course, flows into Bitcoin ETFs in particular, which have been big. We're seeing Bitcoin push back higher here, getting closer to 100,000 once again. But if you look at the inflows that we have seen into Bitcoin funds, ETFs, we have seen a huge amount, including inflows into IBIT, which is the largest ETF. That one from BlackRock. Fidelity has an offering too. $6.2 billion is how much they've taken in so far in November. That's according to Bloomberg. $6 billion was February. That's the previous peak that you see. As again, this is part of the Trump trade that we have seen. And this part, I don't know if it's unwound really. I mean, it got within a whisper of 100,000 and then pulled back a little bit, but now it's going higher again.
I was hoping it was going to break through that level on Thanksgiving. I was watching. I'm like, come on, just get through there. Give me something to talk about on Friday morning. But it's not a call on any particular asset. I just feel as though this is just getting started. I had a really cool conversation with Mark Palmer on the Opening Bid podcast, and he was really laying out the case for even more moves higher in Bitcoin. I think his calls like 225 by 2026, 225,000. But it's just the institutional involvement. We've heard about this for the past 4 or 5 years. Institutions getting in. But BlackRock's now involved. Mark was telling me how endowments are now starting to dabble in crypto. These are folks with large, really billions of dollars to get put to work, and they're looking to put it to work finally in crypto. Like everything we've talked about the past few years seems to now be coming to fruition.
Well, and when you talk about the actual policies as well, so there's the institutional involvement, which has been the case all this year, and then there is now the Trump trade aspect of this. So who's going to be the next head of the Securities and Exchange Commission? We still don't know that, but it's expected it'll be somebody who is friendlier to the industry, who will remove some of the roadblocks that we have seen. Will we get the strategic Bitcoin reserve, whether it just holds Bitcoin or buys Bitcoin?
That's just wild.
That's one of the questions.
A strategic reserve of Bitcoin? It is wild.
But you know what my biggest question is as we move forward here, and you've got that institutionalization of Bitcoin, will we stop or hear less of people talking about Bitcoin like it is a religion rather than an asset class? I mean, you and I have talked to a lot of people who see it as
like changing the world order.
Changing the world. It is a faith-based asset and has been for many years. It has value because people believe it has value, and now more people believe it has value, or at least are willing to bet on its going higher. So will we see less of that sort of like language around
Which
it.
I always found fascinating because, as Mark brought up to me, or reminded me, I should say, there's a lot of bad actors in this space. I think a lot of folks think just because, FTX and all these folks got wiped out, that they're gone. No, crypto's still being used for nefarious activities around the world in many cases.
Yes, but the Bitcoin bulls will tell you, so is the dollar.
So
People use
that's
dollars
what
for
Mark,
bad
Mark
stuff.
that's what Mark told me.
That's what they are.
It's the dollar, man. Come on.
My colleagues yesterday in the mortgage world, they think that we're going to get back down to 4s and 5s for residential mortgages. I think that's not going to happen. And remember, we're not going to see any kind of refinance activity in the U.S. unless you get 30-year mortgage rates below 5. I don't think that's going to happen anytime soon. So what I foresee happening is that the Treasury is going to essentially force the Fed to help them finance the deficit. And, all of that will be on the short side. It'll be inside of 1 year. You saw what happened with the 20-year auction the other day. It went very badly. And then I think long-term rates could be higher. We could have 8% mortgage rates in this country by the middle of next year.
And even Bitcoin, we can take a look at Bitcoin and we can see up 20% over this last month. Well, let's take a look at some of the sector action, and I'm going to switch this to a month to date, all 20 days here. Consumer discretionary, one of the best performing sectors of the year now. That is up 13%. That is in the leadership position. Financials also doing very well, 10.5%. Energy, industrials, communication services, all of those are outperforming, and they round out the top row there. Even healthcare, which had a lot of problems in some various names this month, that was up, finishing up 0.3%. Guys?
Jared Blickby, thank you so much. Always appreciate you. For more on the latest market moves and what to expect moving forward here, let's welcome in Ross Mayfield, Baird investment strategist. Ross, great to have you on here. I mean, reading all the notes, the price target increases for next year, the idea that gains beget more gains, 2 years of gains, why not get a third? What could potentially stop the market's party here?
Well, there's always no shortage of headwinds, right? The question is just whether they outweigh the things the market has going for it. Rising earnings, Fed cutting interest rates, the election in the rear view. I mean, if you look at what has stopped the upward ascent of this market since it began in October of 2022, you would say higher treasury yields. And that's a pretty simple one. But if inflation expectations and amid all of the stimulus and potential tariff policies get out of hand and you see that 10-year push up towards 4.5%, 5%, that has been something that has stopped this market in its tracks a little bit over the last couple of years. Obviously, the trade and tariff stuff we'll be watching closely, but really hard to say at this point that that's going to be a major impediment to the market when, in 2018 and 2019, the market was volatile, but fine.
Ross, I know you watch seasonality pretty closely as well. I mean, December tends to be a strong month, but given that we've already seen so much strength, did that sort of pull forward some of those returns?
Potentially, but it's not something we would want to fade here. There's a very strong seasonal impulse in November, December, and really in January, if you go back through history too. So I do think as we're talking about potential headwinds, as we're looking at sentiment getting pretty hot, I think that there's, it all comes together for the potential for, a 5-10% correction at some point in the first half of next year. But I do think you need to get through this, seasonally strong period where trading is a little bit light and look towards the first quarter of 2025 for when you really start to get a little bit of volatility that could creep back into markets.
And there was this idea, Ross, that there was going to be all of this pent-up spending, particularly from corporations following the outcome of the election, that there'd be more hiring and just more corporate spending in general. What are you going to look at to suss out whether or not that bears fruit in the new year?
Yeah, I think you said it. So spending, CapEx, very important, but the main thing is hiring, right? This economy of ours is a consumer economy. People spend if they have a job and if they're confident they could get a better job if they wanted one. We saw that non-farm payrolls report last month look very, very weak. So the hiring was down. Now, it seems like the market is looking past it, kind of calling it a one-off on hurricane or strike data. But if we see a second straight month of weak job gains, and if we don't see those gains pick up into the first quarter of 2025, that's when I will start to get a little bit worried, because at the end of the day, the job market really drives this economy. And so we want to see companies starting to reinvest in their labor force as we move into this new administration.
Ross, something else that's been a big trend this year has been the momentum trade, right? That's been the factor, to use some financial industry jargon. That's been the factor that's worked the best. Things that have gone up have tended to stay up. But the sort of ultimate momentum trade had historically been tech, and that has started to lose a little bit of momentum. So where does that go from here?
So we think about tech in a couple of ways. I mean, on one hand, for long-term investors, you want to have exposure, in my opinion. You want to be levered to secular growth stories like AI, like all of these productivity enhancements in a lower growth world, right? Even if the economy is doing better than most expected, we're still in kind of a lower growth world where these tech companies can bring their own growth to the table, and AI is something you want to have in your portfolio. You know, in the near term, however, you're right. And it's not just recently. Tech has been kind of relative laggard for the past 3-6 months, while cyclicals like financials and industrials have kind of taken the baton. Honestly, looking into 2025, I see no reason why those types of trade won't continue to be leadership, discretionary financials, industrials. And tech, I think, is not going to, be last of the pack, but might struggle a little bit. I do think there's a broader question of all this investment into AI and data centers and tech infrastructure. When does it start to pay off? I think investors are going to want to see answers to that question in 2025.
They certainly do, but in the meantime, they're continuing to invest in these kind of side AI plays. I'm taking a look at Vistra, the best performer in the S&P year to date, up a whopping 316%. How are you thinking about these kind of second tier, third tier AI plays heading into the new year, and where are you seeing opportunity?
Yeah, AI, that is a really great question. So this first leg of AI is going to be all about, it's building out the infrastructure, right? The second leg, I think, and our partners at Strategas have talked about this a lot, is the need for the power to fuel the infrastructure, right? So you look at utilities, which have had a really nice year, and you would think, well, this market is risk on. Why are utilities doing so well? Well, if they're a power play based on all of the need from this technology infrastructure, then it makes some sense. I think the next leg, and maybe still a little bit away, is what are the killer applications that get layered on top of all of this infrastructure, right? 4G and mobile internet, it really laid the way for things like Uber and Snapchat and things that you could do on your phone. So I don't even think we've begun to scratch the surface of the consumer-facing AI apps that we could see. And then on the flip side, the promise of AI to us as a productivity enhancer is making the least efficient companies a little bit more efficient, letting that compound over decades, and it turns into huge gains. So I want to see your consumer staples, your utility companies, your healthcare companies get a little bit more efficient with their processes, see that flow into margins, and then ultimately, flow up to investors over the long term. So that's what we're keeping an eye on. It might not be a 2025 story, but the back half of this decade, I think, is going to be all about what can we use this infrastructure to build.
Ross, finally, I want to circle back around to Washington and what we're waiting for in this Trump administration. There's a lot of questions about tariffs and what's going to happen. What we do know is that Scott Bessent is the Treasury pick, right? We do know that Kevin Hassett's going to be head of the NEC, and the market seems to like all of that. How much confidence do you have in these picks in terms of how they're going to sort of steer the economic ship?
Yeah, the market is going to root on some of its own, right? So getting some kind of Wall Street veterans in key positions there to maybe tamp down the worst impulses of anti-growth tariffs, I think is obviously a win. You know, Besant, the bond market seemed to like it. A focus on getting the deficit down is another thing that, you know, at times the bond market vigilantes have cared about, maybe not as much lately. So obviously on the margins, I think it's a positive to have folks who've been on Wall Street, know what the market likes, know what drives economic growth. You know, they're still going to lean on tariffs as a negotiating tool. And ultimately, I would expect to see plenty of tariffs get levied. But if they can tamp down on some of the worst impulses there, the most, I guess, anti-economic growth impulses, I think it's a win. You know, all across Trump's first term, you know, there were tariffs and trade wars and threats lobbied back and forth, and it was a lot of volatility. But ultimately, again, the market finished higher and inflation never really spiked across 2018 and 2019. So we would hope to see something similar again. And I think having Besant and others in the room will be helpful there.
Ross Mayfield, thanks so much for making time for us. Appreciate it.
Thank you.
Well, President-elect Donald Trump's economic team is taking shape. Yahoo Finance's Rochelle Akufo broke down those key picks for us.
President-elect Donald Trump's economic nominees are in stark contrast to his other more controversial loyalist cabinet picks. Trump is prioritizing experience to deliver on his campaign promises to rebuild trust in the economy. So here's a look at his top 5 key picks so far. Now, the most significant cabinet role to U.S. fiscal and economic decisions is Treasury Secretary. When hedge fund manager Scott Bessent, founder of Key Square Group, was nominated, Wall Street cheered the news as a safe pair of hands. But take note of his ambitious 3-3-3 targets. 3% GDP growth, cut the budget deficit to 3% of GDP in 4 years, that's halving current deficit levels, and a 3 million barrel increase in daily oil production. Now, economist and former Trump administration official Kevin Hassett is prioritizing inflation, tariffs, and extending Trump's tax cuts as he analyzes economic data trends. Now, he'd work closely with Bessent. Now, Hassett is also considered a more conventional choice with a more moderate approach to tariffs. And Trump's pick for Commerce Secretary is Howard Lutnick, the outspoken CEO of global financial services firm Cantor Fitzgerald. Now, if confirmed, he'd be overseeing U.S. trade relations, business policies, and economic growth. Now, he supports targeted tariffs on goods that the U.S. makes versus across-the-board tariffs. Now, he's noted that tit-for-tat trade retaliation would bring tariffs down globally. And another former Trump administration official, international trade attorney Jameson Greer, is tapped for the U.S. trade representative position. In a statement, Trump said in his first term, Greer was instrumental in imposing tariffs on China and the USMCA trade agreement between the U.S., Mexico, and Canada. Now, Trump announced plans to impose 25% tariffs on all goods from Canada and Mexico, likely a negotiating tactic, as imposing blanket tariffs would actually violate the current USMCA. Also returning to the role held under Trump, if confirmed, Russell Vought as Director of the Office of Management and Budget. Now, Vought would prepare the federal budget and oversee spending. He co-authored Project 2025, the Heritage Foundation's controversial blueprint for Trump's second term. Now, this includes significant spending cuts, restructuring entitlement programs, including Medicaid, and limiting the role of government with more privatization and deregulation. But it is unclear how much influence outside Advisory Department DOGE, headed of course by Elon Musk and Vivek Ramaswamy, will have on these spending policies versus the influence of cabinet officials.
AI is rapidly becoming a lifeline for businesses around the world, helping them to streamline operations, serve their customers better. Many retailers in particular are deploying generative AI this holiday shopping season in an effort to connect shoppers with the items they want and expedite the buying process. Joining us now, Eric Fish, HSBC Head of Retail and Apparel, U.S. Commercial Banking. We were just talking during the break about how my husband asked ChatGPT what we should buy for our son. And it was a very long list. I don't really know what to do. How are retailers using this? How are they investing in it right now?
There are definitely some real practical applications, some defensive. So there's been a lot of talk around theft. And so AI triggering cameras and finding suspicious activity, identifying things to look at. If you think about a regular retail store, 6, 8 to 20 cameras. No one can monitor all those at the same time. So that's one element. On the other side, on the sales side, there's AI that's tracking and heat mapping the way people flow through a store, where you actually glance, where you're reaching out for product. And so helping retailers better position product. And then certainly on the conversational customer service side. So when you chat that chatbot is getting better and better at sounding like a real person.
What is the ROI of all that AI looking like at this point?
Yeah, so for the retail side, different than the broader industry, not a lot of retailers are spending a lot building out their own models. These are mainly plug and play solutions. So the ROI is pretty quick because it's just paying for a service, integrating it into your formula, and just continuing.
It's so the part about theft is really interesting to me. So basically, the AI can analyze in real time while it's happening. Oh, this person is doing something that would be suspicious given all the data we fed into the model. What is happening with shrink, as the industry calls it generally? We have seen an improvement, right? Is that part of the reason why?
Yeah, it would be great if that was already making a massive impact. I'm not sure. I think it's
early days.
It's early days for that element, but a whole host of reasons. There's been a lot more press around it, and therefore a lot more scrutiny. I think stores are repositioning product, moving more valuable product to the back. Unfortunately, some of the product is harder to reach, even for shoppers who are genuine. And then enforcement has certainly increased. But shrink, as a historical average, only ticked up very slightly, even when we all saw all those stories. It was really some of those extreme cases of entire stores being looted that we all sort of touched on, but generally not as big an issue as I think we all sort of saw.
So then what is the big risk for retailers? When you're talking with clients, what is the big worry that's making their eyebrows come together right now?
Yeah, heading into the election, it was just uncertainty and anxiety among shoppers. Will they be out there? Will they be shopping? And so all the clients I spoke to leading into holiday, they really took a very defensive approach. Didn't overbuy inventory, didn't overspend on social media advertising, didn't overspend on new stores and hiring. And so they came in a position where maybe they couldn't necessarily hit a home run, but at the same time wouldn't get hurt. So I think the discounts we're seeing, the markdowns, are strategic. They were all built into the model. And I know I personally have already seen some sold out items on websites. I think those are going to stay sold out because people kept their inventory shallow. They don't want to get stuck with too much product, and they're just going to take it as a win if they could get through the season in a healthy way.
Really interesting that you mentioned that, because we've been talking with a lot of folks today about tariffs and the effect that they might have on the industry, the anticipation that retailers have of the tariffs. So lean inventories, the current state. Are we starting to see any buildup at all in anticipation that items will be tariffed?
Yeah, I think there's an element to that. I think that the important thing to remember is that there's such a broad range of categories, some of which are in countries that have not been mentioned for tariffs necessarily. And there's other products that are very difficult to move just because of the infrastructure, the amount of the elaborate process of manufacturing them. And so I do think we're going to start seeing that build up. I heard Natalie mention it earlier in the hour. I think people are going to stick to core products, right? It's styles and items that sell year in, year out. It's not going to suddenly be a risk on.
Okay, so it's just fewer risks being taken on newer stuff.
Exactly.
On the part of the retailers. Interesting.
Yeah.
What risk does that present to not kind of go in on newer products that could be enticing for shoppers?
Yeah, I think you put it perfectly, that the risk is if you sort of deviate towards your classic styles, you risk not expanding your universe of shoppers, right? You're sort of selling the same item day in and day out. You need to refresh the assortment. And so to the extent you're not taking risk on style, you're not necessarily attracting that new shopper.
Just sort of big picture here. You talk to retailers all day long. That's what you do. How are they feeling this holiday shopping season compared to recent years past?
Yeah, cautiously optimistic, I'd say. People really, post-election, the numbers were up. November has been a strong month for nearly everyone. I think going into December, they expect that to hold. Next year, again, I think cautiously optimistic is the right phrase. It's approaching it for steady growth, single-digit growth, good margins, right? If you're not If you're not discounting, then your margins are strong and being very disciplined around expenses. A lot of companies sort of taking an approach to marketing that's let's do A/B testing, let's remove this item, and if that doesn't make an impact, we could save that money.
That's also important in the context of this idea of increased corporate spending. That's going to be a rally for the S&P. It sounds like you're not seeing that in retail, at least.
Not in this sector.
All right. Eric, thank you so much. Thanks for coming in studio with us on the holiday week. We really appreciate it. Thank you. Well, it's been a very busy week here at Yahoo Finance, so let's take a look back at what you might have missed over the past few days here.
President-elect Trump announcing billionaire hedge fund manager Scott Bessent for Treasury Secretary.
This is the exact pick the market wanted.
He's mainstream. He knows a lot about the world of finance.
Among the kind of spectrum of Trump cabinet appointees, this one is likely to kind of get through quickly.
Planning to build a new fiber optic subsea cable for internet traffic. It's a project that could total more than $10 billion of investment. This, according to a report. This is very preliminary. It seems like they're not building this thing yet. It's in the very early stages, is what it sounds like. But this would be a more dedicated way for Meta to get its signal data around the globe.
And we're seeing all of the hyperscalers, as you know, Julie, investing in this kind of technology. Meta has been the second biggest investor so far, with Google being the #1 investor in these subsea cables. And again, as you kind of mentioned, Julie, these subsea cables, they carry 99% of the world's intercontinental data traffic. So as we see AI requiring more of that data traffic, you're going to see more news about these subsea cables moving forward here. One of the big questions, though, is the vulnerability of any targeted disruptions through geopolitical tensions, and that's a big concern. Meta spokespeople have spoken about this previously, the idea that there could be some issues with China moving forward. Could that play into any?
Film studios and theater chains set to win big this Thanksgiving weekend as Disney's animated film Moana 2 set to deliver the biggest Thanksgiving opening for a new film ever. And that isn't all. Moana, along with Wicked and Gladiator 2, are expected to join forces to create the biggest Thanksgiving weekend box office ever altogether. Glicked. Do you know that's what they're calling it?
No.
Glicked. It's like Barbenheimer when people again, these two movies seem to be maybe a better pairing than
How did Gladiator come out over 20 years ago? How is that possible? It just feels like yesterday I was watching Russell Crowe slay.
Did you actually?
I saw parts of it. I saw bits and pieces of it. I'm not going to sit here and blow smoke and then I saw this whole movie. No, I didn't see it. But I am going to see on December 20th Mufasa, The Lion King, really channeling my nostalgia and love for The Lion King. I love The Lion King. I'm a huge Lion King guy.
Oh, I didn't know you were a huge
love Lion King.
Wow.
When I saw this trailer hit, I'm like, I need to see Mufasa.
I really liked Moana 1, but I don't know that I'm going to see Moana 2 in the theater. I might wait for it to hit my Disney Plus. But if you look at the numbers that Moana has, of course I have Disney Plus. If you look at, he makes a note of it on his little paper. If you look at the numbers that Moana 2 has done, $13.8 million in preview screenings on Tuesday. So that is the highest ever on that day for Disney and really has dwarfed some of the other ones. Inside Out 2 was $13 million. So it's expected to do big numbers here. It looks like $135 to $145 million over the first 5 days.
Yeah, and this is all very important because if you go to our platform, type in DIS, of course, that is the Disney ticker price. Disney shares are up 22% in the past month. And we've been talking to Disney CFO Hugh Johnson the past couple quarters, and he's saying, guys, look at this content slate we have coming. You take that content slate, bolt it on the fact that this company has cut billions in dollars of costs out of its model, and suddenly you have a lot more profitable Disney. And it really might be a much more profitable Disney next year or in 2025 than maybe Wall Street expects.
Gladiator, by the way, Paramount.
Paramount.
But people won't indefinitely have an opportunity to invest in that one, right? Because it's going private. So that, but if you're tracking who's making what.
Do you have a big holiday? Any weekend holiday plans? Black Friday? Pulling the trigger or anything?
I don't know yet.
Yeah.
I'm not sure. We were talking about doing some volunteering this weekend.
Oh, that's very nice.
Yeah.
Have confirmed the idea that generative AI can, in fact, like you see on your screen, get the diagnoses. It's been pretty focused on things that you can train, a large language model to find, like images. So imaging has been a key area for that, where they have seen pretty high accuracy. In fact, they've even seen where, in some cases, it performs better than a doctor just solely on the visual parts of it. This study also, a small one, I have to point out, did also find that ChatGPT got to the answer a lot faster. When doctors were using ChatGPT versus just by themselves, the difference was pretty small, but still did give the doctors using the technology a leg up. So I think this just opens the door to a little bit more focus on how you can include it, because I think the healthcare industry, broadly speaking, doesn't want it to go away, doesn't want humans to go away in this process, right? We want a doctor to still be participating in this process. There are also other areas where we're starting to see a little bit more use of it. AI scribes, for example. So when you're in a doctor's visit, that doctor is going to have an AI taking notes, finding the keywords to kind of summarize what drugs you're supposed to be on, what the diagnosis was, et cetera. And then also looking at chat boxes. So if you're on a telehealth platform and the like,